Hello CA Inter students, this is your Mr. GST CA Vishnu Vardhan. So yes, this video is all about your CA Inter GST Marathon part 2 video, and I repeat, please make sure you are watching this introduction video before you are going into the marathon. So in this marathon part 2 video, already part 1 video we have uploaded in our YouTube channel, you can just refer that. And in part 1 video, actually we have covered these 5 chapters: supply, charge, place of supply, value of supply, and input tax credit, the big chapters actually. So those chapters. In this part 2, what we are going to cover is, in this part 2 video we are covering time of supply, tax invoice, credit note, debit note, payment of tax, TDS, TCS, returns, e-way accounts and records. These are the chapters which we are going to cover. That means in this marathon we are just left out with the 2 chapters, that is one registration, the other is exemptions. That I'll release as a part 3 video. So this part 2 video contains these particular chapters, right? And while discussing this revision lectures in this particular marathon, I have used a color book called Oh My GST. As I already told you in the part 1 video, a top-notch quality material which I can assure the best in the industry. You can just verify. So that material we have used, and the material whatever I have used during this lecture, the soft copy is available in the Telegram channel. You can just join in that. Telegram channel link is given below in the description. You can join in that and download the soft copies. And coming to this Oh My GST book, see, already I have, as a Diwali offer, I have given 100 books free of cost to 100 students. First 100 students who have registered, that 100 books have been over. Now right now I am just giving 50% discount. The MRP of the book is 350 rupees and you will get it at 50% discount, that is 175 rupees if you are willing to buy it. Otherwise no problem, whatever the material you are having, you can just continue. It is not compulsory that you have to buy a book and just watch the marathon, nothing like that. It is your convenience. Next, so only thing, join the Telegram channel so that you get the updates, all that stuff, and the material soft copy also will be available for you, right? Next, part 3 and amendment separate video. As I already told you, registration and exemptions I will release as a part 3 separate video, and amendments I will release a separate video, which is actually this marathon, whatever the lectures I am just covering in this marathon, all are amended, up to date, applicable for your Jan25 exam. But still students will generally have a feeling that we want to know separately all amendments what are applicable. For that I will actually release a separate amendments video. So part 3 and amendments separate video are going to be pending from my side, that I will be releasing in short time, right? So that is what all about you are going to see in this marathon part 2. So please make sure you are watching this and using the resources effectively, right? So waiting forward to see your feedback. Thank you so much. Hello students, we are going to discuss time of supply topic in this video. So quickly we are going to revise this time of supply, very small chapter. We can just quickly revise it. First of all, before going into this chapter, let us understand what is time of supply. Please understand, time of supply is a scenario which will tell us at what point of time our liability to pay tax shall arise. That means, see, for example, you are going to buy a Royal Enfield bike. You are making a payment. Let us assume you are making an advance payment of 5,000 on 2nd June. Okay, advance you have paid, and they have delivered the bike to you on 7th July. Imagine by any chance they gave the invoice of that on 2nd August. 2nd August. And the showroom owner is your friend. You gave a check, the payment balance amount, and you gave a check after 2 months date, and he's depositing that, and the check got cleared on 2nd September. That means what I am trying to tell is, when you are going through any transaction, some cases, yes, the payment, the delivery of the goods or the services, whatever has been provided, and the invoice, everything happens on the same day. If everything is happening on the same day, there is no problem. We can understand, okay, today itself we became liable to pay GST. But the problem is when advance is paid in a different month, and when delivery is happening in a different month, invoice is falling in a different month, and payment is happening in a different month. Like this, various things regarding that particular transaction, particular supply are happening in different months. In which month your liability to pay tax shall arise, that is what we are going to discuss here. And please understand, time of supply, while calculating, you will get one time, that is you will get one day as an answer. That means one date, 2nd June, 2nd September, 2nd August, like this you will get one date as time of supply. That means time of supply you have to calculate, it is falling in which month. Normally we'll be discharging the GST liability on monthly basis. For all the time of supplies, let us say for example, falling in the month of June. So I have made so many supplies. Sir, various supplies, the time of supply is falling in the month of June. So in such cases, what I will do for all these transactions where time of supply is falling in the month of June, the liability is in the month of June. Liability has arose in the month of June. This liability I am going to discharge on or before July 20th, while filing GSTR 3B. So time of supply is different and the due date to deposit tax is different. So time of supply is different, due date for depositing the tax is different. In exam, if they are asking you the question, you should be really careful with what is the question. Are they asking you time of supply or are they asking you due date to deposit tax? This you should be careful in the question. Okay, time of supply means just calculate time of supply and relax. If they ask you due date for depositing the tax, then in which month the time of supply is falling, that next month, the 20th mostly will be the answer, or whether that fellow is falling under QRMP scheme, etc., etc. You please just take care of it. Okay, so that is what the introduction regarding time of supply. Now, time of supply in GST is dealt in three sections: section 12, section 13, section 14. Okay, so section 12 is talking about time of supply for goods, section 13 is talking about time of supply for services, section 14 is talking about time of supply in certain special cases that you will be seeing in your CA final, now not required. Okay, so in the syllabus we are going to see only two sections, that is 12 and 13. But to understand section 12 and 13, we need to understand one more section called section 31. Section 31 is nothing but what is the time limit to raise invoice. Only when you understand section 31, then we can have a better clarity about section 12 and section 13. So our discussion is going to be in such a way. First I will discuss section 31, time limit to raise invoice, half part which is related to goods, and then I will discuss section 31 balance half part related to services. So first what I will do, section 31, time limit to raise invoice for goods I will discuss. Then I will discuss section 12, okay, time of supply for goods. Then I will discuss section 31, time limit to raise invoice for services. And then I will discuss section 13, time of supply for services. So that is what we are going to do in this video. This is how we are going to take forward our discussion. Now, section 31, time limit to raise invoice for goods. First, let us focus on what is the time limit to raise invoice for goods, sir. So, time limit to raise invoice for goods is simple. We have different scenarios here. See, what are the different scenarios now? First of all, whenever, just like in place of supply concept we have seen, sir, if there is movement of goods involved or not. Movement of goods is involved now, on or before removal of the goods, you have to raise the invoice. For example, I am selling goods to you and I am in Chennai, you are in Hyderabad. 2nd June I am selling the goods to you, and from my godown 4th June I am removing the goods. When should I raise the invoice? On or before 4th June I should have raised the invoice. So when movement of goods is involved, on or before the removal of goods, you should raise the invoice. Okay, that is what the concept. Sir, no sir, any other case, any other case, on or before making the goods available to the customer or delivery to the customer. That means, for example, you are coming to my shop, you are buying some goods, I'm handing over the goods to you. Here goods are not moving from one location to another location. You come to shop, buy the goods and go. When I am making the goods available to you, okay, on or before that I should raise the invoice. Or let us assume there are huge plant and machinery I have to deliver to you. Now I will not manufacture or assemble the entire plant and machinery in my location and transport it to you. It is like unnecessary headache or hectic process. So what I will do, I will transport all the spare parts and I will assemble those spare parts at your location and make the plant and machinery available to you. Now if you understand here properly, even though I am selling plant and machinery, movement of plant and machinery is not involved here. I am just moving you the spare parts. I am not moving the plant and machinery. That means movement of plant and machinery is there? No. So I can take it here under any other case. In such case, so when I made that plant and machinery available to you or delivered to you, that will be the time limit to raise invoice. Within that time limit you should raise the invoice. First of all, understand or have a clarity that, see, we are discussing time limit to raise invoice, we are not discussing what is time of supply. Okay, time limit to raise invoice is different, time of supply is different. Students generally will make a mistake in the exam with respect to misunderstanding section 31 and section 12, section 31 and section 13. So time limit for raising the invoice is different, time of supply is different, and the due date for depositing tax is altogether different. Okay, so please have a clarity on these things. Okay, now coming to the point. Next, in case of continuous supply of goods, where we have a contract where we are going to supply the goods on a recurring basis, it is not a one-time event. In such cases, what we should do now, see, either our contract will be in such a way where I will issue periodical statement, supplier will issue periodical statements, looking after that recipient will make payment, or recipient knows how much goods he has taken, all that stuff, straight away he will make periodical payments, as the case may be. So I repeat, whether supplier gives periodical statement checking that recipient is making payment, or recipient is straight away making the payments because he knows the data, anything, whatever the case may be. On or before that, in the contract, any one thing will be there, any one thing we would have agreed, either periodical statements or periodical payments, any one thing will be there in the contract. Based on that, let us proceed. So on or before I issue the periodical statement to you, I will raise the invoice. Or our situation is a periodical payment situation where you keep on making the payments as per the contract. So on or before receipt of periodical payments, here please understand, this is not whichever is earlier, it is as the case may be, as the case may be, as the case may be, it is not whichever is earlier, please don't misunderstand. So I repeat, simple, what is the time limit to raise invoice? Generally movement is involved on or before the moment of removal of goods. Movement is not involved on or before making the goods available to the customer or delivery. Or sir, if it is continuous supply of goods, on or before issue of periodical statement, or on or before receipt of periodical payments, as the case may be. Okay, so that is for continuous supply of goods. Sir, what if the goods sent on sale on approval basis? Please understand, when goods are sent on sale on approval basis, I have to raise an invoice, but the opposite person has to accept it, then only it will become supply. So you cannot keep on waiting for the opposite person for the acceptance. The GST law says, I'll give you 6 months time. Within 6 months you take back the goods or you get the approval and raise the invoice. So even when you're going for audits, when you see this word goods sent for sale on approval basis, please be careful. See, when you see something like goods sent for sale on approval basis, invoice should be raised for that after the expiry of 6 months. That means within 6 months, either you raise the invoice, treat it as supply, close the transaction, or you take back the goods to you. Nothing has happened. Now, after the expiry of 6 months, you should have raised the invoice and you should have paid GST on that. Okay, are you able to understand? So now, what is the time limit to raise invoice, sir? I have sent the goods to you for sale on approval basis today. After 1 week, you have accepted. I should raise the invoice. So, before or at the time of supply. So, when you have accepted, the supply has happened. Or 6 months from the date of removal, whichever is earlier. Guys, here whichever is earlier point will come. In the previous point, it is as the case may be, not whichever is earlier. Don't get confused or don't do the mistake there. Okay, so goods sent for sale on approval basis. What is the time limit to raise invoice? Goods sent for sale on approval basis, the time limit to raise invoice is on or before the supply has been made. That means when that fellow accepts it, or within 6 months from the date of removal, whichever is earlier. This is the time limit to raise invoice for supply of goods sent for sale on approval basis. Okay, right. So these are the 4 scenarios. So total 4 situations are there here, for which we have seen the time limit to raise invoice. Okay, now I have given the meaning of continuous supply of goods just for your general knowledge. Go through that. Now, as I already told you in our discussion, first time limit to raise invoice for goods has been discussed. Now we have to discuss section 12, time of supply for goods. So time of supply for goods, as I told you, 12 deals with time of supply of goods, 13 deals with time of supply of services. We are going to see only these 2 sections in your CA Inter. Section 14 we will see in CA final. I will explain you with a very good love story actually in CA final. So now let us ignore it. Next, Now, section 12, time of supply in respect of goods. See, section 12 we'll see 6 subsections actually, but subsection 1 says go and refer the following subsections for deciding the time of supply. So subsection 1 is irrelevant. Subsection 2 says go and refer subsection 3, 4, 5, 6. If these are not applicable, come to me. Okay, that means subsection 2 is the general rule. Subsection 2 is the general rule. Section 12 subsection 2 is the general rule. So what is the time of supply as per general rule? First let us understand that. Time of supply as per general rule is simple. You know what is the due date to raise invoice as per section 31? Check that. What is the actual date of invoice? When you have actually raised the invoice, check that. Whichever is earlier, that is time of supply. I repeat, time of supply for goods is different, time of supply for services is different. So time of supply for goods is the general rule 12 subsection 2 says due date of invoice under section 31. You have just now learnt under section 31. See that date and see the actual date. The due date is 4th June, sir, for example. Actual date is 2nd June. Whichever is earlier, 2nd June, that itself will be time of supply. Due date is 4th June, sir, but actually I have raised invoice on 10th June, sir. What should I do, sir? Which is earlier? 4th June is earlier, that will be the time of supply. So here there is a small example, you can just go through that. I repeat, time of supply for goods, general rule 12 subsection 2, actual date of invoice or due date of invoice, whichever is earlier. So I call generally in the class, this is A doi, this is D doi, whichever is earlier. A doi or D doi, whichever is earlier. Actual date of invoice or due date of invoice, whichever is earlier. Simple one. Now, here one interesting thing is the time of supply for advances received. Generally, if you remember, time of supply for advances received in case of services, they are immediately taxable. Date of payment itself will be the time of supply. But for goods, there is no such thing. For time of supply for advances, see, understand that advances received are not immediately taxable in case of goods. Okay, if you see here, for advances received also you should follow the general rule above, but this relaxation, see, I repeat, even if you receive advances, the time of supply will be this A doi or D doi, whichever is earlier. But if that is for services, advances received immediately taxable, time of supply will be date of payment. For goods covered under RCM, again this relaxation is not applicable, you should see 12 subsection 3. For suppliers opting composition scheme, this is not this relaxation is not applicable. So straight away the moment advances received are taxable. And see, in composition scheme, what we do, the moment you do the turnover on quarterly basis, whatever the turnover is done, for that you will discharge the tax liability. You will not see this particular 12 subsection 2 advances received, all that stuff, that relaxation you will not see. Next, specified actionable claims. If you remember, this is very important point for you, the important point for you, because it is amendment. Specified actionable claims, if you remember, what are specified actionable claims? Specified actionable claims are 6 items, sir. Lottery, betting, gambling, casinos, online money gaming, and horse racing. For these 6 specified actionable claims, you know, actionable claims means goods. For these, advances received immediately taxable. So immediately taxable. You will not see A doi or D doi, whichever is earlier, all that stuff. So straight away advances received immediately taxable. Okay, so that is what the concept. And I have given example here. You can just pause the video and go through the example, solve it without checking the answer, and then proceed. Simple concept, nothing to worry. Okay, that is what 12 subsection 2. So time of supply 12 subsection 2. If you want, you can pause the video and just go through the example. Now coming back to the summary, section 12, time of supply for goods. Subsection 2 deals with general rule. Subsection 3 deals with when the tax is payable by the recipient. That means 12 subsection 3 is time of supply for RCM goods. Time of supply for RCM goods. In your syllabus, what are the services covered under RCM are there, but service goods covered under RCM is there in CA final, recently added. But Time of supply for RCM goods is there in your syllabus. So don't feel like we don't have RCM goods in our syllabus. This is not part of our syllabus. No, it is not like that. Now, sir, what is the time of supply for goods covered under RCM? And you need not worry, sir, I don't know the goods which are covered under RCM. If the question in the exam is related to RCM goods, they will clearly say goods are covered under RCM. So you should only recollect the provision here. So what is the provision? The provision is, see, 12 subsection 3. I will tell you 3 points. Here there are 4 points, but I will tell you 3 points. 12 subsection 3. So 3 points, just remember. Number 1. On what date you have received the goods? Number 2. 31st day from the actual date of invoice. Date of issuance of invoice means here we are talking about actual date of invoice, not due date of invoice. Okay, 31st day from actual date of invoice. Now, number 3, these two put together I can call as date of payment. Date of payment meaning is date of recording the entry in the recipient's books of accounts regarding the payment, or date of payment debiting from the recipient's bank account, whichever is earlier. In some questions they will give you 4 dates. They will give you date of receipt of goods, they will give you actual date of invoice, they will give you date of entry of the payment in the recipient's books of accounts, and also they will give you date of debit in the recipient's books of accounts. If they give you all the 4 dates, then based on that compare all the 4, whichever is earlier. Sometimes in the question they will simply say date of payment. Okay, so date of payment meaning, see, date of payment meaning is like we should see from 2 different angles. From recipient angle, date of payment meaning is date of entry in recipient's books of accounts or date of debit in recipient bank account, whichever is earlier. If you are seeing 13 subsection 2, if you remember, 13 subsection 2 is time of supply general rule for services. If you are seeing from supplier point of view, date of payment meaning is date of entry in the supplier's books of accounts regarding the payment received, or date of credit in the supplier's bank account, whichever is earlier. Here, because we are seeing 12 subsection 3 where recipient is liable to pay GST, we are talking this from recipient's point of view. When you talk from recipient's point of view, date of payment meaning is date of entry in the recipient's books of accounts regarding the payment given, or date of debit from the recipient's bank account, whichever is earlier. As I repeat, sometimes in the question they'll give you all these 4 dates, sometimes they'll give you only straight away one date called date of payment. You should compare it with date of receipt of goods and 31st day from actual date of invoice. Okay, so that is 12 subsection 3 for you. As I already told you, the relief of paying GST, not paying GST, sorry, at the time of receipt of advance is available only for the supply of goods which are covered under forward charge. But in case of reverse charge, GST is payable at the time of payment of advance because of these provisions. Okay, so that is what the point. Suppose by any chance, using these provisions, 12 subsection 3 provisions, you are not able to identify the time of supply or determine the time of supply, then by any chance, because not like non-availability of the data, any of these things given here, because any reasons, then time of supply will be date of entry in the books of accounts of the recipient regarding the receipt of goods. So I repeat, when you cannot identify time of supply based on 12 subsection 3 provisions, the law says time of supply will be, see, at least in recipient's books of accounts, when they have entered the receipt of goods, when they have received the goods, like that, when they have entered that date, you take it as time of supply. Okay, so that is what 12 subsection 3, and we have an example here. You can just pause the video and check that. Okay, so that is what all about 12 subsection 3. 12 subsection 2, time of supply for goods general rule. 12 subsection 3, time of supply for services RCM covered under, sorry, goods time of supply for goods covered under RCM. Am I clear? Now let us move on to 12 subsection 4. 12 subsection 4 is regarding vouchers. With respect to vouchers, what is the time of supply? So normally when you are taking the vouchers, see, you have various vouchers in hand. So the next one is regarding 12 subsection 4 regarding the vouchers, time of supply for vouchers. Please understand, see, I'll just tell you the concept with an example. See, I am going to a pizza shop, having a large pizza. The pizza shop name is Desi Pizza, let us assume that way. And I am buying a voucher for 20 rupees. What is the advantage of that voucher? Na? I buy the voucher for 20 rupees. I can redeem this voucher till 5th Jan for purchasing a small pizza. Small pizza, let us assume it is rupees 150. I can buy that small pizza worth 150 rupees just by giving this voucher 20 rupees. So today I'm going and buying 20 rupees voucher. For that, what is the time of supply when I buy the voucher? For that, the time of supply is what we should see is within that voucher, what is the supply hidden? Is it identifiable by you? That means, for example, if I see this voucher, what is that supply identifiable in this voucher? So I can buy a pizza in. Can I go and purchase a mobile phone using this voucher? Can I go and purchase the shoes using this voucher? No, I can only buy pizza using this voucher. That means, please understand, when the supply in the voucher is identifiable, then the time of supply will be the date of issuance of voucher. That using that voucher, I can purchase a laptop, I can purchase shoe, I can purchase a bag, or I can do some shopping, whatever it is. That means the supply hidden in that voucher is not identifiable, sir. It is not identifiable. Then what should I do, sir? Simple. Time of supply will be the date of redemption of that voucher. Simple. When you buy vouchers, what is the time of supply? With that voucher, you're going to buy goods. Whether the goods are identifiable? Yes, sir. Then the date of issue of the voucher itself will be the time of supply. The supply hidden in that voucher is not identifiable, then the date of redemption will be the time of supply. Supply identifiable, date of issue. Supply not identifiable, date of redemption. That is what 12 subsection 4. So vouchers meaning I have given here nothing but, see, vouchers are nothing but just like instead of giving money, you will be giving the voucher. So it will be taken as consideration by some suppliers. Okay, right? Maybe fully or partly. Next, sir, by any reason, 12 subsection 5 is like residual case. By any reason, subsection 2, 3, 4 not applicable, sir, to me. Then how do I determine time of supply? For me, time of supply is only not there, sir. If time of supply is not there, I need not pay GST. No, sir, I can enjoy. Don't worry, for you 12 subsection 5 is the residual case. So for any case where 12 subsection 2, 3, 4 are not applicable, you can happily go through subsection 5, residual case. In that they will ask you, are you required to file periodical return or not? Yes, sir, I am required to file periodical return. Then due date of the return itself will be the time of supply. No, sir, I am completely unregistered fellow, sir, or I have registered earlier, now I got registration cancelled, and now you have identified some mistakes I have done when I had the registration, so you are giving a notice to me. What is the time of supply for that? Sir, time of supply will be the date of payment of tax itself will be taken as time of supply. That means we are just trying to tell here, you cannot escape paying GST by saying that, sir, I don't have time of supply for my scenario. You have time of supply, residual case. See whether subsection 2, 3 or 4 are not applicable now. See subsection 5, are you still required to file any periodical return? Then due date of that periodical return itself will be time of supply. No, sir, I am not liable to file any periodical return now. Then the date of payment of tax itself I will treat as time of supply. So you have time of supply, please make sure you are paying GST. That is what the concept. One small example here, you can just go through that. And so that is what 12 subsection 5. And last subsection in this section 12 is 12 subsection 6. In this 12 subsection 6, what we are going to see is, sir, what if I get any late fee, penalty or interest? For that, what is the time of supply? First of all, before going into the concept, in exemptions chapter also I would have discussed. See, understand, when you are talking about interest, when you are talking about late fees, or when you are talking about penalty, why this interest is paid, why this late fees is paid, why this penalty is paid? Please understand, these things are paid because you have delayed in paying the consideration, delayed in payment of consideration. This is not I have given loan to you and you are paying interest. I gave goods to you, I gave services to you, you have to pay me consideration, but that consideration you are not paying on time. For that purpose you are paying me interest, for that purpose you are paying me late fees, for that purpose you are paying me penalty, by whatever name called. Somebody may call it interest, somebody may call it late fees, somebody may call it penalty, I don't care, but the reason for that payment is you have paid the consideration late, there is a delay in payment of consideration. Then this interest or late fee, penalty, whatever you have received, for that, what is the time of supply? Simple, the time of supply is when I have received, that date itself will be time of supply. So time of supply will be the date of receipt of payment, the date of receipt of payment. Am I clear with this? So I have given an example also here. So the same example here I have given notes also. See, for example, I'm selling goods on credit to Mr. Virat worth 10 lakhs, GST 1,20,000. Now I told Virat, credit period is 30 days and you have to make the payment within 30 days. If you pay after 30 days, you should pay me a penalty or interest, whatever you call, 5,000. Now Virat is not making the payment within 30 days. Then he should pay that 5,000 late fees or penalty, whatever you call. Yes, Virat is paying that. When Virat is paying, when he has paid, that will be the time of supply. But the interesting point here is, if Virat has not paid that interest, Virat is saying, Vishnu sir, for the goods you have sold to me, paying consideration itself is utter waste. So forget about penalty. I will not pay penalty. Like that, Virat is not making the payment. Then there is no time of supply only. That means there is no need to pay GST only. That means, understand, this is the only case in GST where if you don't receive payment from the customer, you need not pay GST. I repeat, this is the only case in GST where you need not pay GST if you don't receive money from your customer. Okay, so that is only when you are charging interest, late fee or penalty for delay in payment of consideration. Only if the customer pays to you, then only time of supply will come into picture, then only GST liability will come into picture. Otherwise, no time of supply, hence no GST liability, right? That is what 12 subsection 6 all about, right? Now with this we are done with one particular section, that is section 31 read along with section 12. I mean one particular concept, section 12, time of supply for goods. For that we have read section 31, time limit to raise invoice for goods. Now we are going to see the next concept, that is section 31, time limit to raise invoice for services, and after that, of course, section 13, time of supply for services. Okay, so without wasting time, let us move on to that section 31, the balance portion. Section 31 I have already discussed half portion related to goods. Now I am going to discuss the balance half portion related to services. So section 31 with respect to time limit to raise invoice for services is nothing but, see, understand, the general rule for services to raise the invoice is 30 days. Okay, so either on or before the provision of service you can raise, or even after the completion of service within 30 days you can raise the invoice. So simple, the general rule to raise invoice for services is on or before the completion of the service you can do that, or even after the service is provided or completed, whatever you call it, within 30 days also you can do that. But if you are a banking company or an insurance company or a financial institution including NBFC, for you this 30 days will be treated as 45 days. That means for you still extra time is being given. Okay, simple general rule, the time limit to raise invoice for services is on or before the provision of service, or you can even raise the invoice after the provision of service within 30 days. But if you are a insurance company, banking company, financial institution or NBFC, for you 45 days is given. So enjoy. Sir, what if I have provided services, I have started providing, and it has ceased before completion, sir? Let us assume I came to do internal audit of your company and the assignment is for 15 days. After 10 days, I fell sick and I stopped the internal audit and I left. That means the service has ceased, stopped before its completion. At the time, sorry, at the time of cessation itself, you can raise the invoice if any service ceases before its completion. That is another scenario. And we have seen continuous supply of goods for goods, right? Here same continuous supply we are seeing for services also. This is something important. There were scenarios where this was tested separately also in the exam. So when continuous supply of service is provided, so any service which is taking 3 months or more to complete it, or some notified services will be treated as continuous supply of service. In such cases, what is the time of supply? You might have seen, see, what we have, for best example, contract costing. Sir, when we are constructing a building, so it is a continuous supply of service and the payments are made in installments, all that stuff. In such case, sir, what is the time of supply? The time of supply is, sorry, the time limit to raise invoice. The time limit to raise invoice. Invoice need not be raised once entire construction is over, because I cannot wait for the GST payment till the entire construction is over. I can make you liable to pay GST if you have raised the invoice. So I'm asking you to raise the invoice not after the entire service is completed. I'm asking you to raise the invoice if at all in the contract, there is any due date for payment mentioned. For example, you are constructing my house. The contract is for 1 crore. The time is 10 months. And I told you every month, next month, 10th, I'll give you 10 lakhs amount. 10 months like this. 10 lakhs, 10 lakhs, 10 lakhs, 1 crore will be paid. You should finish the construction. So the point is, in this contract, if you look at this contract, in this contract, the due date for payment is ascertainable. When due date for payment is ascertainable, obviously whatever is the due date on or before that, you should raise the invoice. Okay, so when due date is ascertainable on or before due date of payment, invoice should be raised. I repeat, we are discussing time limit to raise invoice, not time of supply. Okay, if due date is not ascertainable on or before the actual payment, you should raise the invoice. I repeat, in the contract, if the due date is ascertainable on or before the due date, you should raise the invoice. Due date is not ascertainable on or before actually receiving the payment, you should raise the invoice. No, sir, our contract is not like this. Our contract is in such a way, only when I complete a particular task, you will release the payment. That we call as an event. Just like you see in contract costing, no, sir, once 25% of the work is certified, 20% payment will be released, 50% of the work is certified, 40% payment will be released, like that. For example, you are constructing my house. As I told you, once you finish the foundation, I'll give you 10 lakhs. Once you finish the slab first floor, I'll give you 5 lakhs. Like this, I have fixed the payment. The payment is linked to completion of an event. In such cases, what I am trying to do is, I am asking you to raise the invoice that on or before completion of such event. Okay, 1 second. So when the payment is linked to completion of an event on or before date of completion of such milestone or event, I should raise the invoice. There is a mistake here. This point should not come. In case due date is repeated, that's all. So leave it. So that is what continuous supply of service. Continuous supply of service, I repeat, when due date is ascertainable from the contract, on or before the due date, you should raise the invoice. Due date is not ascertainable on or before actual date of payment, you should raise the invoice. If the payment is linked to completion of an event, on or before completion of such event, you should raise the invoice. Okay, so for this, a past exam question I have given here. You can just pause the video and just go through this. Okay, the answer is also given here. Just pause the video. This was November 2018 5-mark question, and recently nowadays I have seen one MCQ question also on this, or 3-mark question also. So this particular concept alone has a good worth of being tested separately, so please be careful. Just pause the video, go through the question. Simple one, very simple one. Just now you heard the concept, so finish the question. Answer is also below. You can just do that, so that let us not waste time in this video. Okay, right, so let us proceed next. And there is one more interesting point here. That is, sir, in case of an insurance company, banking company, financial institutions, including NBFCs, telecom companies, or any other notified persons, if they are making taxable supplies between the distinct persons under Section 25, that means HDFC Bank Chennai branch is providing some services to HDFC Mumbai. In such cases, in such scenarios, what is the time limit to raise invoice? The time limit to raise invoice is nothing but the invoice may be issued on or before the time of recording such supply in the supplier's books of accounts, or at least before the expiry of the quarter during which the supply was made, as the case may be. That means, who has supplied? HDFC Chennai supplied services to HDFC Mumbai. HDFC Chennai, the supplier, at what time they are recording that entry in their books, at that time they can raise the invoice. Or this transaction happened in which quarter, before the end of that quarter also they can raise the invoice. No need to worry about that. Okay, this is not whichever is earlier here. Please be careful. Okay, that is what the concept. Next, continuous supply of services. Continuous supply of services, the meaning has been given. I already told you, something which is exceeding 3 months or some notified services by the government. So with this we are done with section 31, time limit to raise invoice for both goods as well as services. Now here we are done with section 31. Now let us move on to section 13. So what is section 13 here? As we have already know, section 13 is the time limit, time of supply for services. Same like section 12, section 13 is also having, 6 subsections. Subsection 1 says go through following subsections. So subsection 1 we will not study. Subsection 2 says if 3, 4, 5, 6 not applicable, come to me. That means subsection 2 is nothing but, as you know, general rule. Okay. Subsection 3, just like in 12, here this is time of supply for RCM cases, RCM services. Okay. Subsection 4, 5, 6 are ditto same like what we have discussed for 12 subsection 4, 5, 6. So these three are similar to 12 subsection 4, 5 and 6. Vouchers, residual case and interest late fee penalty, same there except for the words goods and services. Remaining everything, the provisions, everything, all these things are same to same. Okay, that is what the concept. Next, let us discuss section 13 subsection 2 and 3. That means we are done with this chapter. Okay, now 13 subsection 2, as I already told you, general rule. 13 subsection 2, the general rule says that the time of supply for services, generally to calculate that, what we have to see is whether the invoice has been raised within section 31 time limit or not. We have just now discussed section 31 time limit. See section 31 time limit. What is the time limit to raise invoice? Invoice to raise time invoice, 2nd June is the time limit. So whether invoice is raised within that time or not, you check. Yes sir, within 2nd June they have raised invoice. Then you should compare date of invoice or date of receipt of payment, whichever is earlier. I repeat, if the invoice is raised within section 31 time limit, then it is date of invoice or date of payment, whichever is earlier. ADOI or DOP, whichever is earlier. No sir, within section 31 time limit invoice is not raised, then date of completion of service or provision of service, whatever you call it, or date of payment, whichever is earlier. So simple, sir, with respect to section 13 subsection 2, the general rule, what we will see is invoice within section 31 time limit. Answer may be yes or answer may be no. If the answer is yes, then compare date of invoice or date of payment, whichever is earlier, whichever is earlier. Okay, but if the answer is no, then date of completion of service or date of payment, whichever is earlier, that is what the provision. Okay, simple. Now suppose you are not able to identify the time of supply using the above two methods. Okay, two methods are not applicable. I have given an example below, you can just check that. Here this investigation shows that Fragrance and Co carried out service of cleaning and repairs of tanks in an apartment complex. You can refer that example here. Okay, sir, by any chance I am not able to identify time of supply using these two things, sir. Then the time of supply will be the date on which the recipient of supply shows the receipt of service in the books of accounts. In the books of accounts of recipient, when he is showing that he has received that service, that will be the time of supply. When, if you are not able to identify time of supply using these two provisions. Hope I am clear. Fine. So here one interesting point is, please understand date of receipt of payment, date of payment. I told you meaning. Date of payment from recipient point of view it is different, supplier point of view different. So supplier point of view only we are discussing here, because it is general rule 13 subsection 2, supplier is liable to pay GST. Okay, so the meaning is what? Date of payment, date of entry in the supplier's books of accounts, or date of credit in the supplier's bank account, whichever is earlier. Okay, so in some cases when they talk about date of payment, as I already told you, they'll give different dates: entry date, debit or credit date, or in some cases they will just give one date of payment, simple. Okay, that is what the point. And there are examples here, you can just go through that. You can just pause the video and go through this example. Here, as I already told you, first advances received, in goods case there is relaxation, but in services there is no relaxation. For advances received, immediately the amount is taxable. See, if you see this example here, 15,000 is the total service cost for renting the property. 3,000 they have paid advance, 12,000 they have paid later on. whenever you see different payments, for different payments, please calculate time of supply separately. See here, because it is advance received, immediately when the advance received on 24th July, that will be the time of supply for that 3000. But for the balance 12,000, what we should see whether the invoice is raised within section 31 time limit or not. If it is raised within section 31 time limit, date of invoice. If it is not raised within section 31 time limit, then date of invoice or date of payment, date of completion of service or date of payment, whichever is earlier, that you have to proceed. I repeat, when you are going through time of supply, first thing what you have to see here is when the service is completed. You see that within that date, from that date, within 30 days, they should have raised the invoice. If they have raised it, compare invoice or payment, whichever is earlier. No sir, within 30 days or 45 days, as the case may be, they have not raised the invoice. Then what you will do, you will compare date of completion of service or date of payment, whichever is earlier. For example, if you see here, I repeat, first thing what I will see is when the service is completed. Here we are renting the function hall, okay, to celebrate a farewell party, and the function is held on 3rd December. That means 3rd December is the completion of service. Okay. From that, within 30 days, you should raise the invoice. Okay. Invoice is raised on 14th January. That means after 30 days or before 30 days? After 30 days. Then what will be the provision? The provision will be this: date of completion of service or date of payment, whichever is earlier. Date of completion of service is 3rd December and date of payment is 21st Feb. Which is earlier? 3rd December is earlier. That means, as I already told you, for 3000 rupees, the time of supply should be 24th July. And for the balance 12,000 rupees, the time of supply will be 3rd December. This should be the answer. See here, 3000 they have given 24th July, 12,000 they have given 3rd December. That is what the concept. Okay, 13 subsection 2. Hope it is clear for you. Right, next you can go through this example now. You can just pause the video and check that example. But there is one small relaxation also here. There is regarding, if at all you are receiving any advance, it is not advance actually, please understand. You have raised an invoice for any service, and for that invoice you might have received something extra. This provision is mainly was there in service tax also, that has been copy pasted in GST. See, for example, I am sending a postpaid bill 834 rupees. Earlier what people used to do, they will pay 850 rupees to just round off it and for accounting convenience. Even though my invoice is 834, you are paying extra. You are paying 16 rupees extra. Then for that 16 rupees I should pay service tax earlier. Now I should pay GST. So what they are saying is, sir, whenever you receive something more than the invoiced amount, you will be hardly receiving 100 rupees maximum for rounding up. They are giving you a luxury of 1000 rupees, up to 1000 rupees. If you receive more than the invoiced amount, for the time of supply is not immediately the date of receipt of payment. You can take it as like, you can choose, supplier can choose to take the date of invoice itself for that extra amount. That means for any invoice, it is not advance. I repeat, I am not going to start a service and you are giving me an advance. That is different. Here the concept is different. I have raised an invoice on you. Now you are making a payment. You are making a payment, but something extra, so that will be adjusted in the next invoice. That's a different story. So now when I give an invoice and I receive more than the invoiced amount, up to 1000 rupees, for that excess amount I will adjust that amount in the next invoice. So the time of supply for that excess amount up to 1000 rupees is the next invoice date rather than the date of payment. Okay, that is what they are saying. It is the supplier choice, he can take anyway. So the example has been given here, you can just manage that. Coming to next section 13 subsection 2, the last subsection 13 subsection 3, sorry, time of supply for RCM services. Okay, what is the time of supply for RCM services? If you remember, time of supply for RCM goods, you have seen 3 dates. The 12 subsection 3, date of receipt of goods, 31st date from actual date of invoice, date of payment, whichever is earlier. Here, date of receipt of goods will not be there, date of receipt of services will not be there. So here we will be comparing only two dates. One is 61st day from actual date of invoice or date of payment, whichever is earlier. So date of payment or 61st day from actual date of invoice, whichever is earlier. As I already told you, date of payment meaning is what? Recording the entry in the recipient's books of accounts or payment debited in the recipient's bank account. Okay, sometimes they'll give you both the dates, sometimes they'll give only date of payment. Okay, so that is what the point. So time of supply is nothing but date of payment or 61st day from the actual date of invoice, whichever is earlier. Here date of invoice means you should understand it is actual date of invoice. Clear? Right. Next, if you are not able to identify time of supply based on the provisions given here, you should be seeing the entry recorded in the recipient's books of accounts regarding the receipt of services. That will be just like what we have seen earlier. 13 subsection 2 below also the same point is there. 12 subsection 3 below also the same point is there. 13 subsection 3 below also the same note is there. The same note is there. Same point under section 12 subsection 3 and 13 sub 2 also. Okay, right. Next, sir, suppose see in your syllabus it is not there, but if you import services, generally the liability to pay tax is with recipient, so RCM will be applicable, but that is not there in your syllabus because it is IGST related thing. Now, if at all 13 subsection 3 says, if at all you are receiving a service from an associated enterprise located outside India, then the time of supply for that will be date of payment for that service or date of entry of the service in the books of the recipient, whichever is earlier. Okay, some small examples, all the stuff has been given here, you can just go through that. So with this we are done with this chapter, so you can just pause the video and go through these examples. One recent clarification is pending, the amendment applicable for your exam. So that clarification, if we discuss, just 2 minutes discussion, we will be done with this chapter. Right, pause the video and just go through the examples, finish off here itself, now itself. If you have the book in your hand, you can just pause the video and refer that in the book, no need to see the video. Okay, next, as I already told you, 13 subsection 4, 5, 6 are similar to 12 subsection 4, 5 and 6. Now there is a recent clarification. Actually the clarification is regarding a simple one. Don't worry about the size here, I will just simplify it just like that. Now see, normally the National Highways Authority of India will be using a hybrid annuity model for construction of the roads. So in that case, what will happen is, where the people like who are entering into the contract with NHAI will construct the new road and will also provide the operation and maintenance for a period of course like 15 to 17 years. In such cases, normally the payment will be spread over across the years. So now for them, when the payment is spread across the years, what is the time of supply? Actually, what is the time of supply for the tax payment on this service? I repeat, NHAI will go through a model called a hybrid annuity model, where the persons, the contractors will construct the road and also they will operate and manage the roads, maintain the roads, and further the consideration will be paid to them across 15 to 17 years. In such cases, what is the time of supply for this particular payment? There the department has clarified this is similar to continuous supply of service. Sir, this is nothing but continuous supply of service. So what you have to see is, you should see whether the due date for payment is ascertainable or not, all that stuff, or if the payment is linked to completion of an event, all that stuff, and you see whether the invoice is raised within that time limit. If invoice is raised within that time limit, date of invoice or date of payment, whichever is earlier. If the invoice is not raised within that time limit, date of provision of service or completion of service, or date of payment, whichever is earlier. So simple, this should be taken as continuous supply of service. And you know, invoice to be raised as per section 31 continuous supply of service, the invoice is raised within the time limit or not, and accordingly apply section 13 subsection 3, sorry 13 subsection 2, section 13 subsection 2. Okay, apply that, simple. Okay, that is what the clarification. So with this we are done with this. So friends, we are into the next chapter, tax invoice, credit and debit notes. So in this chapter, we are going to see different types of documents. A very simple chapter, nothing great concepts involved. Just a quick revision let us do regarding this chapter. First of all, in this chapter, we'll be seeing tax invoice section 31. Tax invoice section 31, this has been already discussed in time of supply chapter. So here I'm not just stressing it too much. What is the time limit to raise tax invoice, all that stuff. So section 31 has been already discussed in time of supply chapter TOS. So there you can just refer that. Now coming to simple basic thing. Generally when we talk about tax invoice, we have a misunderstanding that tax invoice means only a supplier will raise to the recipient. So when a supplier is making supply of taxable goods or services, obviously he will raise a tax invoice, no doubt about that. But there is a different scenario also. Recipient will will raise tax invoice when he is receiving taxable goods or services from unregistered supplier, So tax invoice will come into picture when I am supplying some taxable goods and services. Yes, I will raise tax invoice when I am registered, and when I am unregistered, my recipient is registered, he is receiving taxable goods and services, he can raise the tax invoice. So that is what regarding that. Now the main thing is, sir, what should be the particulars of tax invoice? We will be purchasing various goods and services, and what are the details in that particular document? The tax invoice should be there. Na simple one. GST of the supplier should be there, the goods and services what you are selling, the description of that, what is the amount of tax charged in that invoice, it should be mentioned separately. Serial number, very important, serial number should be there, and it should be not more than 16 characters. So maximum serial number shall be 16 characters, and it can be any combination. It can be with alphabets, numericals, symbols, etc. It can be of any sort of combination, but maximum it should be 16 digits. Okay, 16 characters, right? Next, what is the date of issue of the tax invoice should be present? What is the value of the supply made? GST of the recipient only if the recipient is registered. Place of supply should be there. What is the quantity of the goods, how many kgs, all the stuff sold, that should be there. Next, address of the delivery, where it is being delivered, that address, delivery address should be there. If it is different from place of supply, so if it is different from place of supply, you should mention the address. Next, the name, address of the recipient if he is not registered, and if the value of supply is 50,000 or more. That means if the recipient is unregistered person but value of supply is greater than or equal to rupees 50,000, then you should mention the name and address of the recipient even though he is unregistered. So taxable value, we have seen the value should be there, taxable value should be there, and whatever the tax payable under reverse charge basis, there should be there. HSN code, tax rates, signature or digital signature of the supplier or his authorized signatory, and QR code, all the stuff should be there if it is an e-invoice. Okay, so these are the details should be there in tax invoice. Particulars of tax invoice, a simple one. Next, coming to the next one. See, as we are talking about, this is an amendment actually, important for you. So talking about the name, address of the recipient if he is not registered, we have discussed. See, if is not registered, it is mandatory if the value of supply is greater than or equal to 50,000, and if the value of supply is less than 15,000, it is optional. Okay, but if the taxable services are provided by number one, e-commerce operator or OIDR. So here there are two persons who is making the supply. The supply is made by either, that is made through e-commerce operator, or it is OIDR services provided to an unregistered recipient, then the registered person's tax invoice must include the recipient's name, address, PIN code and the state, making this address the recipient's registered address regardless of the value of supply. So simple, we have seen this is a recent amendment stating that, sir, if the value of supply is greater than or equal to 50,000, the name, address on the recipient, all that stuff should be recorded. But if the supplies are made through e-commerce operator, or if the supply is made by OIDR to an unregistered person, irrespective of the value, so irrespective of the value, regardless the value of the supply, so here it is irrespective of the value, you should give the name, address, PIN code and the state, making this address the recipient's registered address. Okay, so this will be taken as the address of the recipient and that should be mentioned in the invoice. Simple. So this is one interesting amendment which you should be focusing, right? Coming to the next one. See, normally in particulars of tax invoice, we have just saw HSN code should be given in the tax invoice. But if your aggregate turnover, is not exceeding 5 crores, that is less than or equal to 5 crores, then if it is a B2B transaction, 4 digits mandatory, you should give the HSN code. HSN code, if you remember, it is an 8-digit code. So enter 8 digits not required in the tax invoice. Only 4 digits. If it is B2B, 4 digits is mandatory. B2C, 4 digits but optional. This is if your aggregate turnover in the preceding financial year is not exceeding 5 crores. That is less than or equal to 5 crores. No sir, in the preceding financial year my aggregate turnover is exceeding 5 crores, sir. Then what should I do? For you, there is no relaxation. B2B transaction, B2C transaction, whatever it is, 6 digits HSN code you should mention in the invoice. Definitely it is compulsory. So I repeat, aggregate turnover less than or equal to 5 crores, B2B, B2C, B2C optional, B2B mandatory, 4 digits, 4 digits. But if your aggregate turnover is exceeding 5 crores, B2B supply, B2C supply, whatever it is, 6 digits HSN code should be present in the invoice. That is what regarding the HSN code, the relaxation they have given. Now, sir, how many copies of invoice I should give, sir? If you are dealing with goods, or if you are dealing with services, sir, if you are dealing with goods, raise 3 copies of invoice. One is for the recipient, the other is for the transporter, the other is for the supplier. If you are dealing with services, then only 2 copies are enough. Supplier and recipient, they will take each copy, because goods you will transport, services you will not transport. What is the need of another copy? So simple. So that is regarding tax invoice. Now coming to the next document, revised tax invoice. So in short, simple, what is this revised tax invoice? Now please understand, if you remember the effective date of registration concept, what we have discussed in registration chapter, effective date of registration will be if you are becoming liable for registration within 30 days. If you apply for registration, the date of becoming liable for registration will be taken as effective date of registration. Or if you are applying for registration after 30 days from the date of becoming liable for registration, the date of grant of registration certificate will be taken as effective date of registration. So now the concept here is, sir, I am becoming liable for registration. See, for example, here Tarabai Private Limited has commenced business of supply of goods on 1st April. Commenced business on 1st April, but their turnover has crossed 20 lakhs, making them liable for registration on 3rd September. When she is liable, when the company is liable for registration on 3rd September, what they are doing? They are applying for registration on 29th September. That means within 30 days they have applied for registration. See, here the concept is 3rd September they are liable for registration, and 29th September they are applying for registration, but they are getting the registration certificate. If you see the registration certificate, they are getting on 5th October. So 5th October they are getting the registration certificate. So if you remember the provisions, sir, the effective date, even though we got the registration certificate on 5th October, the effective date of registration is 3rd September, because the registration has been applied within 30 days from the date of becoming liable for registration. So the law is giving a permission. See, even though you are effectively registered from 3rd September, you came to know about your registration number only on 5th October. So the law is giving you permission for the supplies made during this period, 3rd September to 5th October. Even though you are effectively registered on 3rd September, you don't know your GST number on 3rd September. So the supplies made from 3rd September till 5th October, whatever you have made, you might not have given. It is not you might not have, you would have not given the tax invoices because you don't know your GST number. So they are saying whatever the invoices raised between 3rd September to 5th October, you convert them as a tax invoice now, because on 5th October, you came to know your registration number. No, so whatever the supplies you made between this 3rd September to 5th October, please revise those invoices and make them tax invoice. So that is what revised tax invoice. The invoice is given from the actual date of becoming liable for registration till the date of grant of registration certificate. Whatever the invoices has been raised during that period, you can revise them and make revised tax invoices. This option is available for you. This option is available for you only till 1 month from the date of registration certificate. So 5th October you got the registration certificate, till 5th November you can use this option, and you can convert all the invoices into revised tax invoices. That is what the concept. Mm, so that is revised tax invoice for you. We are done and dusted with this. Next, let us move on to consolidated revised tax invoice. See, understand here, the interesting thing is in this chapter we'll come across tax invoice, revised tax invoice, consolidated tax invoice, consolidated revised tax invoice. It is like your ABCD options in any multiple choice questions. So please be careful. Tax invoice is different, revised tax invoice is different, consolidated revised tax invoice is different, consolidated tax invoice is different. So these are four different concepts. So please be clear when which document should be used, right? So now let us move on to consolidated revised tax invoice. What is this consolidated revised tax invoice? Now, just now we have discussed from 3rd September to 5th October, we are issuing revised tax invoices. Whatever the tax invoices are there, we are converting them and making them into revised tax invoices. Now, those revised tax invoices we can consolidate and give a single consolidated revised tax invoice to the customers. When this option can be exercised, now please understand there are certain conditions here. There are certain conditions. What are the conditions? Now, number one, see, the recipient should be unregistered fellow. The recipient should be unregistered fellow, and whatever the supplies made during that period to that unregistered person, you can consolidate all the supplies. You can consolidate and give one consolidated revised tax invoice. That means if during that period 3rd September to 5th October I have made 10 supplies to one person, I need not give 10 revised tax invoices to him. I can just consolidate and give consolidated revised tax invoice to him, provided he is an unregistered person. He is an unregistered person. But one interesting point is, I cannot give consolidated revised tax invoice if it is an interstate supply and if the value of supply is exceeding 2,50,000. I repeat, if it is interstate supply and value of supply is exceeding 2,50,000, that means greater than 2,50,000. These two conditions are interstate supply, value of supply exceeding 2,50,000. In such case, you cannot give consolidated revised tax invoice. See, I will give you an example here. Mr. Vishnu applied for registration on 4th September 2023, Tamil Nadu. He became liable for registration on 2nd September, applied for registration on 4th September. Please understand, within 30 days I am applying for registration and I got registration certificate on 29th September. Now I am effectively registered from 2nd September because that is the date of becoming liable for registration, and within 30 days I have applied. Now if you see, from the effective date of registration till the date of grant of registration certificate, I have made various supplies to various people. See, there are 8 supplies made here. In these 8 supplies, if you see, not 8, sorry, 12 supplies. If you see, 4 supplies I made to Mr. Rohit, one customer registered in Maharashtra. If you remember, I am from Tamil Nadu. Okay, I am from Tamil Nadu. So Rohit, registered person in Maharashtra. Jadeja, 4 supplies unregistered Gujarat. Suresh Raina, unregistered Tamil Nadu. First of all, understand, when we are playing with the tax invoice, that means when we are giving some relaxations with the tax invoice, we will never give any relaxation for a tax invoice which is issued to a recipient person. That means if it is a B2B transaction, we will never give a relaxation because we want to track every transaction individually. So first, for these 4 supplies, because the recipient is Mr. Rohit registered under Maharashtra, what I should do, I cannot give consolidated revised tax invoice here. Every invoice, 4 supplies has been made. 4 supplies has been made. For all the 4 supplies, I should give 4 separate separate revised tax invoices. Sorry, I cannot consolidate them. I cannot consolidate them. Hope it is clear for you. Next, for Jadeja, coming to Jadeja, he is an unregistered person. So I have made again 4 supplies to Jadeja. I can give a consolidated revised tax invoice here instead of giving 4 revised tax invoices. But the law says, in case of interstate supplies where the single transaction is exceeding 2,50,000, if you see this 5th transaction, it can be equal to 2,50,000, but it cannot be more than 2,50,000. So for that transaction, that means for 5th transaction, S5 means supply 5. So for that transaction I cannot give consolidated revised tax invoice. I cannot consolidate it with others. After consolidating, it can go beyond 2,50,000 also, but individually it should not be greater than 2,50,000. So after consolidating, so what I can do here, 6, 7, 8, I can give a consolidated revised tax invoice, but fifth transaction, fifth supply, I should give a separate revised tax invoice. So two documents I should give here to Jadeja or Jaddu. One is supply 5, separate revised tax invoice, because it is greater than 2,50,000. Remaining all 6, 7, 8, you can consolidate them. After consolidating, it can be greater than 2,50,000 also, and if it is equal to 2,50,000 also, such type of individual transactions you can happily consolidate. That is one thing. And coming to Mr. Suresh Raina, he is from Tamil Nadu. That means this is not an interstate supply, this is an intrastate supply. For intrastate supply, no restrictions, nothing. Only thing is recipient should be unregistered. So Suresh Raina is also unregistered. So all the 4 transactions, what I can do, whether it is exceeding 2,50,000 or not, all these things I need not see. I can just straight away give a consolidated revised tax invoice for all the 4 supplies made to Suresh Raina. Okay, so this is what the example. Hope it is clear for you. So the next one is consolidated tax invoice. The next topic is consolidated tax invoice. We have seen consolidated revised tax invoice. Now we are seeing consolidated tax invoice. Consolidated tax invoice, simple. See, if you are a small provision shop or grocery shop owner, for you this is useful. See, the concept is whatever the supplies you are doing in the entire day, at the end of the day, raise one single invoice called consolidated tax invoice for all the transactions happening during the day. No need to raise tax invoice whenever the supply is made, taking so much of stress. Don't waste your time. Simple, for all the transactions happening on one single day, at the end of the day, raise a consolidated tax invoice. Consolidated revised tax invoice is different, consolidated tax invoice is different. Please understand that. Okay, so for consolidated tax invoice, there are certain conditions. What are the conditions are now? First, value should be less than 200, not less than or equal to, less than 200. Value should be less than 200. Recipient, of course, unregistered. I told you, only when the recipient is unregistered, I'll be giving you certain relaxations. In case of B2B transactions, I will not give you any sort of relaxation. So it should be like B2C transaction, recipient should be unregistered. And one important thing is the recipient should not be asking for tax invoice. If he is asking for tax invoice, you cannot say that no, I have an option in GST consolidated tax invoice, so I will not give you tax invoice. I will raise at the end of the day. You come at night and collect the tax invoice. Like that, you should not tell to the recipient. Clear? So recipient does not require such tax invoice, then only you can go with this. So I repeat, for all the transactions happening during the day where supplier is making a supply with value is less than 200, not less than or equal to, it is less than 200, recipient is unregistered and recipient is not needing the tax invoice. In all these 3 cases, if all these 3 conditions are satisfied, for all such transactions whatever you have made during the day, there is a consolidated tax invoice at the end of the day sufficient. Okay, but this option is not available for whom? Look at this option is not available for persons who are making supply of services by way of admission to exhibition of cinematographic films in multiplex screens. This option is not available for you. So the supplier of services exhibiting the cinematographic multiplex screens, you are going and buying the tickets. So for these people, this is not available. Okay, right, that is consolidated tax invoice. Now let us move on to the next one, bill of supply. So bill of supply, when bill of supply will come into picture, simple 2 cases. Number 1, registered person supplying exempted goods or services. Number 2, registered person who is supplying taxable goods and services, all that, but still has opted for composition scheme. So you are a registered person, then only bill of supply. See, if you are not registered, why I will worry about what are the documents you are giving to the customer? I am least bothered about that. I am focusing only when you are registered. When you are registered, I mean GST law. So GST law is worried only when you are a registered person supplying taxable goods and services, tax invoice is there. But if you are supplying taxable goods and services, but you are under composition scheme, you cannot collect tax. Wherever you cannot collect tax, then issue a document called bill of supply. So I cannot collect tax when I am registered and I am making a supply which is exempt. When I am registered and I am under composition scheme, I cannot collect tax. So in these 2 cases, I will be issuing a document called bill of supply. Right? So that is bill of supply. Next, the contents of bill of supply, all that stuff, you can just go through that. Next one, receipt voucher, refund voucher. So receipt voucher, what is receipt voucher? Receipt voucher is nothing but when you are giving me some advance, to acknowledge that fact that yes, I have received advance from you, I will give you one voucher called receipt voucher. Suppose by any chance, while you are giving advance to me, we both are not sure what type of supply this is going to be, whether it is going to be intrastate supply or interstate supply. We are not sure. To just handle such type of situations, they are saying if you are not sure like that, treat it like interstate supply straight away. Sir, at the time of supply, I am not sure even about the rate of tax also, sir. Then take it as 18%. Later on, we'll adjust. No, this is not tax invoice, however. So I repeat, receipt voucher will be given just to acknowledge the fact that yes, I have received advance from you. At the time of receiving advance, we are not sure about the type of transaction. Let us treat it as interstate supply. We are not sure about the GST rate. Let us take 18%. Simple. That is what the concept. Okay, that is receipt voucher. What about refund voucher? Refund voucher is a document where I have received advance from you, but unfortunately I did not make a supply. If I have not made a supply, then I have to refund the money to you, and I am refunding the money to you, and I am giving a voucher called refund voucher. But understand the interesting point here is you have not made the supply after receiving the advance, and also there is one more condition, that is no tax invoice is issued. So advance taken, invoice not raised, supply not done. We are refunding the money. Then refund voucher will come into picture. Now you will get a doubt, sir, what if invoice is raised, sir? Then we'll issue credit note. We will be seeing subsequently. You know already credit note concept. So you will be issuing a credit note. Simple. Clear? So that is what the concept, right? Refund voucher where receipt voucher is issued for the advance payment, and subsequently supply is not made. Subsequently tax invoice was also not raised. We are refunding the money and we are issuing a voucher called refund voucher. Simple. Next, invoice and payment voucher. This is another scenario. Invoice and payment voucher. This will come into picture. See, understand, first of all, this will come into picture when the supply is covered under RCM. Supply is under reverse charge. If supply is under reverse charge, please understand, the recipient who is liable to pay GST will give a voucher called payment voucher to the supplier. Whether supplier is registered or not, it doesn't matter. Supplier is registered or not, it doesn't matter. Payment voucher compulsory. Payment voucher the recipient will give to the supplier. Sir, I am making this payment to you, and take this voucher called payment voucher. Like that, payment voucher is the document which you should give, who recipient should give to the supplier when the supply is covered under reverse charge. Hope I am clear with this. Now the point is, if the supplier is unregistered, we will give an extra document. That extra document is nothing but the self invoice. Invoice should be issued by the recipient under RCM to supplier if the supplier is unregistered. If the supplier is unregistered. So I repeat, payment voucher compulsory, but invoice I can call it as self invoice. If you remember, in input tax credit chapter we would have discussed self invoice. Okay, recipient on payment voucher definitely will come into picture whether supplier is registered or not. But if supplier is unregistered, along with the payment voucher, recipient will also give self invoice, which recipient has raised on himself. Okay, that is the next document. What is next one? Invoice cum bill of supply. What is this invoice cum bill of supply? Simple, when you are making both taxable as well as exempt supplies, and this is made to unregistered person, then you can give a single document called invoice cum bill of supply. So that is what the next different document. Okay. Now let us move on to the next scenario, where to certain type of suppliers we have given relaxation in the documents. So who are those suppliers and what is the relaxation they are enjoying, we are going to see in this scenario. Simple, if you are an insurance company, banking company, financial institution including NBFC, for you, okay, actually this should come here. For you, the optional information, what is optional information? You need not maintain serial number and the address of the recipient in the tax invoice. I repeat, we are discussing a scenario where various type of suppliers in their tax invoice, they need not give certain information. There is some optional information, there is some mandatory information as well. For insurance companies, banking companies, financial institutions and NBFCs, As I told you, that should come here. For them, please understand, serial number of the invoice, address of the recipient need not be there in the invoice. And other information what we have discussed as per rule 46, here we have discussed no particulars of tax invoice. So these are obviously, this is rule 46, so these are obviously to be mentioned. Serial number and address of the recipient itself is not required. Okay. And one more interesting thing for the same people. So here actually the point should be there. These two columns together, it is insurers, banking companies, financial institutions, and NBFCs. For these people, we are giving an option called consolidated tax invoice. What is that consolidated tax invoice? Just now we have seen a consolidated tax invoice concept. The same concept there we have seen at the end of the day they can raise, but here we are giving an option for all the supplies made during the month. At the end of the month they can raise. That is what the next one. So I repeat, consolidated tax invoice can be raised at the end of the month. We have seen just now a concept where at the end of the day you can raise it, but here for these people who are the insurance companies, banking companies, financial institutions, and NBFCs, for these people at the end of the month they can raise consolidated tax invoice. Okay, coming to GTA. GTA, please understand, optional information is nothing. No optional information, only extra mandatory information, that is consignment note. Obviously, in consignment note what will be there, gross weight of the consignment, what is the, who is the consignor, who is the consignee, from where we are taking the goods to where we are taking, the origin, destination, vehicle number, all the stuff. So extra information is there, and other information as prescribed in rule 46 that you have to follow, no other option. So that is with respect to GTA, right? Next, supplier of passenger transportation services. For these people also same optional information is like serial number and address of the recipient, that is optional information. Remaining whatever the other information given in rule 46 is mandatory. Okay, next, and here one second, and one more point they are trying to tell here is whatever the ticket they're issuing itself will be treated as tax invoice. Okay, they need not issue separate tax invoice and the ticket separately. If they issue ticket and giving all the required details also, we will be calling it as tax invoice. Okay, next we are talking about passenger transportation services. So due to large number of transactions happening in these cases, we have given all these relaxations. Next, a person who is exhibiting this cinematographic films also need not issue a separate tax invoice. Whatever the electronic ticket he is issuing with all the details, rule 46 compliance, if he is doing and he is giving a document, then ticket itself will be read as tax invoice. Separately tax invoice, separately ticket, not required. That is what the point we have discussed. So these are the details, you can just go through that once. Now we are moving into the next document called delivery challan. Delivery challan, simple, where and all you cannot raise a tax invoice, you can raise a delivery challan. See, for transportation of goods, there is a requirement of e-way bill. For raising the e-way bill, actually we need a supporting document called tax invoice. But when the supply itself is not made, when the movement itself is happening, because there is no supply, all that various reasons, I cannot raise tax invoice. So where and all you cannot raise the tax invoice, they are asking you to raise a document called delivery challan. In practice we call it as DC in the market, in the industry. So delivery challan, you raise a delivery challan and raise an e-way bill. I repeat, simple, whenever you cannot raise a tax invoice, raise a delivery challan and raise e-way bill with the support of delivery challan. So they have given various cases here. So if you are supplying the liquid gas, where at the time of removal you don't know the quantity, or when you're transporting the goods for job work, or when you're transporting the goods for reasons other than by way of supply, maybe within the same state I may be doing a branch transfer, supply is not done, or I may be sending the goods to job worker, supply is not done, I cannot raise a tax invoice. or such other supplies as may be notified. In these cases, because supply is not there, I cannot raise a tax invoice. In such cases, raise a delivery challan is what they are trying to tell. So at the time of removal of the goods, goods may be removed on delivery challan. Later on, when the supply is concluded, you can just raise a tax invoice also. And delivery challan also should be serially numbered, not exceeding 16 characters, just like a tax invoice. And these are the contents of delivery challan, the date, address, all that normal things. You can just go through that. So delivery challan should be prepared in triplicate, just like a tax invoice. Portion for the recipient, transporter, and supplier. The same case here also. So where goods are transported on delivery challan without invoice, the same shall be declared in the e-way bill. Of course, when you are generating e-way bill, there will be an option to select the supporting document, tax invoice or delivery challan. So you select delivery challan and you view the details, all that stuff. So that is regarding the delivery challan. Next, as I already told you, when the goods are being transported for the purpose of supply, but you cannot raise tax invoice due to various reasons, you can just remove the goods using delivery challan, and after the delivery is over also, you can just raise the tax invoice. Like in this case, what we have seen, where you are supplying the liquid gas at the time of removal, you don't know the actual quantity. So first take delivery challan, remove the goods, deliver them, and after that, after the delivery, you know the quantity, how much delivered, you raise the tax invoice and close the transaction. Simple. Okay. So the next one, sir, I am supplying some semi knockdown goods in some semi knockdown or completely knockdown conditions, sir. Huge plant and machinery we are dismantling and sending them in different lorries, different consignments, in semi knockdown or completely knockdown condition. Then how do we handle that scenario? So in that case, what you should do, first issue the complete invoice before the dispatch of the first consignment, and issue a delivery challan for each subsequent consignment giving reference to the invoice. Okay, so 10 consignments it is going, first raise the invoice, and subsequently whatever the consignments are going, that means after the first consignment whatever the consignments are going, for that raise the delivery challan, give reference to the tax invoice in the delivery challan, and each consignment whatever is going should be accompanied with the corresponding delivery challan and also duly certified copy of invoice, and of course e-way bill is mandatory. Next, the original copy of the invoice shall be sent along with the last consignment. So this is the procedure which you have to follow if you are sending the goods in semi knockdown or completely knockdown condition in multiple consignments, right? So that is what the point. Next, there are certain clarifications here. The clarifications are regarding, this is regarding the registered jewelry suppliers. The registered jewelry suppliers, if you see, they'll be traveling from one state to another state taking their jewelry, and they will take this jewelry on sale on approval basis. That is what the point here. And now when they are taking the jewelry along with them, they don't know whether the sale will happen or not. Supply has not yet done, so tax invoice they cannot raise. So what they should do, obviously, so what they will do, they'll be normally taking the jewelry along with them, or also with a bill book along with them. Whenever anybody accepts it and purchases it, they will raise the tax invoice there itself, and they'll give the invoice. For such cases, what should I do? While taking the goods, you happily raise a delivery challan here. That is what they are trying to tell here. So sale on approval basis, requiring them to carry goods for supply. If approved, what they will do, they will raise a tax invoice, and they cannot register as a casual taxable person as they cannot ascertain their supplies beforehand, and while ascertainment of tax liability in advance is mandatory requirement for registration as a casual taxable person. Rule 55 allows goods taken on sale or approval basis to be moved from registered supplier place to another location with or within the state using delivery challan and e-way bill, and the person carrying the goods can carry the invoice book to issue the invoice once the supply is. So the same thing what we have been discussing. So here the simple doubt was, these jewelers who are registered in one state traveling to other states for selling the jewelry, but the point is, when they are going to different states and making the sale, they cannot register there as a casual taxable person. Why? The reason is, to register as a casual taxable person, the first and foremost thing is they have to estimate what are the sales they are going to make in the other state, and they are going to supply there. That amount of tax they should advance deposit in the GST department. You know that while taking registration as a casual taxable person, advance deposit of tax is required. These people cannot ascertain that. Nobody can ascertain that. That's a different story. But here we are giving a relaxation to these people. What is that relaxation now? Please understand, if you are a registered jeweler, while you are going to a different state to sell the jewelry there, please carry invoice book with you. While going, take delivery challan, raise e-way bill, and proceed. Once the sale is happened, raise the invoice there. Simple. Registered jewelers traveling to different states, take the invoice book along with you, raise a delivery challan, raise the e-way bill along with it, and then travel. Simple. it is happily treated that you are complying the law. Okay, so that is the point. Next, the artist supply artwork in different states other than the state where he is registered. Mm, Same story, just like registered jewelers here also. Artist who is going to different state taking his artwork and selling there. Same, carry the invoice book, take a delivery challan, raise e-way bill and proceed. That is what the point. So you can raise a delivery challan, e-way bill and invoice may be issued at the actual supply of the artwork. When somebody selects your artistic work and there is the painting or whatever it is and makes the payment, raise the invoice and close it. So for moving from one state to another state other than your registered state, happily move, carry an invoice book, carry the delivery challan and e-way bill sufficient. So for registered jewelers and these people artists, we are giving the same relaxation. Okay, so that is what with respect to delivery challan. Right, so next let us move on to the next topic, credit note and debit note. Credit note and debit note. So the next topic is credit note and debit note. Simple, when credit note will be issued, when debit note will be issued. See, first of all, credit note will be issued in 4 circumstances. What are the 4 circumstances? Sir, in the invoice I have charged 100 rupees, sir, but actually it is only 80 rupees. Where 80 rupees worth goods or services you are supplying, you have given invoice by mistake 100 rupees. So for the 20 rupees, what I should do? I can issue a credit note. Or in the invoice I have charged 18 rupees GST, but actually the GST is only 12 rupees. That means I have charged 6 rupees extra. For that 6 rupees, I can issue a credit note. Or when the goods supplied by the supplier or returned by the recipient, unfortunately, or goods or services supplied are found to be deficient. I have raised an invoice, I have supplied goods to you worth 1 lakh rupees and raised an invoice. And after looking at the invoice, you are saying, Vishnu sir, for the goods supplied by you, 1 lakh, leave it. Even 10,000 this is also waste, sir. Such worst quality goods you have supplied, sir. Then okay, I have to raise credit note. Okay, so these are the 4 cases. Same way for debit note. In the invoice, I have given 100 rupees, but actually the value is 120. That means I have given 20 rupees less in the invoice. For the balance 20 rupees, whatever the shortfall is there, I need not issue a fresh tax invoice. I can give a debit note. Or in the invoice, I have charged 12 rupees GST. Actually, GST is 18 rupees. For that 6 rupees, I can give a debit note. So debit note is just an opposite scenario. And one more thing, understand here, in GST, forget about your accounting. In GST, both credit note and debit note are given by the supplier. Okay, both debit note and credit note are given by the supplier to the recipient. Okay, accordingly, see, when we are filing GSTR1, we give our invoice details, we give our credit note details, we give our debit note details. When I give my invoice details, my GST liability will increase. When I give my credit note details, my GST liability will decrease. When I give my debit note details, my GST liability will increase. So invoice will increase the liability, debit note will increase the liability, credit note will decrease the liability. Same way for opposite recipient also, the ITC will be fluctuating, increasing and decreasing. Okay, so be clear with that. Now coming to the point, this debit note, credit note details, see, whatever the one small point here, the debit note, credit note, I have made 10 supplies to you and 10 invoices I have raised. For all the 10 invoices, now you are just calling me and telling, sir, whatever the goods and services you have supplied, the quality is not that great, sir. They are not up to the mark. So we are negotiating. And now the point is, you have found the value of goods or services are deficient. So you are asking me to reduce the value. What should I do? For 10 invoices, I can give 10 credit notes. The law is saying instead of giving 10 credit notes, you can give one consolidated credit note, or of course one consolidated debit note, as the case may be. So the concept is, when the credit note or debit notes has to be issued related to multiple invoices, you can consolidate them and give a consolidated credit or debit note giving reference to all such invoices. Okay, or can issue a separate credit or debit notes for each invoice. That is also fine. Okay, so consolidated debit note, credit note you can use, or you can issue separate credit notes or debit notes also as per your will and wish. Now, as we were discussing, debit note, credit note details also should be given in the GSTR1. Please understand, when you are filing your GSTR1, credit note details you should be mentioning in the GSTR1. And by chance, if you forget that to mention in any GSTR1, You can just do that in the next month. That next month also if you forgot, next month. That next month also you forgot, that next month. But there is a deadline for that. The deadline is nothing but our favorite deadline, where it is common for everything. 16 subsection 4 time limit, 30th November of the succeeding financial year, or actual date of filing annual return of the relevant financial year, whichever is earlier. Credit note 16 subsection 4 time limit, same ditto applicable. Okay, so the point is, credit note details, if you have missed out giving in any GSTR1, credit note will reduce your GST liability. So if you miss out that, then you can do that before this time, 30th November of the succeeding financial year in which the credit note was issued, or the actual date of filing annual return of the relevant financial year to which this credit note belongs to. 16 subsection 4 same ditto time limit. Okay, so if you are not clear with this time limit, you can refer the video 16 subsection 4 ITC chapter. You can just refer the section 16 video. Okay, so that is what the point. But the interesting thing is, for debit note there is no such time limit. Why? Because through debit note will increase your liability, that means revenue to the government. So debit note details, if you have forgotten giving any GSTR1, you can give it in another GSTR1. There is no such time limit. Of course, interest, late fee, all these things will come into picture. Okay, so that is what the concept. I repeat, credit note details to give in GSTR1 there is a deadline, but debit note for giving those details in GSTR1 there is no deadline. Okay, right, with this we are done with credit note and debit notes. Some small sections, 32 33 are there, not relevant. Let us proceed. So the next topic is e-invoice. So e-invoice, first of all, what is this e-invoice all about? Now please understand, for whom e-invoice provisions are applicable. First let us understand, e-invoice provisions are applicable for a registered person, only for registered person whose aggregate turnover, please understand the important word here is aggregate turnover, in any preceding financial year from 17-18 exceeds 5 crores. You might have seen any limit 20 crore, 10 crore, whatever it is. Right now the limit is only 5 crores. Okay, so in any preceding financial year from 17-18, if the aggregate turnover has exceeded 5 crores, and if I am a registered person, I should follow e-invoice provisions. Now for example, see, 17-18 my aggregate turnover is 4 crores, 18-19 7 crores, 19-20 2 crores, 20-21 3 crores, so on and so forth. 23-24 4 crores, 24-25 should I follow e-invoice provisions? Means understand, 18-19 my aggregate turnover has exceeded 5 crores, so that is 7 crore I have made there. Any preceding financial year, if I have made an aggregate turnover exceeding 5 crores, for me e-invoice provisions are applicable. E-invoice provisions are applicable. Please understand, any preceding financial year, not preceding financial year. While writing the answer also in exam, the word any is very important. Now, so any preceding financial year aggregate turnover exceeded 5 crores, then you should raise an e-invoice, and that e-invoice provisions only on B2B transactions, not on B2C transactions. It is only on B2B transactions, not on B2C transactions. But B2B means obviously what you are registered and the recipient is also registered. But exports, for example, I am exporting Maggi from India to China. The person who is in China is registered under Indian GST law? No. But for the purpose of this provisions, we will treat even exports as B2B transactions, and the law says e-invoicing provision should be followed for exports. I repeat, exports, even though the recipient is not registered, we will treat it as B2B transaction, and we have to raise the e-invoice for that also. Now, sir, e-invoice provisions are not applicable for input service distributor. That is a CA final concept, not relevant for you. Just remember enough. Recipient of RCM supplies, import of goods, B2C transactions. For these transactions, e-invoice provisions are not applicable. Remember it, important. Now, sir, okay, sir, e-invoice provisions are applicable to me. What should I do, sir, now? When e-invoice provisions are applicable to you, simple, you will be first generating your own invoice in any accounting software. That invoice, you convert it into JSON format or JSON file. For e-invoice provision, see, the government has notified a standard uniform invoice format for all the people liable for e-invoicing. You have to follow e-invoice schema, that is the e-invoice format, GST INV01. This is the format. Every accounting software will have that format. You raise invoice in that format, convert that into JSON file, download that as a JSON file. Now come to a government website called Invoice Registration Portal. This is a separate website, not the common portal. This is a separate website. Come to that invoice registration portal, in which you have created already a login ID and password. Log into that, upload the JSON file downloaded by you, and after uploading that JSON file, then the system will allow you to download a document. That document is nothing but the e-invoice. Now give it to the buyer. Sir, why, sir? What is this actually? I have already generated invoice. Now I am uploading in the system and now downloading it. When you are downloading, there are three extra things added on that invoice what you have generated. On the invoice what you have generated, three extra things added. Number one, invoice reference number. Please understand, the e-invoice is not at all valid without this invoice reference number. Without invoice reference number, I repeat, e-invoice is not valid. This will be one thing added in your invoice. Next, number two, there will be a QR code added by the department. Number three, there will be a digital signature of the proper officer, not your signature, proper officer digital signature will be added. These three things will be added to the invoice and given to you. That e-invoice now you give to the customer. That means simple, before you give invoice to your customer, give it to the government. Government will add certain things, three things on that, and give it to you. Now you give it to the customer. So here the advantage is, sir, government is trying to eliminate these fake invoices and eliminate this fake ITC concept with the help of this e-invoice. And also one big advantage for us is through e-invoicing, I am already giving details to the government website. So while filing my GSTR1, it will be convenient for me. It will be already reflected, and for me the burden to upload the data again will be reduced. So that is the point. Whole agenda is just to eliminate fake invoices, fake ITC concept, and there are additional advantages which I have given here. You can just go through them. Okay. Now, even though the aggregate turnover in any preceding financial year from 17-18 has exceeded 5 crores, for certain people we are exempting them from e-invoicing provisions. What are the exemptions? Who are exempted? Number one, the unit in SCZ. Please understand, when you talk about SCZ unit is also there, SCZ developer also there. I am not focusing more on them. Let us not waste time there. Here the relaxation is applicable only for a unit in SCZ. That means in an SCZ you are going and setting up your factory, office, whatever. You are an unit in SCZ. For you, even though your aggregate turnover in any preceding financial year has exceeded 5 crore rupees, for you e-invoicing provisions are not applicable. But for developers, yes. For SCZ developers, they have to follow e-invoice. Next, if you are an insurance company, banking company, financial institutions including NBFC, for you also invoicing provisions not applicable. If you are a GTA, for you invoicing provisions are not applicable. And if you are a passenger transportation service provider, not applicable. If you are a service provider of exhibiting cinematographic films in multiplex screens, then e-invoice provisions are not applicable. And you are a government department and a local authority, you know, don't trouble the trouble. So don't trouble the trouble there. So government department and local authorities, for you also e-invoicing provisions are not applicable. And one interesting clarification here is, the government is saying, sir, when we are talking about the exemption available from generating the e-invoices, that exemption is applicable for the entity as a whole, not for any particular single supply. So this is applicable to the entire entity, not limited to any particular transaction. For these people, whatever the B2B supplies they are doing, for all the B2B supplies done by these people, invoicing provisions are not applicable. But one small request we are making to these people is, say for you e-invoicing provisions are not applicable, no, please mention that in the invoice. Give a declaration in the invoice. What is the declaration? The declaration is, I hereby declare that I am like a special person in the eyes of law. For me, even though aggregate turnover is not exceeding 5 crores, even though my aggregate turnover is exceeding 5 crores, I am not supposed to follow e-invoicing provisions like that. You shall give a declaration. Who shall give a declaration? These people shall give a declaration in the invoice that for them e-invoicing provisions are not applicable, even though their aggregate turnover is exceeding 5 crores. Now, there is one interesting clarification again. This one, this clarification talks about, we have seen government department, local authorities, if they make any B2B supplies, e-invoicing provisions are not applicable. Now here we are talking about, if you remember TDS provision, section 51. Section 51 is applicable to government departments, local authorities, all that stuff. So for those whom section 51 provisions are applicable, they got registered under GST. I repeat, those who got who are liable under section 51 to deduct TDS, registered under GST. For such people, I am making a supply, then is it a B2B supply? because they are government department registered under GST. Why they got registered? For section 51 purpose. Till they are registered only. I am also registered. I am making supply to them. So it is a B2B transaction. For me, aggregate turnover in any preceding financial year exceeded 5 crores. For me, e-invoicing provisions are applicable. But now to whom I am making the supply? I am making supply to government department. I am making supply made to that government department or establishment or agency or local authority or public sector undertaking who got registered solely for the purpose of section 51. They are not doing any business. They got registered only because they are supposed to register under section 51 TDS obligation. They are not doing any business. For such people, if I make supply also, I should raise e-invoice, because for me invoice provisions are applicable. They got registered and they are treated as B2B transactions, so I have to raise e-invoice. I repeat, we are not talking about supply made by government departments. We are talking about supply made to government departments, government agencies, local authorities, all those people. They are not doing business, yes, but still they got registered for any purpose. I don't care, for section 51 whatever, all that. So I will treat them as B2B transaction. So for me invoicing applicable, no. So whatever the invoice I raise to them, I will raise an e-invoice, simple. That is what another clarification important for you. There is an example given here, you can just go through that. And invoice registration portal, government has notified actually these portals, so 10 portals. Through this you can just register and generate invoices. As I already told you, e-invoice will be valid only with IRN, and IRN is different from invoice number. Invoice number is different, invoice reference number is different. Invoice number supplier will give serial number, invoice reference number department will give. Okay, invoice number maximum 16 characters, this is 64 characters. Okay, so I repeat, invoice and invoice reference number are different. Invoice is given by supplier, invoice reference number is given by the portal. And the QR code, as I told you, whatever is been embedded on the e-invoice, that will contain these details. You can just go through that. And if you are generating e-invoice, no requirement to carry the physical copy of the tax invoice. Just if you show the QR code, that is more than sufficient. The department people will scan that and get the details. Next, you can cancel the e-invoice within the prescribed time, but you cannot amend the details given in the e-invoice. That means in invoice registration portal, once the data is given, that cannot be amended. Amendment of invoices is not possible through IRP. But while filing GSTR1, whatever the details of this e-invoice are automatically reflected in GSTR1, there you can edit them. GSTR1, in GSTR1 you can edit the details of the invoice, but in the invoice registration portal, once you have given the data, that is final. You cannot change that, only you can cancel the invoice. Okay, if you want to change the data, you can change it only while filing GSTR1. As I told you, the government has notified a standard format for the invoices for everybody to follow. E-invoicing provisions, if applicable, everybody in their software, we are coming up with a standard format called e-invoice schema. So all the software vendors embed this format in your accounting softwares, so the supplier will follow this. So that is what e-invoice schema here, that you can just go through, right? Here one interesting point is the e-invoicing system is also available to e-commerce operators to report the invoices to the invoice registration portal, which are generated by them on behalf of the suppliers. So whatever the supplies I am making through e-commerce operator, those supplies e-commerce operator can happily upload to the IRP using the e-invoice, using the IRP. They can generate e-invoices. Even though the invoice is issued by the supplier, these people can raise the e-invoice. So that is what the point. So with this we are done with e-invoice provisions. Now let us move on to the next one, dynamic QR code on B2C invoices. Dynamic QR code. So what is this dynamic QR code all about? So in this video we are going to see dynamic QR code. Dynamic QR code, just like e-invoice, dynamic QR code applicability is similar. Dynamic QR code provisions are applicable to every registered person whose aggregate turnover in the preceding financial year, not preceding financial year, any preceding financial year, has exceeded 500 crores. There the limit is 5 crores, here the limit is 500 crores. That's all. That is the only difference. And both the cases, see the condition is same. Registered person aggregate turnover in any preceding financial year from 17-18 exceeds 500 crores. There 5 crores, here 500 crores. But the interesting thing is dynamic QR code is applicable only on B2C supplies. Their e-invoice is applicable on B2B supplies. So straight away we can say when I make exports, exports are treated as B2B supply. So invoice is applicable. Dynamic QR code is not applicable. First, sir, what is this dynamic QR code? Dynamic QR code simple. When you are going for shopping, normally there is a QR code. When you go to Pani Puri Anna, you eat 20 rupees Pani Puri, you scan and pay. You eat for 20 rupees, you eat for 200 rupees, you eat for 2000 rupees, the QR code will remain same. That is a static QR code. But if you remember when you're going for shoppings, where when the billing is done, they will display a QR code to you. You scan the QR code, you need not enter the amount will be automatically generated there and you make the payment. That means, for example, I have done a shopping for 499 rupees. For me, if I scan the QR code in Reliance Trends, 499 automatically will come and I will make 499 payment. Suppose somebody is going and doing shopping, and let us assume the bill amount is 2430 rupees. They will show a QR code where the exact bill amount is 2430 rupees and they just pay it. That means QR code keeps on changing for every transaction. That is what we call as dynamic QR code. For whom this is mandatory? Those whose aggregate turnover in the preceding financial year, any preceding financial year, has exceeded 5 crores. So for them, dynamic QR code is mandatory only for B2C supplies. Okay, so that is what we have understood. And one interesting thing, exports also I have told you. And another interesting thing is, any person who is applying for unique identity number, if you remember in registration chapter, we would have discussed unique identification number applied by foreign embassies or any other organizations which are notified by United Nations organizations, all that specialized agencies, they will apply for unique identity number for the purpose of getting GST refund, all that. They are not registered under GST. They cannot be treated as registered under GST because UIN concept is not giving registration. So they are treated as B2C transactions, and hence for them, if you give any invoice, yes, you have to follow dynamic QR code. Clear? So dynamic QR code, whose aggregate turnover in any preceding financial exceeding 5 crores has to follow, and that is only on B2C supplies. Exports are not B2C, they are B2B. So e-invoicing will come, dynamic QR code will not come. Next thing, for people who have got UIN, for them UIN they have obtained means that is not registration for them, so they are treated as B2C. So hence for them dynamic QR code provisions are applicable. For these 6 cases, dynamic QR code provisions are not applicable. What are the 6 cases? Just like e-invoicing, here also we have given the exemption. Same, insurance company, banking company, financial institutions, NBFCs, GTA. Next, passenger transportation services, cinematographic films if you are exhibiting, supplier of void air services, and for exports, because as I told you, exports are treated as B2B transactions, not B2C. So for these cases, dynamic QR code provisions are not applicable. And sir, when I am disclosing the dynamic QR code, in the dynamic QR code, through the dynamic QR code, what are the details we should capture, sir? So the dynamic QR code shall contain the details of supplier's GSTIN, supplier's UPI ID, payee's bank account number. Who is the payee? Obviously the supplier only will be the payee. He is only going to take the payment. If you remember, payee means not recipient here, don't misunderstand. Payee means the supplier, payer is the recipient, payee is the supplier. So his bank account number, IFSC code, invoice number and invoice date, total invoice value, GST amount along with the breakup, CGST, SGST, IGST, cess, all that. And dynamic QR code should be in such a way that it can be scanned to make the digital payment. So these are the contents of dynamic QR code. Here, after looking at this concept, there was some doubts and there were certain clarifications given by the department. Simple. See, first of all, sir, I am providing or displaying dynamic QR code, sir. But what if the customer is paying using UPI or any credit or debit card or online banking or cash or any combination also without using dynamic QR code? Then, or partly using dynamic QR code, partly by cash. What should I do? You say that like I am not complying the law. Don't worry, ra. It is like if you give cross reference in the invoice, then automatically it is deemed that you have complied with the dynamic QR code provision. Simple. I am giving dynamic QR code, but the customer is not using. Now what is the mistake I am doing here? So the law says don't worry, relax. If the customer does that way, give the cross reference on the invoice. That is the reason when you go for shopping, the billing person will ask you, sir, cash or card, phone pay, GPay, what is the mode of payment? Because they will record that in the invoice and then they will proceed. Okay. Another doubt is, sir, supplier is making available to the customer this payment options like UPI collect, UPI intent or similar other modes. See, when you go to any Apollo pharmacy, etc., etc., if you give your phone pay number, automatically the payment request will come to your mobile through your phone pay app or all that. Then you are making the payment. In such cases, whether Apollo pharmacy or all that supplies, whether they are violating this dynamic QR code provisions, the law says give the cross reference of the payment in the invoice, and it is deemed that you have complied with the dynamic QR code provisions. Okay. Next. The next one is, see, the next doubt is, sir, what about the prepaid invoices? What about the prepaid invoices, sir? Payment itself is already done before the issuance of tax invoice, sir. Then what should I do? Then give again cross reference on the invoice. This is a prepaid invoice. Then you have, like, it is deemed that you are complied with dynamic QR code provisions. Next. Sir, where e-commerce operator or online application has complied with dynamic QR code requirements, whether the supplier is using e-commerce operator or any other application will be still required to comply with dynamic QR code. See, no matter who you are, if the conditions are satisfied, follow dynamic QR code provisions. Simple. So dynamic QR code provisions apply to each supplier or registered person separately if such person is liable to issue invoices with dynamic QR code for B2C supplies. Okay. In case of retail sales over the counter, payment for the customer is received on payment counter by displaying dynamic QR code on digital display, whereas the invoice along with the invoice number is generated on the processing system being issued by the supplier merchant after receiving the payment. What they are trying to tell here is, when they are getting the payment, at the time the invoice is not issued, first they will just give some pro forma invoice kind of thing, some document, they will just give some reference number, get the payment, then they will raise the invoice. In dynamic QR code, we are not capturing the invoice details, invoice number details, all that. Is it fine? Then the law says, yes, it is, however, fine. So they are saying, as long as that order ID or the sales reference number, whatever you are having, that it is linked to the invoice, as long as it is linked to the invoice later on, whatever has been generated, then it is fine that you are following the dynamic QR code provisions. You need not worry. Next, sir, what about part payment is received before dynamic QR code is generated? That means advance part payment has been received. Balance payment is received after the invoice is raised. In such cases, you told in the dynamic QR code you should capture all the total invoice value including GST, everything, all that stuff. Then what should I do? Now earlier 1 lakh bill, already I got 30,000. Now in the dynamic QR code I cannot give 1 lakh again. So if you give cross reference, the balance, for the balance 70,000 you give dynamic QR code, and you give cross reference of the part payment or advance, then automatically it is deemed that you have complied with the dynamic QR code provision. Simple, small clarification, not that greatly like complicated, all that stuff. Right. So with this we are done with dynamic QR code. So students, in this video we are going to discuss about a topic called e-way bill. Right. Now first of all, see, e-way bill is nothing but a document which we shall generate when we are causing the movement of goods using a motor vehicle. Now the point is, sir, what are the modes of raising the e-way bill? If you see, the modes of raising the e-way bill are, you can use the website, you can use the mobile application, SMS, bulk upload tool, or any application program interface. Now we are using this website alone to generate the e-way bill. So every person who is registered under GST will have a registration, that is a login ID and password in the common portal gst.gov.in. Apart from that, you should also create an account in the e-way bill portal separately. So once you are registered under GST law, you should be registered under e-way bill portal also. That means you should create a login ID and password in e-way bill portal also. Using then you can log into the e-way bill portal and generate the e-way bill. But for the transporters who are not registered under GST, for them to create an account in e-way bill portal, they have to apply for that, and they will get a 15-digit unique transporter ID called Transin. I repeat, those who got registration, they will use their GSTIN 15-digit unique code, you know that. And those transporters who are not registered, for them they will get a Transin, which is nothing but a unique transporter ID, by applying this in this e-way bill portal, right? So that is only for unregistered transporters, only the transporters who are unregistered. For others, using their registration they can proceed. Okay, so that is what the point. Now coming to the concept of e-way bill, when we should generate e-way bill, when you are moving the goods, okay, where the consignment value is exceeding 50,000. And why you are moving the goods? Maybe because of supply, or maybe reasons other than supply, or you may be purchasing from an unregistered person. Anything reason can be anything. There is a movement of goods and the consignment value is greater than 50,000, then you have to raise the e-way bill. Now the doubt is, who shall raise the e-way bill? E-way bill can be raised by the supplier, can be raised by the recipient also, and of course it can be raised even by the transporter. So the consignor, consignee and transporters are also eligible to raise the e-way bill. Now coming to the point, if you see, we have discussed the condition for generating e-way bill. Whenever we are moving the goods from one place to another place using the motor vehicle, consignment value exceeding 50,000, we have discussed the condition. Here, sir, what is the meaning of consignment value? The meaning of consignment value is nothing but the value whatever has been declared in section, as per section 15, declared in the invoice or delivery challan. As I already told you, if you remember, like when the movement is happening without supply, if there is supply, we will raise a tax invoice. If there is no supply, we will raise a document called delivery challan. So in delivery challan or in the tax invoice, whatever the value we have declared, that value, and here everywhere in GST you will be seeing excluding GST concept, but here it is including GST, CGST, SGST, UTGST, GST and this charges. So to check that 50,000 consignment value, you should also add the taxes, GST. Okay, and it excludes what? It excludes the exempt supplies. Okay, that means e-way bill shall be raised only when there is movement of taxable goods, and that too the consignment value is exceeding 50,000. Consignment value means value as per section 15 plus GST. Don't add the value of exempt supply. Okay, and this is only for movement of goods. Services, of course, you cannot transport, and there is no e-way bill. Okay, next. So as I have discussed, when the e-way bill should be raised. Here, one more interesting point is e-way bill shall be raised no matter whether you are transporting that in your own vehicles, hired vehicles, or public conveyance. That means public transportation vehicles, whatever it is. So no matter whether it is your own vehicle, hired vehicle, or a public conveyance, you shall raise the e-way bill. Okay. So as I told you, e-way bill shall be raised by the transporter if registered person hand over the goods to the transporter without raising the e-way bill. So supplier, recipient or even transporter can raise the e-way bill. Okay, now as I told you, if the goods are moved for reason supply, tax invoice will be there, but if it is moved for purpose other than supply, then obviously you can raise a delivery challan. With the help of the delivery challan, you can raise the e-way bill, and of course in the delivery challan you should mention the value of the goods. Okay, next. So as I told you, two basic conditions for raising the e-way bill. One is movement. Next thing is consignment value. It should be more than 50,000. But there are two exceptions here. There are two exceptions. If you see, only when there is movement of goods and consignment value is exceeding 50,000, you should raise the e-way bill. But e-way bill shall be generated even though the consignment value does not exceed 50,000. In two cases, e-way bill shall be raised even though the consignment value does not exceed 50,000. That means if the consignment value, let us say for example, rupees 30,000, still I should raise e-way bill. When I should raise e-way bill na? If it is interstate transfer of goods sent from principal to job worker, from principal to job worker located in a different state, then only we call it as interstate, of course. So principal is in one location, job worker is in another state or union territory, and there is transfer happening. No matter what is the consignment value, even though it is not exceeding 50,000, you should raise the e-way bill. That is what the provision we are discussing. Okay, next. And one more thing, if you see in registration chapter, we have seen relaxation for notified handicraft goods from taking registration even though they are making interstate supply. So normally, you know, interstate supply of goods, when it is done, definitely you should take GST registration as per section 24. But if you are dealing with notified handicraft goods, or you are a casual taxable person again dealing with notified handicraft goods, you need not go for GST registration provided you generate e-way bill every time when you are moving the goods. So the concept is simple. E-way bill will come into picture, of course, moment consignment value greater than 50,000. Even though the consignment value is not exceeding 50,000, in two cases e-way bill will come into picture. The two cases are: number one, interstate transfer between principal and job worker; number two, notified handicraft goods are being transported where you have claimed the relaxation from registration. Okay, the benefit of exemption from registration. Okay, in these two cases. Okay, and now one more interesting thing is Sir, in case of bill to ship to model, in case of bill to ship to model, so billing is done to one person, shipping is done to another person, bill to ship to model. So in case of bill to ship to model, sir, there are three persons involved and two supplies involved. In such cases, how many e-way bills should be generated? Only one e-way bill will be sufficient. I'll tell you one example. Listen, don't get confused. So for example, Vishnu is making a sale to Vamsi. Just write down. For example, Vishnu made a sale to Vamsi, and Vamsi made a sale to Vishwanath. Okay, this is sale 1, this is sale 2. Okay, now what is happening? Vamsi is asking Vishnu to directly deliver the goods to Vishwanath. Directly deliver the goods to Vishwanath, or we can also say ship the goods to Vishwanath. But Vishnu will be billing to whom? Bill to Vamsi. Vishnu will bill to Vamsi, ship to Vishwanath. So this is what we call as bill to ship to model. Here there are two sales, three parties, and there are two sales happening here. In such type of scenarios, how many e-way bills we should raise? Two e-way bills should be raised, or three e-way bills we should raise? The movement is happening only from Vishnu to Vishwanath. Only one movement, no sir. Then one e-way bill is sufficient. So in this case, only one e-way bill will be sufficient, and in the e-way bill I will be selecting an option bill to ship to model, and I will give billing address Vamsi, shipping address Vishwanath. Simple. That is what the concept. Okay. Right, so that is that point. And contents of e-way bill. E-way bill is generally the form number is EWB01, and e-way bill is divided into two parts, part A and part B. Part A will give the GST of the supplier and recipient, place of delivery along with the pin code. Based on the pin code only, the system will capture the distance, and based on the distance only, the validity of the e-way bill will be calculated. Next, the invoice and other relevant documents, whatever you have used to raise the e-way bill, maybe delivery challan, etc., that document number and date, value, HSN code, etc., and what are the reasons for transportation. Is it because of supply or job work or any other reasons? You have to give there. And in part B, the transporter document number, that is the goods receipt number or railway receipt number, railway bill number or bill of lading number, and vehicle number. And vehicle number is very, very, very important if it is transported by road, and without that, that shall not be valid. The e-way bill will not be valid without discussing this, giving this part B details that we will see in the subsequent pages also. Okay, so these are the contents of e-way bill. Next, who shall raise an e-way bill? This I have already discussed, the supplier or recipient or even the transporter. You can just go through that flowchart. There are certain key points here. Let us see those key points. Coming to the key points. So if you see the key points here, see, normally, first of all, any person who is transporting the goods, the person in charge of the conveyance, he has to carry along with him the invoice based on which you are transporting the goods, or the bill of supply, or the delivery challan, as the case may be. And along with that, they should carry the e-way bill. E-way bills, you understand, you can carry that in physical form, or you can carry that in electronic form, or the e-way bill can be mapped to a radio frequency identification device which is installed to the conveyance. That means it is just like a fast tag technology where you embed the radio frequency device, identification device to the vehicle conveyance. The moment the vehicle crosses a particular location, in that particular location the department would have installed radio frequency identification device readers. Just like how the vehicle crosses the toll gate, the fast tag will be scanned, the same way here it will be scanned, and all the information, whatever the e-way bills mapped to that device, that e-way bills will be tracked by the system, and system will take the information. So e-way bill can be carried in physical form, it can be carried in electronic form, or it can be even mapped to an RFID, and that RFID can be installed to the conveyance and it can be transported, right? So these are the things. So simple thing what we have to understand is, if you are a person in charge, that means you are the driver or the etc. of that particular vehicle, sir, while transporting the goods, you should carry along with you a basic document, the tax invoice or bill of supply or delivery challan, and along with the e-way bill. Okay, But the interesting thing is, if the transportation is done by railways, if the transportation is done by railways, they are not required to carry that e-way bill, but they will carry this tax invoice, bill of supply or delivery challan, and they will deliver the goods to you, or they will hand over the goods to you only when the e-way bill is submitted. That means they will not carry e-way bill. The railways will not carry the e-way bill. You, while going and taking the delivery of the goods, you should submit the e-way bill and take the delivery of the goods. So that is what one point. And next, as I already told you, in e-way bill there are two parts, part A and part B. Part B, without filling that, the e-way bill is not complete, especially when you are transporting it by road. But if you are transporting the goods within 50-kilometer radius of the same state, or union territory, from your place of business to the place of business of transporter, obviously from my factory gate to I have to take the goods to the transporter location. We are in same state within 50-kilometer radius. Again, from my factory to the transporter location, if I am taking the goods, again should I fill the part B details? Not required. Now please understand, when you are generating e-way bill, part A and part B. Part A, you will give all the details like supplier, who is the consignor, what are the goods you are transporting, how much you are transporting, from which location to which location, all the details, what is the GST rate applicable, date, tax invoice or delivery chalana, bill of supply, all these details will give. And in part B, you will give the mode of transportation, who is transporting, how it is getting transport, road or air or water, all that stuff. So those details. And if it is by road, you should give the vehicle number. That is very important. You should definitely give the vehicle number in the e-way bill. So here they are trying to tell that this vehicle number need not be given when, see, from your factory gate the goods are being transported to my factory gate. Okay, but for this you are bringing this goods to the transporter location. You are bringing the goods to the transporter location. From your factory gate till the transporter's factory or location, if it is within 50-kilometer radius and if it is within same state, no need of vehicle number, vehicle number not required. But from transporter location, obviously he has to take it to the factory of the consignee, correct? So there you will be filling the transporter can update the vehicle number details, or the person who has generated the e-way bill, the consignor, consignee, or even it can be assigned to a transporter. Transporter can update part B details. There is no such prohibition. So if you assign the e-way bill to transporter, transporter can update this vehicle number. And one more interesting thing is, see, for example, I am transporting the goods from Chennai to Delhi. Chennai to Mumbai, one transporter is taking. Mumbai to Gujarat, another transporter. Gujarat to Delhi, another transporter is taking the goods. So e-way bill can be assigned from one transporter to another transporter, from one transporter to another transporter, so that whenever the vehicles are being changed, the part B details can be updated. So understand here, one interesting thing is, part B details, that is the vehicle number, can be updated any number of times. The only requirement is, whenever the department people verifies the vehicle, checks the consignment and e-way bill, the vehicle number in the e-way bill and the vehicle which is actually carrying, both should match. That is the only requirement. So part B details, any number of times you want to update, you can update. And the part B details, the e-way bill can be assigned from one transporter to another transporter any number of times. And once you have assigned the e-way bill to another transporter, the old transporter cannot update the part B details. That is quite obvious, right? So that is what the concept here. Now what is the interesting point we are discussing now? So we have understood part B details are important for e-way bill, but part B details you need not mention if at all you are taking the goods from your place of business to transporter place and it is just within 50-kilometer radius, and that too within the same state, or from the transporter location to place of business of the consignee. For example, see, I am in Chennai. From my factory to transporter location, I am taking the goods. No need for part B details. Goods I am sending to Delhi. You are in Delhi. Goods reach Delhi. Transporter, the lorry has delivered the goods, entire goods in Delhi. In Delhi, now from transporter location to the consignee factory or godown, they are using a different vehicle. Now this part B details they need not update. That means simple transporter consignor, he will take it to the transporter. Let us say in Chennai. So transporter from Chennai, he is bringing it to his location, Delhi. Now the transporter has to deliver these goods to consignee in Delhi. Consignee in Delhi. So if this is within 50-kilometer radius, if this is within 50-kilometer radius, 50-kilometer radius, and that too within the same state. This is also within 50-kilometer radius, that is also within the same state. Then see, from this location to this location, and from this location to this location, even though part B details are not present, not updated, that is absolutely fine. So where you need the part B details? I need part B details mainly from this location to this location when the goods are being transported from Chennai to Delhi by the transporter. Hope I am clear. So in this journey, you might have changed the vehicle any number of times. So many number of times you can update the part B details. That is what just now we have discussed. This is what very important discussion in this e-way bill. Okay, right. Next, so I have explained in detail regarding the e-way bill to you. So regarding updating the part B details, and once, of course, as I told you, once the e-way bill is generated, a unique number will be generated after generating the e-way bill. And I have given you the details of transportation of goods from one conveyance to another conveyance if they are transferring. These topics we have already discussed. All these points I have discussed. You can shift it from one conveyance to another conveyance. Part B details of e-way bill has to be updated. No need to generate a new e-way bill. Next, transporter A has assigned the e-way bill to transporter B. So transporter A will not be able to make any updates in the e-way bill in future. That also we have discussed. As I already told you, vehicle number can be updated any number of times, but it should match with the actual vehicle carrying the goods. Okay, all that we have discussed. Next, suppose if the goods are being transported through e-commerce operator or courier agency, part A details also, normally I told you part A will be updated by consignor or consignee, and part B the transporter can update. But if the goods are transported by e-commerce operator or courier agency, part A details also they can furnish in the e-way bill. Next, whatever the details you are giving in part A of the e-way bill, that will be obviously available for you in GSTR1 for filing, so that for you the filing for of GSTR1 will be easy. Now one interesting thing is, sir, can I cancel the e-way bill generated? Yes, you can cancel the e-way bill generated within 24 hours from generating the e-way bill, but once it is verified in the transit, you cannot cancel the e-way bill. So cancellation of e-way bill is not possible if it has been already verified in the transit. For example, I am transporting the goods from Chennai to Hyderabad. I have made some mistakes, etc., etc. I cannot amend the e-way bill. I can only just cancel the e-way bill and generate a new e-way bill. So I want to cancel the e-way bill. Can I do that? Yes, you can do that, but only within 24 hours from the date of time of generation of e-way bill, you can cancel that. But sir, during the transit already the department has verified the e-way bill, sir. What should I do? No, you cannot cancel. Okay. As I already told you, e-way bill acknowledgement number will be generated, and that will be like e-way bill will be valid for 15 days for the purpose of filling part B details. See, part A you can fill, and only after filling part B there will be a successful e-way bill number generated. And sir, when transporting the goods, part B is all about vehicle details. No, sir. I know what goods I am transporting. I will hand over it to the transporter. But transporter will transport it in which vehicle? Those details I don't know, sir. How can I fill part B details? Don't worry. For you, first fill part A, then go to the transporter. Then transporter can fill part B details. So 15 days, this part A will keep on waiting for you to finish part B and generate the e-way bill. Next, once e-way bill is once generated, e-way bill cannot be edited for any mistake. As I already told you, only option left is it can be cancelled within 24 hours, right? So that is what the key points here. Now let us move on to the next one, consolidated e-way bill. So consolidated e-way bill, if you see, See, when the transporter, anybody who has to carry the e-way bills along with them when they are transporting the goods, they'll be having multiple consignments, multiple e-way bills. Instead of carrying all the multiple e-way bills, they have an option to generate one consolidated e-way bill. That means all 100 consignments, whatever I'm transporting, I have 100 e-way bills in my hand. I can consolidate all the 100 e-way bills, and I can make it a one consolidated e-way bill and happily can transport that. This consolidated e-way bill will not have individually any validity, because in the consolidated e-way bill there are multiple e-way bills. All those multiple e-way bills will enjoy their own validity. So as such, consolidated e-way bill shall not have any separate validity. Okay. And one important point you should understand is, see, when there are multiple invoices, yes, of course you should generate multiple e-way bills, that is mandatory. And once you generate multiple e-way bills, you can consolidate them and give a consolidated e-way bill. But for multiple invoices, you cannot give a single e-way bill. Okay, so that is what the concept. Okay, that is simple one, consolidated e-way bill. Next, the form number is form EWB02, normal e-way bill EWB01. Okay, now as we were discussing about validity, you know, validity of e-way bill depends upon through what mode you are transporting the goods. Okay, so what is the validity of e-way bill? So the validity of e-way bill depends upon through what you are transporting it. So if at all you are transporting through over dimensional cargo or multimodal transportation shipment in which at least one leg involves transportation by ship. First of all, over dimensional cargo. Over dimensional cargo means nothing but you will be seeing some lengthy lorries on the roads which are used for transporting the goods, all that stuff, right? So they are called over dimensional cargos. That means the vehicle is over the dimensions which are prescribed as per the Motor Vehicles Act, all that stuff. So it is a over dimensional cargo, so you can understand the speed they travel, correct? So for them we are giving a very good luxury that sir, up to 20 kilometers 1 day validity. After 20 kilometers, every 20 kilometers are part thereof also you'll get one additional day. That means simple, every 20 kilometers they will get 1 day validity. Every 20 kilometers 1 day validity if at all transported through over dimensional cargo or multiple modes of transportation is involved. That means like different modes of transportation are involved in transporting the goods, part train, part road, part water. So where at least one leg involves a ship, in such cases 20 kilometer will be the validity. That means every 20 kilometer or part thereof 1 day validity will be there. If it is 42 kilometers, 3 days validity. If it is 61 kilometers, 4 days validity, right? So every 20 kilometer or part thereof you will get 1 day validity. Sir, other than over dimensional cargo, that means normal lorry I am using to transport, sir, or we are transporting through trains, or fully trained, such cases, other than this over dimensional cargo or multimodal transportation where one leg involves ship, other than that cases, every 200 kilometers 1 day, additionally every 200 kilometers are part thereof additional 1 day. That means here 20 kilometers, here 200 kilometers is the limit. See, now for example, I am transporting the goods from Chennai to Bengaluru. Okay, imagine, just for example, let us assume, see, in e-way bill, while generating the e-way bill, if you enter Chennai from which place you are transporting the pin code, Bengaluru to which place you are transporting the pin code, system only will calculate how many kilometers it will be transported. So you need not worry about filling the kilometers there. So system will calculate. Imagine system has calculated 404 kilometers. 404 kilometers. I am transporting that through lorry, and e-way bill I have generated on 2nd June. Clear? So how many days validity here? 404 kilometers means 200 into 2, 400, so 2 days. Extra 4 kilometers is there, so every part thereof one extra day will come. So total 3 days validity will be there. And how to calculate these 3 days? Just like in your bills of exchange, how you learnt in your CA foundation, etc., accounting. 2nd June I have raised e-way bill, leave that 2nd June, 3rd June, 4th June, 5th June. So e-way bill shall be valid till 5th June. It is 5th month, not 8th. So e-way bill shall be valid till 5th June. So that is the validity, right? I repeat, when the e-way bill is generated, that particular date you ignore and then start calculating, so that you will be doing it perfectly. In the law they would have given some crazy sentences, let us not worry about that. Okay. Next, sir, suppose if there are any natural calamities or law and order issues, or some delay in transshipments, accident of the conveyance in which we are transporting, all that. In such cases, whether e-way bill validity can be extended? Yes, it can be extended by the transporter, and you can extend that within 8 hours from the expiry of the e-way bill validity by giving the proper reasons online. Okay, and e-way bill generated in one state or union territory, it will be valid across the country. You need not generate separate e-way bills every state where you are transporting the goods. For example, I'm transporting from Chennai to Delhi, I'm crossing some 5-6 states. For all the 5-6 states, one e-way bill shall be valid. You need not raise e-way bill each and every state, for each and every state. Okay, so that is what the point. And one more interesting thing here is, see, you are transporting the goods from one location to another location. You don't want to give the details of actual buyer. You know my GST number and you are giving my GST number and you are filling my details in the consignee details. Possible or not? So you are raising an e-way bill on me even though you are supplying the goods to a different fellow. So the law has given you an option that when any e-way bill has been generated in your GST number, you will get even a message to your mobile number and mail ID which is registered with the website. So you have an option to either accept it or reject it. If you want to reject it, straight away reject it, but you should do that within 72 hours from the details made available in the common portal or time of delivery, whichever is earlier. If you don't do anything, if you keep silent, then it is treated as accepted. Only when you reject, it will be rejected. If you are silent, it is treated as accepted. If you want to accept or reject, whatever you want to do, you can do that within 72 hours from the time of generating the e-way bill and making that details available to you in the common portal, or till its delivery, whichever is earlier. And I repeat, if you don't do anything, it will be treated as acceptance. So that means if you want to reject only, you have to respond. Otherwise, if you keep quiet, that is more than sufficient. It will be treated as acceptance. Okay, so that is the acceptance or rejection of e-way bill. So e-way bill not required in the following cases. So in this, nothing concept involved to discuss. So in what and all circumstances e-way bill generation is not required? Out of this, just remember some 4-5 points, easy points. Suppose if they are asking any straight theory question, write down 6 circumstances or goods where e-way bill generation is exempted, like that. So you can write the answer. There is only one clarification here. The clarification is, generally in this exemption from e-way bill, jewelry, goldsmiths and silversmiths wares and other articles, like that, a point was there. People after reading this jewelry, they got a doubt, sir, whether it is actual jewelry or imitation jewelry is also covered here. Imitation jewelry means, you know, that fake jewelry, the duplicate one. So that was a doubt. Even while transporting imitation jewelry also, we need not raise e-way bill or what, like that, they got a doubt. But the department has clarified, except imitation jewelry. That means when you are transporting the imitation jewelry, then e-way bill has to be generated. That is what the concept. Okay, so these are the cases where e-way bill need not be generated, and invoice reference number, you can just go through that. Next, verification by proper officer, verification of e-way bills and verification of conveyances. You know, the proper officer, either the commissioner or any officer authorized by the commissioner, what they can do, they can intercept any conveyance. That means they can stop any conveyance to verify the e-way bill, either in physical copy, I told you already, either it can be in physical form, electronic form, or through RFID. Yes, it can be mapped. So I already told you, sir, just like in the toll gates, how they will fix this readers, scanners. Commissioner, what he will do, he can install this RFID readers at appropriate places, so that when the movement of goods and vehicles will be verified through that readers, and the e-way bill data which are mapped to that device can be collected. I already told this point to you. And one more interesting thing here is, see, when the law is giving power to the proper officer to stop any vehicle and verify the e-way bill, it is not like that when the proper officer has fought with his wife and coming to the road and stopping every damn vehicle and asking for e-way bill. It is not like that. Even the proper officer has some sort of responsibility on him. If he is stopping any vehicle and checking the e-way bill, even they have to prepare a summary report of every inspection what they have done online in part A in the prescribed form within 24 hours. That means once this inspection everything is done over, what and all the vehicles they have intercepted, what and all the e-way bills they have verified, regarding that they have to first prepare, the proper officer has to first prepare a summary report and should submit that online within 24 hours, and the final report shall be submitted within 3 days from the date of such inspection. Suppose if the proper officer says, sir, during that like inspection it was very cold weather, sir, during night time we have did all that stuff, so I felt like a little bit cold and fever was there, so I was suffering from fever from last 3 days, I could not prepare the report, all that, so he can ask for an extension also. Then the final report can be extended by further period but not exceeding 3 days. Law has given you 3 days, extra 3 days can also be given by the authorized officer. Okay. And one more interesting point is, once a physical verification is done in any state, no further verification in any other state unless there is a specific evidence or information regarding tax evasion. Otherwise, once the e-way bill is verified, the vehicle is stopped, the conveyance is stopped, and e-way bill has been verified, it will not be stopped anywhere else again. So that is what the point. Next, conveyance. Just like stopping and verifying the e-way bill, the physical verification of conveyance also can be done by the officers. And in case any information about tax evasion, physical verification of conveyance can also be carried by any officer after obtaining the necessary approval from the commissioner. Generally, who should do? Authorized officer or commissioner should do. Any other officer, if he has an information that there is some tax evasion, just like in Pushpa movie they are smuggling the red sandalwood, etc., etc., kind of thing, then they should go to the proper officer and they should get the authorization, everything in writing, and then they can do this. Okay. Suppose you are stopping the vehicle and you are harassing that conveyance, the person in charge, etc., etc., they also have a luxury here. If the vehicle is intercepted and detained for a period of more than 30 minutes, transporter may upload the said information in the common portal. That means in the government website they can report here, sir, our conveyance has been stopped for more than 30 minutes. Okay, so please ask your proper officer to leave us. Like that you can upload in the common portal. So this is regarding verification by proper officer, the e-way bill as well as conveyance. Now the last topic in this chapter is nothing but blocking of generation of e-way bill. So the last topic, very important topic here, is blocking of e-way bill generation. You know, one interesting thing here is, see, when we are generating the e-way bill, please listen carefully. When we are generating the e-way bill, there are three parties involved: supplier, recipient, transporter. Now Vishnu here has defaulted in certain things, and when you want to punish Vishnu, sir, Vishnu is prohibited to be acting as a supplier in any e-way bill. That means if I supply something to you, you cannot generate e-way bill, transporter cannot generate e-way bill, nobody can generate e-way bill, because in this e-way bill supplier column, you should fill my name Vishnu Vardhan, but that is not possible. My GSTIN, the supplier's GSTIN, e-way bill generation shall be blocked. That means if I commit some mistake, if I supply something, e-way bill cannot be generated even by me, even by you, or even by the transporter. I repeat, if I have committed some mistake and if my e-way bill generation is blocked, I have made a sale to you, I have made a supply to you, I cannot generate e-way bill for sure. You cannot generate e-way bill, transporter cannot generate e-way bill, nobody can generate e-way bill, because in the e-way bill, in the supplier column, you have to of course put my GSTIN because I am the supplier, but system will not allow that. Suppose if I am buying something from you, my GSTIN should be entered in the recipient GSTIN column, consignee GSTIN column. So you can raise e-way bill if you sell something to me, then I can raise e-way bill. That means, simple terms, only you want to punish Vishnu, Vishnu's sales, whatever Vishnu is making sale, on that sales Vishnu cannot generate e-way bill. Vishnu is making some purchases, can we generate e-way bill? Yes, you can generate e-way bill on that. That means here, in simple terms, e-way bill generation will be blocked only on sales but not on purchases, am I clear? That is what the concept. Okay sir, when will you block my e-way bill generation on my sales when I cannot generate e-way bill? See, when I am a supplier who is paying tax under composition scheme and not furnished my quarterly statement consecutively 2 quarters, you know, composition taxpayer every quarter he has to pay the GST liability by filling the form GST CMP 08. So 2 quarters continuously I have not did that, so my e-way bill generation will be blocked. Sir, no sir, I am not under composition scheme, I am under regular scheme. I have not filed my returns consecutively for 2 tax periods. I am under regular scheme, I have not filed my GSTR1. So here they are talking about GSTR 3B. 3B. Okay, here GSTR1 continuously for 2 months or quarters, or my registration has been suspended under rule 21A. In these cases, in these 4 cases, I cannot generate e-way bill. E-way bill shall not be generated. Okay, now the point is, listen carefully. Simple. You are a composition taxpayer or any taxpayer. Composition taxpayer means continuously 2 quarters not filed the statement, that means not paid the taxes. If you are under regular scheme, again 2 months or 2 quarters as the case may be, you have not filed your GSTR1 or GSTR 3B, then your e-way bill shall be sorry, your e-way bill generation shall be blocked. And when your registration is under suspension also, your e-way bill generation shall be blocked. That is what the concept. Suppose if the commissioner on sufficient cost being shown, and he has to record that reasons in writing. It is not like you just show some sufficient cost and he will give you relaxation. He will be allowing you to furnish party of GST EWB 01. That means he will allow you to file GST. He will allow you to sorry, he will allow you to generate e-way bill. Okay. Suppose if you ask and he is not allowing you, then he will give you first reasonable opportunity of being heard, then only he will reject your request. So that is what with respect to e-way bill. So students, this video is all about a small chapter, accounts and records. Nothing great concepts involved, but just the period of retention of the accounts and records that is there, and some small things we'll just discuss and finish off. First, before going to this chapter, we should know the meaning of place of business. Place of business is nothing but generally where, from which place you carry on the business, and also it includes the warehouse, the godowns, or any other place where taxable person stores his goods, supplies the goods, or receives the goods or services, or both. And also any place where he is maintaining his books of accounts is also called as place of business as per the definition. And also if the taxable person is carrying the business through his agent, that particular place is also called as place of business. Okay. Right, now coming to the point, as we are discussing GST law, obviously you know who has to maintain the books of accounts as per GST law. We are only worried about the registered person. Registered person shall maintain the accounts and records where he has to maintain at his principal place of business. But any books related to the place of business other than the principal place of business, we call it as additional place of business, then the books shall be maintained at that particular additional place of business. Suppose if we find these documents, registers, or any books belonging to the registered person anywhere else apart from the premises mentioned above, so other than those mentioned in the certificate, then it will be presumed by the lawmakers that the registered person only maintaining the books of accounts there. You cannot say, sir, my accountant took away the books and he has kept there, sir. Like that you cannot argue. First, prima facie, the department will assume that if we find the books of accounts in a place anywhere other than this place of business or additional place of business which is declared in your registration certificate, then it is presumed that you are only maintaining that books in that particular location. Okay. What accounts we should maintain, sir? Of course, it is not true and fair, it is not your auditing. You should maintain the accounts true and correct, clear. So regarding your production, manufacture, inward and outward supply, the stock, the ITC available, output tax, and other particulars as may be prescribed. Now, what are the other records which are prescribed? If you see the additional records, The prescribed records are regarding the goods and services which are imported and exported, you should maintain. Whatever the RCM supplies you have received, those things you have to maintain. And regarding the advances, you have to maintain the details. The important and interesting thing is, sir, the name and complete address of your both suppliers as well as customers. That means your vendors as well as your uh, customers from whom you are buying and to whom you are selling. These people's names and complete address you have to maintain. That is very important point. Please remember, not just for exam, for your practice. Okay, so complete address of the premises where goods are stored by him, including goods stored during the transit when you are transporting the goods, all the stuff where you have any practice of storing the goods during the transit. If at also, what is the location, all these details you have to maintain. Sir, okay, I will maintain these details. How should I maintain? You can maintain them manually or you can maintain them electronically. But if you are maintaining them electronically, you should have a proper electronic backup, so that suppose by chance, if in the event of any destruction of the records, all that stuff, due to accidents or natural causes, all that, you should be in a position to restore that data within the reasonable period of time. You cannot say that because of the floods the information is gone, the database has crashed, all that stuff, the software has crashed, the data is not available, like that you should not say. You should be in a position to retrieve the data as soon as possible within the reasonable time. That means you have to maintain a proper electronic backup. Next, when the department is demanding you, obviously the registered person shall produce the records on demand, maybe in an electronic copy or it can be hard copy also, as per the requirement of the officer. And also when they are asking you the files and passwords, you should share them, and along with the explanation reasons of that files and all that codes whatever has been maintained. And you should not be erasing or overwriting anything in the books of accounts. Yes, of course. So no entry has to be erased or overwritten. Okay, so these are small basic things. Next, sir, if you are supplier other than composition dealer, that means for normal suppliers, in this particular list I have given who is the person, what are the details he has to maintain. For normal suppliers, what are the details they have to maintain? Stock of goods they have to maintain, opening balance, receipt to supply, goods lost, stolen, destroyed, written off, disposed of, which are given as gift or free samples, or any balance stock lying, including raw materials, finished goods, scrap, wastage, all that stuff. And also details of tax you have to maintain, the tax payable including RCM, ITC, and register of tax invoices, credit note, debit note, delivery challan, all the documents whatever you are issuing, all these details you have to maintain. If you are acting as an agent of somebody, who and all gave you authorization, all those details. What is the description, value, quantity of the goods or services provided by you on behalf of that principal? So what are the accounts you have furnished to every principal? Next, what are the taxes paid on receipt or supply of goods, all this stuff you have to be maintaining the details. If you are a manufacturer, you have to maintain these details. If you are a service provider, you have to maintain these details. No concept, nothing involved, just go through who is the person, what are the documents he has to maintain. Okay, so these are the things. Failure to maintain the accounts, you will be liable for tax payments, as if you are not accounting any goods or services, it will be treated that as if you have supplied them, and you will be liable to pay tax under section 73 or 74. Okay, these and all are small things. Now the important thing here is, small things means I am not saying that they will not be tested, but they are not like required to be discussed. You can just go through with them. Period of retention of accounts, the important thing here is, sir, how long I should maintain the books of accounts, the law says you should maintain the books of accounts for a period of 72 months from the due date of filing annual return. For example, you are going with financial year 23-24. 23-24 financial year, due date for filing annual return is what? 31st December 2024. So from 31st December 2024, 72 months, that means 31st December 2030. Till that period, or 1 year from the final disposal of the appeal, if at all anything is there with respect to that financial year, whichever is later. That means generally for 23-24, sir, there is no appeal lying in front of any appellate authorities, all that stuff, sir. Then I should maintain the books of accounts till 31st December 2030. But imagine you got a GST notice, and there is a demand of, let us assume, some 10 lakhs or something, demand notice of, let us assume, 23 lakhs. You have filed an appeal against the demand notice. This demand notice is related to 23-24 financial year, and for that you have filed an appeal. You got a notice and you have filed an appeal, and it got disposed on 2nd June 2032. 23-24 you got a demand notice for 23 lakhs, and for that you went for an appeal, and that appeal was disposed. The final judgment was given on 2nd June 2032. Now 23-24 data, how long you should maintain? See, 2032 they are giving the final judgment. Before giving the judgment, the judge is asking you, or the appellate authority is asking you to produce certain documents. What you will say? Sir, 31st December 2030 itself, I just went to Bay of Bengal and all books of accounts I have thrown into the ocean, sir. Sarvam Sri Krishna Arpanam, like that I told, and I have left the books of accounts into the ocean. Can you say that way? No, the law says when there is an appeal, please make sure you are retaining the books until the disposal of the appeal. So you should compare two things. Number one, 72 months from the due date of filing annual return of the uh, relevant financial year. Okay. Or 1 year from the date of disposal of the appeal, whichever is later. In this case, if you see, I will compare. Books of accounts should be maintained for the financial year 23-24 till 31st December 2030, or 1 year from the date of disposal of appeal, that is 1st June 2033, whichever is later. So till this date I should maintain the books of accounts of financial year 23-24, right? So that is what the concept. So with this we are done with accounts and records just in 9 minutes. Hello students, in this video we are going to see a chapter called payment of tax, a very small and important chapter. So in this chapter mainly we are going to discuss about e-cash ledger, e-credit ledger and e-liability register, and very importantly the interest calculation for delay in payment of tax and interest calculation for wrongly availed and utilized ITC. So let us quickly go into this. Now coming to the first topic, e-cash ledger. See, understand, in e-cash ledger, obviously you know in GST there are three ledgers: cash ledger, credit ledger and liability register. Leave liability register aside, let us talk about cash ledger and credit ledger. Cash ledger, first of all, what is the use of cash ledger? Cash ledger is just like your Paytm wallet in GST. So you log into your GST portal, there will be a cash ledger. So whatever the GST payable in cash, you first upload the cash into the cash ledger. From cash ledger it will be made, like the payment will be made to the government. So it is just like any cash payment to be made under GST. First the amount should be deposited in cash ledger. From cash ledger it will get deducted. Now, sir, how do I upload money into the cash ledger? For uploading money into the cash ledger, you have two methods. One is online method, the other is offline method. So online method, you can use internet banking, UPI, IMPS, credit or debit card without any monetary limit. Coming to offline, you can use NEFT or RTGS, again no monetary limit. But there is one interesting thing: over the counter payments. The over the counter payments means into your e-cash ledger you take a challan, go to the bank, over the counter you make the payment, and the amount will be reflected in your e-cash ledger. But understand, for this e-cash ledger paying through over the counter, only 10,000 you can pay per challan per tax period. You cannot go more than that, because you know now it is like going towards cashless economy, so we don't want to encourage this over the counter. And of course nowadays nobody are going to the counter and making all these payments. We are using internet banking and making the payments, so no need to worry about this. But theoretically, just understand, over the counter payments 10,000 per challan per tax period will be the limit. But this 10,000 limit is not applicable for government departments or persons notified by the commissioner. You know, don't trouble the trouble. For government departments, this 10,000 limit is not applicable. Over the counter, they can make the payment how much ever they want. Next, for any proper officer or authorized officer who is recovering the outstanding dues from any taxpayer, then see, understand, when they are recovering the tax dues from the taxpayer by selling their mobile properties or immobile properties, all that stuff, if they receive some cash, they go to the bank and make payment over the counter. Then the bank cannot say no, over the counter payment limit is just 10,000, like that you cannot say. So for such people who are recovering the outstanding dues, okay, so for that proper officer, over the counter payment 10,000 limit is not applicable. Next, anybody, proper officer or any other authorized officer who is authorized to collect the amount by way of cash, check or DD during any investigation or enforcement activities. Okay, during investigation or enforcement activities, if any proper officer is authorized by the department, yes, you can collect any amount by cash or DD, all that. then he can collect it and can go and deposit it in the bank. Over the counter 10,000 limit is not applicable. I repeat, we have two methods to deposit cash in the cash ledger: online and offline. Online, no monetary limit, you can go with internet banking, debit card, credit card, UPI, IMPS, all that. Offline banking, NEFT and RTGS, no limit, but over the counter you go and make the payment of cash 10,000 per challan per tax period is the limit, and that limit is not applicable in three cases. Number one, government department and authorized persons. Number two, proper officer who is recovering the outstanding dues by way of sale of movable or removable property of the taxpayer. Number three, any proper officer who is authorized to collect any amount by way of cash or DD during the investigation or enforcement activities. So these three cases, this 10,000 per challan per tax period shall not apply. Okay, so that is regarding e-cash ledger. And e-cash ledger, you can generate, first what we have to do, sir, first we have to generate a challan, whatever is the outstanding amount, CGST 100 rupees, SGST 100 rupees, IGST 200, like this, whatever the amount is there, that challan you should generate and you should make the payment. Okay, so regarding the challan generation, once you generate the challan, obviously the challan is valid for 15 days for making the payment. Within the 15 days you should make the payment, otherwise the challan will get expired. You should generate a new challan. But no need to worry, everywhere in GST it is online challans. So whenever you want to generate a challan, you can generate a challan. Once you generate a challan, a common portal identification number, which is a 14-digit unique number, will be generated. Once you make the payment, 3 digits will be added to that 14 digits, that is the bank code, and it will be treated as CIN, challan identification number, which is a 17-digit unique number. Okay, so this is what the CPN plus 3-digit bank code will become CIN. So I repeat, there are two wordings here. One is common portal identification number, the other is challan identification number. Common portal identification number is 14-digit code, challan identification number is 17-digit code. First you generate a challan, common portal identification number will be generated. Once you make the payment, then only it will become challan identification number. For making the payment, CPIN, the challan will be valid for 15 days. That is what regarding the challan. There are various other small points which you can just go through that. Okay, next, coming to the next one. In GST now there are no more physical challans, as I already told you, only online challans, that is mandatory. Even to make over the counter payment, first you generate challan online, take the printout and go to the counter and make the payment. So challan is online. Okay, and for multiple taxes or multiple fees, penalty, interest, other payments, all that, whether it is CGST, SGST, IGST, UTGST, whatever it is, in GST there is only one single challan, no need of going for multiple challans. Okay, so that is what the point. These two are the important points. Now coming to the very important aspect, how do you utilize the balance in this e-cash ledger? How do you utilize the balance in e-cash ledger? See, we have seen in ITC chapter how do you utilize e-credit ledger balance. There are some rules for utilization of ITC balance, if you remember. Same way we have some rules for using this e-cash ledger balance. Before going to that rules, please understand this is the format of e-cash ledger. This is the format of e-cash ledger, and of course this is the format of challan also. Challan also will be same like e-cash ledger only. So this is the format of e-cash ledger. E-cash ledger format. Okay, this is also the format of challan or e-cash ledger format. Now in this e-cash ledger, please understand, there are major heads and there are minor heads. These are called as major heads: IGST, CGST, SGST, cess, GST compensation cess. Either there will be SGST or there will be UTGST, you know that. Under each major head there are 5 minor heads: tax, interest, penalty, fees and others. Okay, now please understand how do you use the cash ledger balance. Please understand, for example, imagine we have 100 rupees balance cash available in e-cash ledger IGST tax, but I have a liability in CGST tax 20 rupees. I have a liability of CGST tax 20 rupees. Can I use this 100 rupees for paying this 20 rupees? Yes or no? Can I use IGST tax balance for paying CGST tax? The answer is no. Why? Because in we are not seeing e-credit ledger. This is e-cash ledger. In e-cash ledger, interhead utilization is not possible. Interhead adjustment is not possible. Okay. Okay, sir. Fine. That means if you want to pay CGST tax, IGST head cannot help you. Okay. Sir, I have IGST late fees 20 rupees, sir. At least for this, will you allow? IGST tax 100 rupees can I use for IGST? Late fees 20 rupees? The answer is again no. The answer is again no. So, simple words, no interhead adjustment. Sir, leave about interhead adjustment. Intra-head adjustment itself is not possible in eCash ledger. Are you understanding the point? In eCash ledger, intra-head adjustment also not possible. That means if you want to pay CGST tax, you should have money only in CGST tax. If you want to pay IGST late fees, you should have money only in IGST late fees. Are you understanding the point? Intra-head adjustment and inter-head adjustment not allowed. But one good amendment they have brought, of course, old amendment only, one good amendment they have brought in later on, that is, now you have 100 rupees in IGST tax. But where is your liability? Your liability is in CGST tax. Balance money is in IGST tax. So they have amended the law in such a way, IGST tax, you can transfer the balance to CGST tax, how much ever you want. That means from one head to another head you can transfer, from one head to another head, any major head, any minor head. That means I want to transfer it from IGST tax to GST compensation cess tax. I can transfer from 100 rupees, I want to transfer 100 rupees, I want to transfer 20 rupees, I want to transfer 30 rupees, whatever it is. From IGST tax, I want to transfer money into CGST interest column. I can transfer, yes. See, just like how you can transfer money from your account to somebody else's account, the same way we are seeing here, e-cash ledger balance under one minor head of any major head. Under one minor head of any major head can be transferred to any minor head of any major head. That means from anywhere to anywhere you can transfer. I repeat, set off is not allowed, but you can transfer. That means simple terms, IGST 100 rupees you have money, CGST 20 rupees payable is there. First what I will do is, first I will transfer IGST 100 rupees whatever the balance is there. From that 20 rupees I will transfer to CGST tax 20 rupees. Now I will go on set off. It means immediate set off is not possible. First transfer the money to the required accounts and from there you can go and set off happily. Clear? That is one beautiful relaxation. So here I have given a clear notes regarding that also. So you can just pause the video and copy it. So this is what the story. So e-cash ledger, intra-head adjustment, inter-head adjustment, both are not possible. But you can transfer money from any minor head of any major head to again any minor head of any major head. Hope that is clear for you. Right? So first transfer the funds to the required heads and then proceed to settle the liabilities. Hope it is clear for you. Right? So that is what the concept. Okay, now coming to the next one. One more interesting thing here is you can transfer your e-cash ledger balance to your distinct person's e-cash ledger. That means simple, you are registered in two states. For example, Vishnu Vardhan is registered in Tamil Nadu and Vishnu Vardhan is registered in Karnataka. Okay, now in Tamil Nadu I have registration, Karnataka also I have registration. Both the cases I will have the login ID, password, two accounts. Now in Tamil Nadu what will happen? Sir, Tamil Nadu also I have a cash ledger, Karnataka also I will have a cash ledger. From Tamil Nadu cash ledger I can send the balance to Karnataka cash ledger. Are you able to understand the point? From one cash ledger of you only, of the same person, can be transferred to the another cash ledger. So here from this cash ledger you can transfer it to another cash ledger, IGST or CGST accounts, not SGST account. Are you understanding the point? IGST or CGST accounts you can transfer it. And see, that means what I can do, e-cash ledger from one head to another head I can happily transfer within the e-cash ledger. This is within e-cash ledger, this is within cash ledger. But here what we are discussing now, sir, from one cash ledger of the same person to another cash ledger of the distinct person, whatever is there, can be transferred to IGST and CGST accounts, to IGST and CGST accounts. But for that, this cash ledger, who is making the transfer? For example, from Tamil Nadu cash ledger, I am transferring to Karnataka cash ledger. No, in Tamil Nadu cash ledger, amount you are transferring, you can transfer it to Karnataka cash ledger, IGST and CGST account, not to any other account. But you only tell me, once I enter into Karnataka e-cash ledger, I am sending 1000 rupees from this Tamil Nadu cash ledger to Karnataka cash ledger IGST. Internally now, I can transfer to whichever account I want. That means directly SGST you cannot transfer. You have an indirect route. Simple. So Tamil Nadu cash ledger too, you can transfer it to Karnataka cash ledger, only CGST or IGST accounts. But once it reaches CGST and IGST accounts, internally you can transfer it anywhere. That option is there, so that you can use if you want. Okay. But first to transfer like this from Tamil Nadu to Karnataka, in Tamil Nadu first the liability should be zero. If you already have some liability in Tamil Nadu, first you settle your liabilities in Tamil Nadu, then you can make transfer to Karnataka. So the condition is which cash ledger, from which registration you want to transfer. First under that means the transferor from that particular place, there the liability should be zero. There should not be any liability, then only the transfer is allowed, otherwise it will not be allowed. Hope I am clear with this. Right. So now that is what regarding cash ledger. Now coming to credit ledger. Credit ledger, you know already, utilization of credit ledger we have seen in ITC also. And one small important point here is we have to see credit ledger can be used only for paying tax, not anything else. In cash ledger, if you see, cash ledger we have seen interest, late fee, penalty, others, all that. But while discussing utilization of credit ledger, we have not discussed all that stuff. We have discussed only first IGST, ITC balance should be made zero, all that stuff. So we have not discussed their late fees, interest, penalty. Like this format we have not seen before while discussing the credit ledger rules for utilizing the ITC balance, because e-credit ledger balance can be used only for payment of taxes, interest, late fee, penalty. All these things should be paid only by cash. Okay, so now coming to the point, they have given some clarifications recently, the same thing which you know, but just because they have given, we are discussing. Simple, sir, whatever the amount available in e-credit ledger, can it be used for making payment of any tax under GST law? Here one interesting point is there, that is, the e-credit ledger balance, yes, of course it can be used to pay output tax. Okay, that means whatever I have to pay under RCM liability, can I use credit ledger balance? No. So excluding tax payable under reverse charge, because tax payable under reverse charge is not my output tax, it is my input tax. Hope you are clear with the technicalities. So e-credit ledger balance can be used only to pay output tax, not anything else. Whatever the liability coming under reverse charge mechanism is my input tax, not my output tax. So I cannot use e-credit ledger balance for paying the tax under reverse charge mechanism. This is one thing. Okay. Next, one more doubt is whether amount available in e-credit ledger can be used for making payment of any liability other than tax under GST laws. We understand e-credit ledger balance can only be used for what? Output tax payments under CGST or IGST or SGST, the respective acts, not for anything else. And I have already discussed it cannot be used for paying interest, penalty, late fees, or any erroneous refund sanctioned in cash. This is one important point for you. So remember this point. What is this point now? Suppose you have applied for some refund under GST. That is an erroneous refund. You also applied it by mistake and department also sanctioned it by mistake. Imagine if at all that has happened. So the refund has happened. The refund is given to you in cash. So when the refund is given to you in cash, later on, when it is an erroneous refund, when they came to know that it is an erroneous refund and the department is asking you to pay back, what you will say? Sir, I have my e-credit ledger balance, sir, I will use it. You cannot say that way. Please understand, you have taken the refund in cash, so pay that in cash. You cannot use e-credit ledger balance. Suppose for example by mistake I applied 1 lakh rupees refund from GST department. That is wrong, but I have applied by mistake. Even department has granted to me. Now tomorrow when department has identified that and asking that amount back, I have e-credit ledger balance 1 lakh rupees sir, we'll adjust with this. Like that you cannot tell. Okay, whatever the refund given to you in cash erroneously, that should also be paid in cash only, but not by using e-credit ledger balance. Okay, that is another interesting point here. Next, sir, what about the amount available in cash ledger, sir? Can it be used for making any payment under GST law? Of course, cash payment, cash ledger balance is just like money in your pocket. You can use it for any payment. Okay, so used for making any payment. You can pay tax, you can pay interest, you can pay penalty, you can pay fees, or any other amount payable under the provisions of GST law. Okay, so that is one interesting point here. Hope it is clear for you. And one more interesting point here I just forgot to tell you is e-credit ledger balance can be used to pay output tax which has been self-assessed or as a result of GST loss. That means as per any other recovery proceedings, etc., etc., when the department has identified that you have to pay some tax, for paying that tax, whether it is self-assessed or whether it is assessed by the department, you can use your e-credit ledger balance as long as the amount is tax. But if they are charging any interest, late fee, penalty, you have to pay them only in cash. Okay, so credit ITC balance can be used for paying even self-assessed tax or any demand from the department. Any demand from department, but there should be other than interest. Other than interest, late fees, penalty. Hope it is clear to you. Next, right, so with that we are done with the clarification also. Next, electronic liability register. Obviously the liability under GST, sir, how do you discharge the liability first? That is what the point. GST liability, you know, either you can discharge it by credit ledger or cash ledger. Okay, sir, what is the order of discharging the GST liability, sir? See, liability you can either pay in use e credit ledger or use e cash ledger, as the case may be. Now the point is, see, what is the order to discharge that liability? The order to discharge the liability is, first of all, you should pay all the self-assessed taxes and other dues of the previous tax periods. That means for paying Feb month liability, I should have paid Jan month liability. So first, if I pay Jan month liability only, I can then pay Feb month liability. Only if I pay Feb month liability, I can pay March month liability. For example, November month I have a liability of 1 lakh, but I don't have money to pay it. So I did not file my GST returns and I did not pay tax. December month my liability is just 5,000. I have 5,000 money, so I want to file my December month return and want to pay December month tax. Can I do that? The answer is no, because understand, to discharge the current tax period liability, you should have discharged the previous tax period. So the order is, first pay the tax dues of previous tax period, then come to the current tax period, then only if any other dues including the demand, okay, any demand notices, etc., etc., are there, that you can settle. That means by any chance if you have got any demand notice from the department, you cannot pay or discharge the demand notice liability without paying the previous and current tax periods. Hope it is clear for you. Okay, so in all these cases, wherever they are talking about other dues, they are talking about interest, penalty, late fee, or any other amounts. Okay, so this is the order in which you have to discharge the tax liabilities. Okay, simple one. Next, what are the benefits of like new payment system? As we have discussed, online payment, everything they have brought into picture. So what are the benefits of that they have given? You can just go through that once. 24/7 payments, no need to wait in queues, all that stuff. So basic thing, you can just finish it off. Now the last concept in this chapter is interest. Very, very, very important topic. Okay, interest on delayed payment of tax. Section 50 read along with Rule 88B. So now coming to the interest calculation at your CA inter level, we have three circumstances where interest will come into picture. First of all, see, there is delay in filing of return, and because of that there is delay in paying tax. In that case, interest will be there, and interesting point is interest will be from after the due date till the date of payment, but interest will be only on net liability. But whereas in any other case, interest will be on gross liability. Interest will be on gross liability. I'll tell you one example, one small example. See, you have June month liability. See, in this example, June month liability, I have 1 lakh rupees. ITC balance, I have 70,000. Due date to file the return and pay the taxes, 20th July, GST at 3B. Actually, I have filed it on 24th July. That means when there is delay in payment of tax because of delay in filing the return, you have to pay 18% interest per 4 days. First day after the due date, 20th is the due date. First day, 21st, till the date of payment, 24th. 21st, 22nd, 23rd, 24th. 4 days. For 4 days, you should pay the interest. But interest will be on the net liability, not on the gross liability. Gross liability is 1 lakh. ITC is 70,000. So the net liability is only 30,000. Hence the interest will be only on 30,000, 18% for 4 days. That is 4 divided by 365. The answer will be 30,000 into 18% into 4 divided by 365. So it is 59 rupees, 59.17. So you will round off to 1 rupee in GST. So 59 rupees is the interest amount. Okay. But sir, in any other case, as I was telling you, the GST interest liability will be on gross liability, not on net liability. Hope you have understood this case. This case is all about, I repeat, when you have not paid GST, there is delay in payment because delay in filing the return. Then interest will be 18% from first day after the due date till the date of payment on only the net liability, not on gross liability. In any other case, because of any reason, if there is delay in payment of tax, then on gross liability you have to pay interest. Okay, now see, for example, the second case. If you see June month liability, I have 1 lakh. ITC balance, I have 95,000. Due date is 20th July. Actual date of filing also 20th July. I have filed everything properly. But while filing, I have missed out one invoice. One invoice on which GST liability is 20,000. So I came to know about this only in the month of, like, later on after July, August, all that. Only while filing August month return, I came to know I have missed an invoice. Invoice value is not 20,000. In the invoice, GST liability is 20,000. Such invoice I have missed out. So what I am doing now, in the August month return, that means when I am filing August month return in September, 18th September, I am filing that invoice. In GSTR1 I have filed, and GSTR3B I am adding the liability and I am paying the tax. That means here the GST liability will be on. Now you will not check, sir, 1 lakh I had that time liability, 95,000 I had ITC, that means I have sufficient ITC, all that. For this 20,000, interest will be on entire 20,000 irrespective of the fact how much ITC you had. I repeat, you have missed the liability of 20,000. This is the gross liability. The gross liability you have missed out 20,000. For that, whether sufficient ITC was there, not there, all these things doesn't matter to us. It is irrelevant for us. We have to pay interest straight away on full 20,000. You should not see whatever the ITC is available, all that stuff. So 20,000 I will charge interest. So interest will be on 20,000 into 18% for how many days? So I should calculate here from 21st August to 18th, sorry, 20, 21st July. 21st July. Due date is 20th July. So after that, from first date, 21st July to 18th September. So here in July, I have 11 days. In August, I have 31 days. Plus September, I have 18 days. So total how many days delay? 11 plus 31, 42, 42, 50, 60 days delay. Exactly. 60 days delay has happened. So 20,000 into 18% into 60 divided by 365 is the interest. So the amount is 20,000 into 18% into 60 divided by 365. Okay, I got 591. Okay, here 59.17 I got, here I got 591. Okay, so online students, see, just comment if any wrong calculation is there, because I'm just recording. Maybe a calculation error also may be there. 592 is the interest. Okay, rounding off to the nearest rupee, it is 591.78. 591.78, I have rounded it off to 592. Okay, so the concept is all about, if delay in return filing because of the delay in payment of tax, on net liability you should pay interest. Any other reason delay in payment of tax has happened, gross liability you have to pay the interest. Simple, that is what the case. Now apart from this, there is another super duper situation actually, that is ITC wrongly availed and utilized. ITC wrongly availed and utilized. So this is very important topic for you. So listen carefully. Understand, I am doing so much of decoration for this now. You will understand how much important it is. Little bit more technical. Listen carefully. This is all about, you have availed ITC wrongly and you have utilized. See, earlier by mistake I am eligible for 40,000 ITC. I have taken 50,000. It means 10,000 extra ITC I have taken. If I take ITC extra wrongly itself, from the next day I will be supposed to pay interest till the date of payment. But later on they have amended the law, understanding the seriousness here. See, if I take ITC wrongly, that is not a mistake. There is no need for punishment. There is no need for interest. But whatever the ITC have taken wrongly, if I utilize that, then only the problem. Then only there is a revenue loss for the government. So what they are saying now is, if you have availed ITC wrongly, no problem, reverse it and close it. I will not ask you interest. But if you have availed ITC wrongly and you have utilized also that one, then in such case you should reverse ITC wrongly availed, plus you should pay interest to the government. That is what they are trying to tell us. Okay, now how does it work, how it will be calculated, all that stuff. So we will be seeing here. First let us see theoretically, then I will show you the practical aspect. With the help of an example we'll understand this. See, now if ITC wrongly availed and utilized, from date of utilization of that ITC till the date of payment or reversal, whatever it is, interest will come into picture. So how do you calculate that? How much how do you calculate that, all that stuff? See, as I already told you, interest will come only when you have availed and utilized the ITC. So how do you check that availed ITC has been utilized or not? That I will show you with the help of an example. See, now same flowchart, nothing but I have just given here, given in the textbook also. So the entire flowchart you need not write. For you only the example is relevant, my dear friends, because the entire flowchart has been given in the book here. Okay, and the notes also has been given here clearly. So for you, you need not copy this. You need not copy this. If you need not copy this, why it is here? See, if it is more convenient or colorful for you, you follow that. But the same thing here given in the textbook. Let me go with the example. Listen carefully, pay utmost attention, little bit more technical than what you have read till now, so please be more cautious. Now, see, first of all, we are seeing ITC wrongly availed and utilized. How do you calculate the interest? Okay. Now, first of all, just take an example. Sir, we are starting from the month of April. In the April month, opening ITC balance is 0. How much ITC I am eligible? 1 lakh ITC I am eligible. What I am doing, I am wrongly taking extra ITC 50,000. That means total ITC how much I am taking is 1,50,000 I am taking. Okay, 1,50,000 totally I am taking. Now, if you look at my liability is just 80,000. I am eligible for 1 lakh ITC. Extra ITC I have taken 50,000. That means wrongly availed ITC. So total ITC is becoming 1,50,000. But my liability is just 80,000. I have settled the liability using ITC balance 80,000. Now closing balance in e-credit ledger is 70,000. Now you tell me, closing e-credit ledger balance is 70,000. How much wrongly I have availed ITC? 50,000. Can you say that whether I have utilized that 50,000 or not? Wrongly I have availed 50,000. No, whether I have utilized that ITC or not. My closing e-credit ledger balance is 70,000. That means if I have not even taken wrongly ITC also, I would have still had a surplus of 20,000. Are you understanding the point? I have taken 50,000 wrongly, but if you see my closing balance of e-credit ledger, I have 70,000. That means wrongly availed 50,000 is also in this 70,000. That means wrongly availed 50,000 ITC I have not utilized. Are you understanding the point? How can you say that I have not utilized? Please understand, I have availed 50,000 wrongly, but closing balance itself is 70,000. That means more than what I have availed wrongly. That means I can straight away say that, sir, I have availed ITC wrongly, sir, but I have not utilized. See, it is lying in this 70,000 only. Please check. That means you have not utilized. Okay, interest will come only when you utilize. Correct. Here we have not utilized. Still it is there. Okay, super. That means next month opening balance is how much ITC? 70,000. Eligible ITC 50,000. Wrongly anything you have availed? No sir, last month only I did mistake. This month I am not doing. Okay, so this month I have not taken anything wrongly. So opening balance 70,000, eligible ITC 50,000, total ITC is 1,20,000. How much liability you have? 60,000. After paying the liability of 60,000, how much closing balance will be there? 60,000. Last month wrongly how much you have availed ITC? 50. Last month closing balance 70, so not used. This month closing balance 60. That means within this 60, this 50,000 will be there. Can I say, sir, whatever I have wrongly availed 50,000 ITC, I have not utilized that. I have not utilized that. I can happily say that. Yes. That means now also interest will not come. Okay, are you understanding the point? I have wrongly availed ITC. I have not paid to the government. Even if I have to pay to the government now, if I just reverse that 50,000 sufficient interest, I need not pay. But I did not identify that I have wrongly availed ITC. Okay, fine. Next month 60,000 the opening balance. Guys, I repeat, 50,000 I have wrongly availed, and I did not even realize that I have wrongly availed something. So when I realize, I should pay back that 50,000 back. But only point is interest will come or not. Okay, if interest comes from which month? As of now, till now, interest will not come. If I identify also, I have to pay it without interest. Okay. This month, opening balance 60,000. ITC eligible 30. So, total ITC 90,000. But liability 60,000. Liability 60,000. What is the closing e-credit ledger balance? 30,000. What is the wrongly availed ITC by you? Wrongly availed ITC by you is 50,000. But now what is the closing e-credit ledger balance? 30,000. That means, can I say there is a shortfall in the closing e-credit ledger balance of 20,000? You have used 20,000. Can I say that way? So how can I say that I have utilized wrongly availed ITC? I repeat, how can I say that I have utilized wrongly availed ITC? When you are wrongly availed ITC and you compare it with the closing e-credit ledger balance, closing e-credit ledger balance falls below the wrongly availed ITC amount. I repeat, closing e-credit ledger balance falls below the wrongly availed ITC amount. then I can say wrongly availed ITC has been utilized. Utilized to what extent? To the extent of the difference. That means if you see, sir, on what amount I should pay interest na, the shortfall in the e-credit ledger than the ITC availed. That means in simple terms, wrongly availed ITC minus closing e-credit ledger balance. Wrongly availed ITC is 50,000 minus closing e-credit ledger balance is 30,000. That means 20,000 you have utilized now. 20,000 when you have utilized? The 20,000 I have utilized in the month of June, sir. 20,000 you have utilized this in the month of June. So we should check June month GSTR 3B. When June month GSTR 3B has been filed? I repeat, when there is a shortfall happening in the closing e-credit ledger balance, which month that shortfall is happening? That means in that particular month GSTR 3B only you should have utilized it, correct? So we should check when you have filed GSTR 3B of June month. Actual date of filing or due date of filing, whichever is earlier will be treated as date of utilization. Why I need date of utilization? I know on what amount I should charge interest, but from which date to which date I should charge interest? I should charge interest from date of utilization of ITC. What is the meaning of date of utilization of ITC? Date of utilization of ITC means, listen carefully, date of utilization of ITC means actual date of filing or due date of filing of what? Of the return through which the shortfall took place. The return through which shortfall took place is June month here. That June month return, actual date of filing or due date of filing, whichever is earlier, I will check. Simple. So here June month, if you see, wrongly utilized ITC is 20,000, we have understood. So we have to see June month GSTR 3B. Due date is 20th July, you know. 15th July they have filed. You should compare 15th July actual date of filing or due date of filing, whichever is earlier. 15th July is earlier. So the interest will start from 16th July, from the next day. Simple. You know the interest calculations. So from the next day it will start. The interest will start till the date of payment. So in this story I have told you date of utilization, but I have not told you when this amount has been paid. So later on what happened? They have identified next month also opening balance they have got 30,000, ITC 80,000, total 1,10,000, liability is 60,000, and closing balance is 50,000. See, I am keeping this example as simple as possible for your level. That means this 30,000, if this 30,000 becomes 20,000, for example, if this 30,000 becomes 20,000, that means again 10,000 has been used in the next month. I am not complicating the example further because you being CA inter student. So from 30,000 I just took it back to 50,000 normal level. That means I am just trying to tell you 20,000 you have utilized out of 50,000 wrongly availed. 20,000 you have utilized. Okay. Now, sir, what I did is, we have understood that mistake. Okay, we have wrongly availed 50,000. I am repaying that 50,000. When I am doing that, while filing my August month GSTR 3B, on 18th September, I am paying that 50,000 back. 50,000 back I am paying. But what about the interest? Interest will come from 16th July to 18th September. Okay, 60 date of utilization of ITC till the date of payment. Now you understood the meaning of date of utilization of ITC. See, here one thing we have to understand is date of utilization of ITC we should identify. How do you identify that? You should see in which month shortfall has taken place. That month 3B actual date of filing or due date of filing, whichever is earlier, 16th July, till the date of payment. So 65 days you should pay 641 rupees interest. 20,000 into 18% into 65 divided by 365, you will get 641 rupees. One interesting point is, you should pay 50,000 also, you should pay 641 also. 641 being interest, you should pay that only by using cash. This is very important thing. You should pay it only in cash. But this 50,000 what I can do? Sir, I can reverse it. So reverse ITC or ITC sufficient balance not there sir, pay in cash, anything you can do. Are you understanding the point? Reversal of ITC can be done either by reversing the e-credit ledger balance, or if it is not sufficient, for example I already have credit ledger balance 75,000, I can reverse 50,000 and make it 25,000. Or sir, e-credit ledger balance I don't have anything sir, pay 50,000 in cash. But this interest 641 should be definitely paid in cash. Okay, there is one more small example here, small question here I just wanted to show you. We try to give an answer for this. Just pause the video, just go through the question and you try the answer for this. You try the answer for this. I repeat, don't be lethargic, don't take it easy. You pause the video and try answer for this. And for your information, this is a CA final November 2023 exam question, and I felt for inter level also they may ask this, so very important question, so mark this important, and whatever the answer you got for this, please mention in the comment box the answers. And if you want to check whether the answer correct or not, you can download the suggested answer of this particular attempt from ICA website and check that. And but you should do that only after commenting the answer in the video, then only check the answer. Still, if you have any doubts, yes, you can send me a message in Insta CA Vishnu Vardhan regarding this question if you have still any doubts. CA underscore Vishnu underscore Vardhan, this is my Insta ID. So that is what all about this particular chapter. See you all in the next video. So yes students, we are moving into the next chapter, returns. So in this chapter we are going to see the return filing, the due dates, etc, etc. Again, there is no great technicalities or concepts involved here, just what are the returns, who has to file, what are the due dates, all this stuff. So quickly we can finish this chapter, right? So going to the returns, obviously you know the first return, the very famous, or like what, the return which we might have frequently discussed is GSTR1 and GSTR3B. So GSTR1, who has to file GSTR1? GSTR1, see, every registered person has to file GSTR1, including casual taxable person. Okay, but other than non-resident taxable person, composition taxpayer, input service distributor, person deducting tax at source, person collecting tax at source, supplier of OIDR services. Except, so here this input service distributor you will see in CA final, and supplier of OIDR service also you will see in CA final. So leave them. Remaining fellows, there is non-resident taxable person, he will file GSTR 5. Composition taxpayer, you know, he will file GSTR 4. Person deducting tax at source, he will file GSTR 7. Collecting tax at source, GSTR 8. So these people will file those returns. So they will not file GSTR 1. Okay. Every other registered person, including casual taxable person, will file GSTR 1. And please understand, every person who is liable to file, every person who is liable to file GSTR 1 is also liable to file GSTR 3B. Is also liable to file GSTR 3B. As a passing discussion, I am just bringing this so that you can remember it. So every person who is filing GSTR 1 has to file GSTR 3B also, right? So this is the point. Now, GSTR 1 generally monthly basis they have to file, and 11th is the due date that we will discuss in the upcoming points. So for example, if it is June month GSTR 1, you will be filing it next month 11th July. Here the point is, sir, every month I will be filing GSTR 1. Before completion of that month, can I file that? Because June month you said July 11th is the due date. I am not talking about QRMP scheme yet, just listen carefully. Generally monthly will file GSTR 1, and the due date will be the next month 11th will be the due date. Here the doubt is, for June month, as we have discussed, 11th July is the due date. Can we file June month return before the completion of June month? That means even before June 30th is over, can we file GSTR 1 of June? Means the answer is no. So a taxpayer, can he file even before the expiry of June month? the relevant tax periods written? The answer is no. He can do that only in two circumstances. That means the exceptions. The exceptions are if you are a casual taxable person and you are closing the registration, or you are a normal taxpayer and cancelling the registration. In these two cases, casual taxable person and normal taxpayers has to file GSTR1. They have to file GSTR1 only after that particular month is over. June month return, how can you file without June month is over? You can just enter the details in the portal. You can just wait without clicking the submit button. So submit button you can click only after that month is over. But sir, I am a casual taxable person, sir. Casual taxable person registration validity itself is maximum 90 days. My registration validity over, sir. Or I am a normal taxpayer, sir. I want to cancel my registration. So suppose let us assume my GST registration validity, I am a casual taxable person, my GST registration validity is getting over on June 14th. Can I file GSTR1 now? Should I wait till the June month is over? No, you need not wait till the June month is over. You can straight away file GSTR1 now for the June month, June 1st to June 14th, the period, whatever the sales you have made, you can file GSTR1. Okay. So everybody, I hope you know, I didn't touch what is GSTR1. GSTR1 is all about, giving all our outward supplies details in GSTR1, all our sales details in short. To say, sir, we are going to file all our sales details, B2B, B2C, everything in GSTR1. So you can do that only after that particular month is over. But if you are a casual taxable person or if you are a normal taxpayer, before the completion of the tax period also you can file that if you are closing your business or if your registration validity is getting expired. Okay, so these are the exceptions. So remember these exceptions. Okay, next. They have given some notes. So as I told you already, invoice details you can upload anytime, even during the relevant tax period is there, but you cannot file the return. That means you cannot submit the return, okay, till that month is over. Next, sir, whatever the invoices I have uploaded in the system, can I modify them? You can modify till the submission button is not clicked. You can modify any number of times, okay, but once the submission button is done, then you cannot modify. So the interesting thing is, yes, it can be modified even after the due date, provided return is still pending for submission. Simple. Okay. So now in GSTR1, what are the details I should give? As I told, outward supplies details should be given in GSTR1. But here, how should I disclose that outward supplies details in GSTR1? Please understand, supplies are now classified in GST as two types, B2B supplies and B2C supplies. You are aware of it. Now the point is, sir, if it is a B2B supply, no matter whether it is intrastate supply or interstate supply, no matter whether it is intrastate supply or interstate supply, we should give the details invoice wise. That means, for example, in particular month, let us say June, we have 30 supplies, interstate supplies, 20 intrastate supplies. That means 50 invoices we have. These 50 invoices, what we have to do is invoice wise, what is the date of the invoice, who is the supplier, what is the GSTN of the supplier, what is the value of that, everything pin to pin, all the 50 invoice details you should give. If you remember the discussion in input tax credit, we have discussed only if I give all these details pin to pin in GSTR1, then only these details will be reflected in the GSTR2B of the recipient. Hope you remember that. So in GSTR2B of the recipient, it will be reflected only if I give pin to pin details in GSTR1. Okay, that is the whole idea of giving B2B supplies invoice wise. Okay, so invoice wise details you will be giving in GSTR1. I repeat, invoice wise details means pin to pin, what is the date of invoice, what is the supplier GSTN, what is the value, what is CGST, SGST, IGST amount, all these things pin to pin will be giving, so that it will get reflected in 2B of the buyer and he will claim ITC. Only if it is reflected in 2B they can claim ITC, otherwise they cannot claim. Okay, next, B2C supplies. Coming to B2C supplies, the interesting thing is, suppose I have made in June month various B2C supplies. That means the supply recipient is not registered, all that stuff. So if it is intrastate supplies, let us assume I am registered in Tamil Nadu. Sir, I made all the B2C supplies in Tamil Nadu. B2C supplies, however, the recipient cannot take ITC. When the recipient cannot take ITC, what is the point of giving invoice wise details? It need not reflect in the 2B of the opposite fellow. So consolidated details if I give, that is more than sufficient. I repeat, B2C supplies, we need not give invoice wise, because however the recipient is not eligible for ITC, he is unregistered fellow, he cannot claim ITC. So the law says, Vishnu, you are registered in Tamil Nadu, and whatever the supplies are made within Tamil Nadu, consolidated figure, June month what you made. So June month I have made, let us assume 10 lakh worth sales, 12%. Give that consolidated figure, enough. 18% sales, have you made anything? Yes sir, I have made 18% sales, 2 lakhs sir. That you give consolidated figure. Sir, 5% sales I have made, 3 lakh worth sales, 5%. That means consolidated figure rate wise, if I give sufficient, pin to pin details are not required. So B2C supplies, intrastate supplies, consolidated figure, rate wise sufficient. But B2B supplies, that is interesting thing here. Sorry, B2C supplies, interstate supplies. If you see B2C interstate supplies, if the invoice is less than 2,50,000, all such invoices, state wise, rate wise, just like here, if you give consolidated figure, state wise, what are the sales I have made to Karnataka? How much? 18% sales, 5 lakhs. How much? 12% sales, 3 lakhs. How much? 5% sales, 2 lakhs. Like this, state wise. For example, for Andhra Pradesh, how much sales I have made? Andhra Pradesh, 18% sales, 2 lakhs I have made. 5% sales, I have made 1 lakh. Like this, state wise, rate wise, if I give, that is more than sufficient. But invoice should be less than or equal to 2,50,000. But if it is any invoice worth greater than 2,50,000, what they're asking is, they're asking you to upload invoice wise details. That means, in short, if you simplify this, in GSTR1, invoice wise details, when you have to mention is, if it is a B2B supply, or if it is a B2C supply, interstate supply with invoice value, that is a value of the invoice greater than 2,50,000. I repeat, B2B supplies, you know, invoice wise details we have to give. B2C, if it is an interstate supply and the value of the invoice is greater than 2,50,000, then you have to give it invoice wise details. You cannot give consolidated figure, even though it is a B2C supply. So these two things you have to give invoice wise. Remaining everything you can give consolidated figure. That is what the concept. Okay, here by mistake it is the concepts, it is actually returns chapter. So that will be rectified in the book, printed book. So you need not worry. The header, there is a mistake. So I hope it is clear now how to report the invoices in GSTR1. Okay. Now the doubt is, sir, when we are giving the invoice details in GSTR1, should we upload the scanned copies of the invoices in GSTR1? Of course not. Of course not. You need not do that. You just fill the informations which are required and file GSTR1. That is more than sufficient. Okay. And while filing this GSTR1, as I told you, we have to give pin to pin details of the invoice. That means the date of the invoice, the value of the invoice, all that stuff. So HSN code of the goods also to be mentioned. So here, if you remember in tax invoice chapter, we have discussed, for HSN code, they have given relaxation in the invoice. If your aggregate turnover is less than or equal to 5 crores, B2B supplies, 4 digits should be mentioned in the invoice. It is mandatory. B2C supplies, 4 digits, it is optional in the invoice. So the same relaxation is applicable for the returns also, because whatever information is given in the invoice, that alone you have to fill in the GSTR1 also. So when I have given you relaxation in the invoice with respect to HSN codes, the same relaxation I have to give in GST returns also. So this relaxation is available. And when you are filing GSTR1, if your aggregate turnover is greater than 5 crores in the preceding financial year, then whether it is B2B supply or B2C supply, you have to give 6 digits mandatory. The 6-digit code of HSN should be mentioned in GSTR1. You know, HSN code is an 8-digit code, but here 6 digits are sufficient. Okay, so that is what with respect to what details to be given, all that. Now coming to the due date, the important part. GSTR1 due date. Normally GSTR1 due date is 11th of the succeeding month. Okay, but if you are opting QRMP scheme, that is quarterly return, monthly payment, if you are opting for QRMP scheme, the due date is 13th of the succeeding month after that relevant tax period. You know, in QRMP scheme, you will file GSTR1 on quarterly basis. So once the quarter is over, the next succeeding month after that quarter, 13th is the due date. But Others who are not opting QRMP scheme, obviously monthly you have to file GSTR1, and next month 11th will be the due date. But for who are opting for QRMP scheme, for them next after the quarter is over, for example April to June quarter 1, for that what is the due date for filing GSTR1? July 13th will be the due date. July to September quarter, October 13th will be the due date. October to December 13th January, Jan to March 13th April will be the due dates. These are the due dates if you are opting QRMP scheme for filing GSTR1. But now the doubt is, sir, what is QRMP? Right? So let us move on to that QRMP scheme. What is QRMP scheme all about? So now, what is QRMP scheme? What is QRMP scheme? So QRMP scheme is a benefit which department thought it is a benefit. Okay, but actually did not turn out to be a benefit. That's a different story. Let us not comment on that. But QRMP scheme is all about giving a relaxation to small taxpayers. What do you mean by small taxpayers, sir? Whose aggregate turnover has not exceeded 5 crores. That means less than or equal to 5 crores in the preceding financial year. Current financial year, they can opt for QRMP scheme, just like composition scheme, where in the preceding financial year, if your aggregate turnover is not exceeding 1.5 crores, current year you can go for composition scheme. Same way here also, if the preceding financial year your aggregate turnover is not exceeding 5 crores, current financial year you can opt QRMP scheme. Sir, what is the benefit of QRMP scheme? QRMP scheme, quarterly if you file return, that is more than sufficient, but monthly you have to pay the taxes. So here I'll explain you with a small example. See, for example, we are in the quarter of April to June. Now, in this quarter, what we have to do? In this quarter, first, April month, May month, and June month. Okay. So, April month and May month, first 2 quarters, what you have to do is, you have to file a return called or file a document called IFF, Invoice Furnishing Facility. Why this Invoice Furnishing Facility now? Because after the June month is over, you file GSTR1 of all the supplies you have made in the month in this particular quarter, and your customer will get that in 2B after this quarter is over when you file your GSTR1. That means 3 months delay will happen, correct? So the point is, they have brought in an option called Invoice Furnishing Facility, where first month and second month in the quarter you can file IFF. In IFF you can give B2B invoice details up to 50 lakhs only. That is the biggest disadvantage. You cannot give more than that. Okay, so invoice furnishing facility is an option when you are under QRMP scheme. First month and second month of the quarter you file a document called IFF, Invoice Furnishing Facility, where inside that you will give only B2B supplies, but maximum per month you can give only 50 lakh worth invoice, B2B invoice details. If it is more than that, you cannot furnish in IFF. You should wait till GSTR1. Okay, the advantage of IFF is that you can pass on the credit immediately. Even though you are filing the GSTR1 on quarterly basis, your recipient will get this invoice immediately in that next month itself in the 2B, because you are filing IFF. So my only point is, if I can file IFF, if I can give B2B supplies monthly, instead of filing IFF, I will file GSTR1 only, and I will go with normal way only. No, why to take this headache? QRMP scheme is mainly with an agenda to reduce the compliance burden to the small taxpayer. But however, you are making the small taxpayer to do the same thing with a different name. Then what is the purpose of QRMP scheme, right? So okay, fine. Let us not worry about that. Coming to the scheme, first 2 months you will file IFF, B2B supplies only. Okay, and after the 2 months over, the third month is over, GSTR1 you will file 13th July in this example. In GSTR1, what and all details you will give? You will give first 2 months B2C supplies are there. Third month B2B and B2C supplies are there. That means, in short, whatever you have not given in IFF, you will give in GSTR1 once the quarter is over. Everything you put in GSTR1. I repeat, if you have given the details in IFF, you need not give the details again in GSTR1. So whatever are not given in IFF, those details only should be mentioned in GSTR1. Okay, that is the point. Okay, right. So this is for filing the things. And now first 2 months you will file this IFF, and also first 2 months what you should do, you should pay taxes on monthly basis. You should pay taxes on monthly basis, and further the due date is 25th of next month. In this example, 25th May you should file 25th of June you should pay the taxes. So you should pay these taxes on monthly basis because the scheme name itself is quarterly rate and monthly payment. So monthly you have to make the payment by filing GST PMT 06 PMT 06. Okay, first 2 months over. Then after the third month is over, what I should do? You should file GSTR 3B obviously. You should file GSTR 3B. What is the due date? The GSTR 3B due date is 22nd July or 24th July, as the case may be, in which state you are located. See, this is the due date. This is the problem also here. Normally, for normal people who are not under QRMP scheme, they'll file GSTR 1, GSTR 3B. 1, 11th is the due date, 3B, 20th is the due date. Okay. But these people, they have to monthly file IFF on 13th of the next month. Next, see here, this IFF due date is 13th of the next month, 13th. So 13th May, we will file one IFF, and 13th June, I will file another IFF. Are you understanding the point? So that way we will file two IFFs, 2 months, first 2 months, and we will pay GST 25th. After the quarter is over, what I will do? After the quarter is over, I will file GSTR 1, 13th of the next month after the quarter is over, and 22nd or 24th, based upon in which state I am, I will file GSTR 3B. Are you understanding that? So if you are in these states, it is 22nd. If you are in these states, it is 24th. Okay, GSTR 3B due date. And one more interesting thing here is, sir, when you are paying these taxes for the first 2 months, you will use PMT 06 and you will pay the tax. Here there are again two methods, FSM and AM, fixed sum method and self-assessment method. How to pay tax? Fixed sum method and self-assessment method. I repeat, in the quarter there are 3 months. First 2 months, what you are supposed to do? First 2 months you have to file IFF and you should pay your tax using PMT 06. And while using PMT 06 also, you have two methods of paying taxes, fixed sum method and self-assessment method. Fixed sum method, simple, system will tell you how much to pay. Okay, you need not worry. Pay that and close it. First month, second month. After third month is over, GSTR 3B you file and you close the balances. Self-assessment method. First I will talk about this self-assessment method. Self-assessment method, the name itself is telling, we will calculate, we will assess how much we have to pay the tax actually. We will calculate, we will see our sales, we will see our purchases ITC in 2B, and we will calculate how much is the net GST payable. We will fix the amount and we'll pay in the first month, we'll pay in the second month. Once the third month is over, the quarter is over, you file the 3B and you pay the taxes accordingly. But FSM is something interesting. I'll show you. In FSM, system will tell you how to pay, how much to pay. System will tell you how much to pay. Oh, system will know how much I should pay, sir. System will calculate your liability based upon your past browsing history, past payment history of your GST. Now see, for example, as I was discussing, you are in the quarter of April to June. April to June you are under which scheme? QRMP scheme. Now first month, April month, I should pay GST under fixed sum method. System will tell you how much you have to pay. How system will calculate? Na? System will see what is your past payment history, what is your past tax period, previous tax period. The previous tax period, let us assume before this quarter I was under normal scheme, sir. Monthly I was paying. So March month, how much you have paid? Let us assume March month you have paid 40 rupees tax. System will also ask you to pay rupees 40 in April. May also you pay 40. That means system will assume you will follow the same trend. March month you have paid tax 40 rupees. April also I will feel you have to pay 40. May also you have to pay 40. And once June month is over, let us file 3B. The total amount payable is rupees 150. Na? You have already paid 80 rupees. Now the balance, what you have to do, you have to pay 70 rupees and close the GSTR 3B. Simple. Are you understanding the point? System will just follow the trend how you have been paying. Sir, I was paying monthly last before this quarter. So March month, how much I have paid? You asked me to pay the same thing. What if earlier also, before this quarter also, I was under QRMP scheme. I was under QRMP scheme. What should I do? What should I do? Then it will see April to June previous quarter also you are in QRMP scheme. So what is the previous quarter? Previous quarter is Jan to March, sir. Jan to March. Then system will see, okay, Jan to March in this quarter, how much you have paid in cash? Sir, I have paid in cash 100 rupees, sir. Preceding quarter, Jan to March. That means this quarter also system will assume you will have 100 rupees liability. You will have 100 rupees liability for this quarter. So system will ask you to pay 35 rupees in the first month, balance 35 rupees in the next month. That means 70% of your preceding quarter liability is over here. Please understand, last quarter whatever the liability is there, 100% liability is there na, same 100% liability will be there in this current quarter also, is what our assumption. So first month and second month we are asking you to pay 35% of the liability of the preceding quarter, second month also 35% liability of the preceding quarter. So I'm just, instead of bringing the percentage, I'm bringing the numbers and keeping it simple for you. Okay, now after June month is over, again same story, what you will see, you will see the actual liability. Sir, actual liability is 150 rupees, sir. Then what is the balance rupees 80 rupees you pay and close it. Simple. That means first 2 months system will ask you to pay a rough figure based upon your preceding tax period. My preceding tax period is monthly basis na, 100% of that liability you pay in the first month, 100% of the liability you pay in the second month. Balance, any shortfall is there or not, you check once the quarter is over and pay it. Sir, my preceding tax period is quarter, sir. My preceding tax period is a quarter. That means whatever the liability in that quarter is there, I will assume the same liability will be there in the current quarter also. So current quarter also same liability will be there. I will not ask you to pay that entire liability in the first month only. Correct? Because that is the liability of the quarter, 3 months liability. So first month I will ask you to pay 35%, second month I will ask you to pay 35%, and third month once the quarter is over, let us go with actuals, whatever the difference is there, let us pay that and close it off. Right? That is how fixed sum method works out. We understand, if you are under QRMP scheme, you have to calculate all these things. But if you are under normal scheme, not under QRMP scheme, na, I will file GSTR1. My suppliers also will file GSTR1. So I will see my GSTR2B. What is the ITC? I will understand. And I will go to 3B, knock off the ITC, output tax, everything, and pay the balance amount and come out. But in this, you see how many things you have to follow. See how much notes I have written for QRMP scheme here. But for normal scheme, I will tell you simply GSTR1 you file on 11th, GSTR3B you file on 20th. Simple. Issue closed. So that is what QRMP scheme all about for you. Okay. First 2 months, I repeat, first 2 months you have to file IFF, giving B2B details, and PMT06, paying the taxes. Once the third month is over, that is the quarter is over, you have to file GSTR1 on 13th, and you have to file GSTR3B on 22nd or 24th, as the case may be, based on which state you are located. Hope it is clear to you, right? So personally, I feel QRMP scheme is an utter waste scheme. So everything about QRMP scheme we have discussed, and so all these things are fine, we have discussed. This is something interesting. So QRMP scheme, you understand, QRMP scheme, this is an option. Whenever you want to change, you can change the option, but until you change the option remains same. So this quarter I can be in QRMP scheme, next quarter I can go with monthly, next quarter I can go with quarterly, again next quarter I can go monthly. But this option, when it will be open, please understand, the option to select or deselect, this option will be opened from first day of the second month. So in this quarter, let us assume April to June quarter, I want QRMP scheme or not, that option window will open on the first day of the second month of preceding quarter till the last day of the first month of the relevant quarter. first day of the second month of the preceding quarter till the last day of the first month of the relevant quarter. That means, see, for example, April to June, the option will open on first day of the second month of the preceding quarter. That means, can I say 1st Feb, and it will be open till last day of the first month of the relevant quarter. Relevant quarter is April to June, so last day will be 30th April. So April to June, whether I want QRMP scheme or not, that window will open during this period. Same way, July to September, the window will open from 1st May to 31st July. For October to December, 1st August to 31st October. For Jan to March, it will open from 1st November to 31st Jan. So these are the dates when the window will be open, to select or deselect from QRMP scheme. So whenever you want, you can, one quarter you can go for QRMP, one quarter you can go for monthly payment. And one more interesting thing is, when I have multiple registrations, it is not like composition scheme. Here some registration can go for QRMP scheme, some registrations can go for normal scheme, that is monthly filing. So some registrations quarterly filing, some registrations monthly filing is allowed. So yes, this is the point. This scheme is available. This scheme is available GSTN wise. Few GSTNs can opt for QRMP and few GSTNs may not opt for QRMP. But once you select, this option will remain as long as you change it or your aggregate turnover exceeds 5 crores. So this option will be available in the current financial year till your aggregate turnover exceeds 5 crores, just like composition scheme, only the same condition, right? So that is what the point. What is IFF also I have discussed with you. And one another important point here is, who are ineligible to file GSTR1 or IFF. Sir, if you have not filed your last GSTR1 or 3B, current GSTR1 or IFF, you cannot file. And you have not deposited the specified amounts provided as explanation rule 88C, 88D, rule 88C, 88D, I will just discuss now. Then you are not allowed to file GSTR1 or IFF later on. You have not updated your bank account details as per rule 10A, which you will be seeing in registration chapter, that you have not done, then also you are not allowed to file GSTR1 or IFF. So that is what all about, who are not eligible to file GSTR1 or IFF. Very, very important. Please make sure you remember these points. Okay. Next. Sir, if I have done any mistakes in one GSTR1, sir, let us assume April month GSTR1 I am filing. If I have done some mistakes, can I rectify them? Yes, understand, just like in income tax, here revised return is not allowed, because monthly we have to file the returns. Monthly you do mistakes, and monthly if I ask you again to revise the entire return and file the return, that doesn't make sense. So the point is, here you need not revise the return fully, but if you just rectify any mistakes, that is sufficient. So April month mistakes you can happily rectify in May month return. May month mistakes you can rectify in June month return. So your mistakes in any GSTR1 or 3B, everywhere the same story, you can rectify those mistakes in the subsequent returns. You can rectify those mistakes in the subsequent returns. Clear? So as we were discussing, you can rectify any month return in the subsequent return. See now, for example, June 2024, June 2024. In June 2024 month return, I have made a mistake. That mistake, when can I rectify? What is the deadline? Is there any deadline to rectify the mistakes? Yes, there are deadlines here. See, June month return, any mistake you can rectify in July month, August, September. But there is some deadline here, just like 16 subsection 4, exactly the same deadline. June 2024 GSTR1, you did some mistakes. You did not understand or you did not identify them in July, August, September, October, November, December, like that. You have identified that mistake after 6 months, 7 months. Can you rectify now? The answer is yes. But there is a deadline for that. The deadline is June 2024 return. The mistakes you can rectify next subsequent financial year, the succeeding financial year, 30th November. This is falling in 24-25 financial year. 25-26 financial year, that is 30th November 2025, or actual date of filing annual return of 24-25. 24-25 is the relevant financial year. That relevant financial year's actual date of filing annual return, whichever is earlier. Before that you can rectify the mistakes. After that you cannot rectify. I repeat, this is exactly nothing but 16 subsection 4 time limit. Everywhere they have amended the law and they have uniformly brought this time limit actually. So if you see any other time limit, please understand that is an old law, and the right now the new law is everywhere. You will be seeing in your syllabus, especially intermediate, you will be seeing this particular 16 subsection 4 time limit itself, right? So that is the point. Next, there are some small key points here. So once registration is obtained, yes, it is mandatory to file at least nil returns also. In case even there is no business, you cannot say there is no business. So at least that you have to inform to the department. Yes, you should say that yes, I don't have any business, so you have to file nil return. So when nil return cannot be filed? Sir, nil return cannot be filed if there are any outward supplies, obvious. If there are any inward supplies covered under RCM, or any prior period amendments, or there is any credit or debit notes to be declared, all that stuff. So then you cannot file the nil return. And nil return can be filed even by using GSTR1 through an SMS, all that stuff. So remaining things and all. GSTR1, suppose invoice value, taxable value, tax amounts, all that should be given up to 2 decimal digits. And in 3B, when you are filing 3B, the self-assessed tax liability will be rounded off to the nearest rupee. This is not income tax where we just focus on 10 rupees or multiples of 10. Here in GST, we focus on every damn single rupee, right? So that is why we are doing lakhs and lakhs of like, or monthly, if you know the GST collection, 1 lakh crore, 2 lakh crores also we have touched. That way we are doing the collection, because we are valuing every damn single rupee in GST. Okay, so that way. And next, once a taxpayer has opted for cancellation of registration, he has to file the GSTR1 for active period. Those are the things. And this regarding section 38, that is GSTR2B, all that stuff we have discussed in ITC chapter itself. Nothing much to discuss. Okay, so those details we have already discussed. And 2A, 2B, all the stuff, just go through that once. We have discussed in ITC chapter already. And GSTR 3B, just now we have discussed everything. This QRMP scheme, everything I have just discussed all that stuff. So GSTR 3B is here. So GSTR 3B also, the thing is, you cannot say that, sir, I don't have business, so I am not filing the returns. Once you have taken registration, you should at least file the nil return, even though there is no business. And as we have seen before, nil return cannot be filed if there are any outward supplies or inward supplies covered under RCM, or if you have any ITC to take. 3B you have to definitely file. You cannot file a nil return. Okay, so these are the things. Next, this fixed sum method, self-assessment method also I have discussed. So in fixed self-assessment method, you only will tell how much to pay, all that based upon your sales and the ITC, all that. And in fixed sum method, as I told you, if your preceding quarter is the tax period, 35% you will pay. And if you are on quarterly basis earlier, monthly basis is the preceding tax period, now 100% of the tax you have to pay. And here one interesting thing is, sir, you need not pay any tax if in first month and second month there is adequate cash balance already available. Adequate cash balance is already available, or credit balance is available in that for that particular month tax liability, or there is nil tax liability. Cash balance or credit ledger balance is sufficiently available to discharge the liability, or there is no tax liability. Now obviously why you have to pay taxes in first and second month, that is what they are saying here. Okay, we have discussed that also. Next, Yes, monthly tax payment through fixed sum method will not be available to you if the registered person who have not furnished the return in complete tax period preceding such month. Sir, now only I have registered, sir. I am going under QRMP scheme. Can I pay through FSM method? Fixed sum method, how you can pay? Because just now you started paying taxes. I don't have any past payment history for you. How do I track it and how do I just allow you to pay? So fixed sum method is not available for you because just now you have registered, just now you started paying taxes. Last tax period itself is not there for you. How do you pay in fixed sum method? Okay, that is the next one. Next, any amount left in e-cash ledger after filling the quarters 3b may be either claimed as refund or may be used for any other purpose in the subsequent quarters. See, the interesting point here is first month and second month you are paying through fixed sum method or you are paying through self-assessment method, right? The tax amount that sorry, that tax amount will be reflected in your e-cash ledger, and that amount whatever is reflected in e-cash ledger in the 2 months, you cannot use it for any purpose other than paying tax. Only after filing that quarter GSTR 3B you can use that cash balance and you can file GSTR 3B. After paying that, anything is left over in that cash ledger, then you can use it for any purpose. You can even claim it as refund. Okay, that is what they are trying to tell. So refund claim is permitted only after 3B is furnished for that particular quarter. Okay. Further, this deposit cannot be used, I told you, for any other purpose till the return is not filed. Okay, that is what the point. So if you are going through fixed sum method for the first 2 months, whatever the tax has been short paid, you need not pay any interest. Why? Because system has asked coming to interest payment, interest on delayed payment. See, simple fixed sum method system is only telling me to pay this much amount. So now if there is any shortfall, I need not pay any interest for the first 2 months. Okay. Next, suppose tax is not paid within the due date. Now for first 2 months interest will be paid, of course, on the amount from due date of PMT06 till the due date. See, there is any shortfall, you need not pay any interest. But if there is delay in payment of tax, PMT06, 25th is the due date, 28th you are paying, 3 days interest will come. And same way 3B filing also interest will come. Section 50 we have discussed in payment of tax chapter, interest calculation, very interesting discussion we have made, that is also there in another video, you can just check. Next, self-assessment method. Coming to self-assessment method, straight away section 50 interest is applicable for you. Here interest is not relevant at your level, they will not ask you, don't worry, ignore it. I have given examples here, IC example, study material example itself I have just lifted, you can just go through them. Okay, right. Next, rule 88C and 88D. So now the next one, rule 88C. See, rule 88C, and recently they have introduced a new rule also, rule 88D. Okay, what is this all about? Now simple, in rule 88C, understand, while filing your GSTR 1, you have shown all your outward supplies 100 lakhs. Okay, honestly you have declared, because no need to pay tax in GSTR 1. But while filing GSTR 3B, you have to pay tax, but you don't have money. So you made it, instead of 100 lakhs, you filed 10 lakhs only. Or imagine genuinely there was a mistake, typing mistake, instead of filing 100 lakhs or typing 100 lakhs, you have typed it as just 10 lakhs. Okay, in such case, there is a difference between the data what you have given in your GSTR 1 or IFF and the data what you have given in your GSTR 3B. So when the outward supplies, or I can simply say where the sales in GSTR 1 are greater than 3B, that means your output tax liability in 1 is more but 3B is less, that means you have paid less tax. Are you understanding that point? Then the system will trigger a notice to you showing the difference, intimating the difference to you. So what you have to do now, you have to pay the difference amount along with the interest. Or sir, there was a genuinely reason, sir, the difference is genuine, there is no liability, nothing, then you please give those reasons within 7 days and close it. Either you accept the liability, yes sir, I made a mistake, I am liable to pay along with interest and close the matter within 7 days. Or if there is a genuine reason for the difference, no need of paying any taxes, explain the reasons and close the matter. So give the explanation within 7 days. You should do any of these things, the registered person should do any of these things, either pay the amount with interest or you should give the reasons. Okay, but if at all you have failed to pay, or you have not given any explanation or reason, or you have given an explanation or reason which is not found satisfactory or acceptable by the proper officer, in such cases, then as I have discussed, they will start recovery proceedings under section 73 or 74 that you will be seeing in your CA final. They will start the recovery proceedings under section 73 or 74, and you will not be allowed to file your subsequent GSTR1 or IFF as we have discussed earlier. Okay, rule 88C or 88D you are not following. 88C, hope you have understood. GSTR1 and 3B, there is difference. One, you have given more liability. In 3B, you have shown less liability and paid less. So either you pay the difference or you give the explanations. If you are not doing all these things, then the amount will be recoverable under section 73 and 74. Same story here in 88D. The only difference is, the only change is ITC. The ITC, whatever reflected in your GSTR 2B, is less than what you have claimed in 3B. That means in your 2B, in your GSTR 2B, it is showing just 10,000. Okay, but in 3B, what you are doing, you are claiming 20,000. You have claimed extra. Why? What is the reason? They will give you a notice. Then what you should do, either you pay the difference amount along with the interest within 7 days, or you explain the reason. Sir, there are genuine reasons, sir. Last month I have taken less amount, this month I am taking together everything. So there are genuine reasons. Explain the reasons within 7 days. So either pay the excess ITC amount, pay the excess ITC amount along with the interest, or explain the reasons. So registered person shall do that. If you are failing to do that, that is you are not paying the amount, or you are failing to give at least explanation or reasons, or you have given the explanation or reason which are not found acceptable by the officer, then they will recover the amount as per section 73 or 74. You will not be allowed to file a subsequent GSTR1 or IFF. That is what the story. Clear? So that is all about rule 88C and 88D. And here I have given the due dates for paying the taxes, and you know, due date for paying taxes and filing the returns are linked with each other. So a person who is not opting QRMP scheme, you know, GSTR 3B and the due date are same. The GSTR 3B filing due date is nothing but the due date to pay the tax, 20th of the succeeding month. Who is opting QRMP scheme? First 2 months, you know, GST PMT 06 25th, and last month, that is after the quarter is over, 22nd or 24th GSTR 3B as the case may be. And composition taxpayer GST CMP 08 18th of the next month. You know, see, composition taxpayer quarterly has to pay the tax. Yearly you will file GSTR 4. Quarterly, when he is paying the tax, he has to file a document called GST CMP 08. The due date of GST CMP 08 itself is a due date to pay tax also. So quarterly, when he will pay tax, after the quarter is over, the next succeeding month 18th he will be liable to pay the tax. That means April to June, 18th July is the due date. Clear? That is how it is. Next, NRTP, I told you, he has to file GSTR 5. GSTR 5 due date is the 20th of the next month. That itself will be the due date for paying the taxes also by NRTP, non-resident taxable person. Here one interesting thing is, for him, 20th of the next month or 7 days from the expiry of the validity of registration. You know, NRTP, the validity of registration is not continuous like normal taxpayers. So for non-resident taxable person, when the registration is getting expired, from that expiry date 7 days or 20th of the next month, you compare these two dates, whichever is earlier, that is the due date to pay tax. Okay. And for the tax deductor, that is under section 51, you are registered no GSTR 7. I told you GSTR 7 due date also 10th of the next month. Payment of tax also has to be done by 10th of the next month. Okay, that is what the point. TCS also, there is GSTR 8 and 10th of the next month, same thing. Okay, these are the due dates which are linked to the return due date also. So return due date and tax payment due dates are same. As I already told you, GSTR 3B, etc., etc., these returns, if you have made any mistakes, you can rectify in the next subsequent return. As I already told you, only rectification, no revision is allowed. And for that, suppose tomorrow if the department is coming for scrutiny, audit, inspection, or some enforcement activities, there they have identified some mistake, Vishnu, you have did mistake here, then I should not say, okay sir, I will rectify in the next month return. If they catch you, then there is no rectification. Okay, they will recover it along with the penalties. The point is, only when you identify that on your own, then only that rectification. And the time limit is nothing but, just like we have already discussed, section 16 subsection 4, time limit only 30th November of the succeeding financial year or actual date of filing, annual return of the relevant financial year, whichever is earlier. Okay, so that is what the concept we have seen, the due dates, all that. Here I have given a table clearly for all the due dates. GSTR 1, 3B, 4. 4 due date only, not discussed till now. So for GSTR 4 due date is 30th April of the succeeding financial year. So for 23-24 financial year, what is the due date to file GSTR 4? 30th April 2024. That way. CMP 08 we have discussed, GSTR 5 we have discussed, 7 and 8 we have discussed, GSTR 9 annual return. You know, GSTR 9 annual return, I told you, who has to file 1 and 3B we have seen. GSTR 9 also should be filed by the same people. Okay, what is the due date now? 31st December of the next financial year. That means for 23-24 financial year, the due date to file annual return is 31st December 2024. Okay, that will be the due date to file the annual return. GSTR 9 and GSTR 9A for composition taxpayer. That means composition taxpayer should file GSTR 4 also, GSTR 9A also. Okay, but these people not required to file GSTR 9. No GSTR 9. Okay, and if your aggregate turnover is exceeding 5 crores, okay, along with GSTR 9 you should also file a return called GSTR 9C, that is called reconciliation statement, which has to be self-certified by the taxpayer itself. For that also the due date will be 31st December of the next financial year. Okay, so if your aggregate turnover is exceeding 5 crores, then only you should file 9 and 9C both. So we have seen all that. Next, GSTR 10 final return. What is the due date to file the final return? Final return will come into picture only when your registration has been surrendered or cancelled. That you should do within 3 months from the date of cancellation or date of order of cancellation, whichever is later. Very important here, whichever is later. Last September 2024 attempt also they have asked an MCQ question on this, 2 mark. So within 3 months from the date of cancellation or date of order of cancellation, whichever is later. You know, order of cancellation I can give today, but I can cancel it with a retrospective effect. So whichever is later from that 3 months, within 3 months you should file GSTR in the final return. Okay, next, GSTR 11, the refund claim. So these refund claim persons who holds UIN, you know, UIN we are holding just to apply for refund of the taxes paid on inward supplies, notified purchases. Okay, that one, so they can file that in form GSTR 11. Okay, so that is what all about this various forms and due dates. Okay, and next one is the first return, the next return. Hope you are comfortable till now. So as you know, when we are discussing this registration concept and the tax invoice topic, we have discussed about revised tax invoices. So when there is a time gap between the date of applying for registration and the date of grant of registration certificate, if you apply for registration within 30 days, you are effectively set to be registered from the date of becoming liable for registration. So first return is written where you can file that within 1 month. You can give the revised tax invoices and you can file that return, giving all the revised tax invoices in the first return, and you can file that. So that is what all about first return. So in the first return you can give all the revised tax invoice details also. Okay, if there is default in furnishing the return, there are late fees. There is no concept involved here to discuss. So if there is delay in filing GSTR 1 and 3B, see, the late fees has been streamlined, and please make sure you are going through this late fees. Don't follow any other limits which you see anywhere else. So these are the late fees limits per day basis we are calculating. And GSTR 1 and 3B, the late fees is based upon aggregate turnover. If the aggregate turnover is 0 to 1.5 crores, then the late fees is per day 50 rupees, that is 25 rupees CGST, 25 rupees SGST, or 2000 rupees, that is 1000 CGST, 1000 SGST, whichever is less. If the aggregate turnover is from 1.5 crores to 5 crores, it is 50 rupees per day. Every case 50 rupees per day only, but the maximum late fees is changing based upon the turnover. Here 2000, here 5000, here 10,000. In all the cases, half CGST, half SGST. But if it is a nil return, please understand, if it is a nil return only 20 rupees per day. Remaining all cases 50 rupees per day, GST 1 and 3B. But if it is a nil return, only 20 rupees per day, 10 rupees CGST, 10 rupees SGST, and maximum late fees is 500 rupees, whichever is less. So 250 plus 250. So this maximum late fees, everything has been streamlined. Please be careful with that. And next, with respect to GSTR 4 also, you know, nil return means, yes, the same story, 20 rupees or 500 rupees, 10 10, 250 250. And if it is other than nil return, 50 rupees per day or 2000 rupees, whichever is less. 50 rupees per day means 25 plus 25, 2000 means 1000 plus 1000, all that. If it is annual return, you know, annual return, it is GSTR 9 and 9A. Okay, so further, this is the late fees. Here the maximum late fees is not fixed, actually it is based upon the turnover. Please be very careful here, please be very careful here. One small point here, there should be some small mistake, I guess. Here, one second, there's a small correction here, actually a copy paste error. Here it is not 0.04, it is 0.5, 0.5%. So here it is 0.25% plus 0.25%. Okay, if the aggregate turnover is exceeding 20 crores, a copy paste error, excuse me, in the printed textbook, that mistake will be rectified, don't worry. So that is what all about the late fees, all that you can just check. And maximum late fee for GST 7 also they have given 50 rupees per day, 2000 rupees maximum, all that. And GST practitioner, a simple concept, who can become a GST practitioner, all that stuff you can just go through that, nothing great concept involved to discuss. Okay, clearly given, but I'm not saying it is not important. Please go through that, there is no concept involved to discuss there. So with this we are done with chapter, the last chapter in your GST syllabus, returns. So the next one is TCS, tax collected at source, section 52, and I have already told you in TDS video, section 52, because the section number is ending with 2, the TCS rate will be 1. So TCS rate, if it is IGST 1%, if it is CGST and SGST, then it is 0.5 and 0.5 TCS rates. Now when TCS is applicable, actually the TCS and TDS are an obligations. TDS obligation we have seen for government bodies, government societies, all that stuff. Same way TCS is an obligation for e-commerce operator, electronic commerce operator. When through electronic commerce operator any person is making the supply, and that person who is making the supply himself is liable to pay GST, then e-commerce operator is having a small obligation to collect tax from that particular supplier. So I repeat, any person making a supply through e-commerce operator and that supplier is liable to pay GST. Some cases, e-commerce operator is liable to pay GST, then TCS is not applicable. Only when the supplier who is supplying through that e-commerce operator is liable to pay GST, then e-commerce operator generally, they will collect the money from the customer and will give it to the supplier. For example, simple. See, I am selling watches through Amazon and I am registered under GST. Remember, TDS, TCS provisions will come only when the supplier is registered under GST, otherwise it will not come into picture. Okay, and that will come only on taxable supplies, not on exempt supplies. These are the common points you remember for TDS and TCS. Now, so when Vishnu, for example, is registered under GST in Tamil Nadu, he is selling watches. He is selling watches through an e-commerce operator called Amazon. Now, what is the obligation of Amazon? Now, see, when Vishnu makes supplies through Amazon to the customers will generally make payment to Amazon, correct? And Amazon will make payment to Vishnu. This is what happens normally. In this type of cases, Amazon, that is e-commerce operator, has an obligation of collecting tax at source. That means any person making taxable supplies through e-commerce operator where the supplier is liable to pay GST, e-commerce operator while making payment, the settlement to the supplier. For example, I have made for the month of June 5 lakh worth taxable sales, and TCS will come only on taxable supplies, not on exempt supplies. So I have made sales of 5 lakhs and TCS will come into picture even if it is a 1 rupee sale. It is not like TDS where you should have a contract value greater than 2,50,000. No, it is not like that here. So here TCS will come into picture even if you make 1 rupee sale. So the interesting thing is that TCS will come into picture on the net taxable supplies made during that month. That means in the month of June I have made supplies of 5 lakhs and some customers have made some returns. So all that sales returns and all, if you see 40,000 is there. That means what is the net value of taxable supplies here? The net value of taxable supplies here is 4,60,000. 4,60,000. Now customers have paid 5 lakhs to Amazon and they have returned 40,000 rupees. So Amazon is having 4,60,000 from in their hand on behalf of me. Now when Amazon is making that payment, that is 4,60,000 to me. When the Amazon is going to pay that 4,60,000, when Amazon is going to settle that 4,60,000 to me, Amazon has to collect 1% TCS. 1% is the TCS rate. So if the transactions are intrastate transactions, CGST plus SGST, half percent will come into picture. If the transactions are interstate transactions, 1% IGST will come into picture. Okay, so what Amazon will do now, out of that 4,60,000, what the Amazon has to settle to me, Amazon will collect 4,600, will collect 4,600 from that, and Amazon will pay only balance 4,55,400 to me. And of course, see, understand, Amazon has to pay me 4,60,000 plus GST on 4,60,000. Then as a supplier will go and pay that GST whatever is there on the 4,60,000. See, GST on the vouchers is 4,60,000 Amazon should give me. So Amazon should give me, clearly understand, 4,60,000 plus GST, but I should give them 1% tax. So they will deduct that 4,600. So balance 4,55,400 Amazon should give me, and also Amazon should pay me GST on that 4,60,000. This total amount they will give to me. That means, see, for example, if GST rate is 12% on watches, imagine, just imagine, 4,55,400 into 12%, that is 54,648. So Amazon will give me now total 4,55,400 plus that 54,648 Amazon will pay me. So what is my duty now? My duty is to file my GSTR 1 and file my GSTR 3B and pay this to GST department. Okay, and for the customers who have purchased the watches from me, for them it will be reflected in GSTR 2B, simple. So for me the obligations are simple. I should file my GSTR 1, I should file my GSTR 3B, all that stuff, and my customer will get in GSTR 2B. All these things are common. The thing what we are discussing here is, we are talking about the e-commerce operator here. So Amazon responsibility is what? Amazon's responsibility is to collect that 1% tax, 4,600 here, and pay that to the GST department. Just like in TDS, here also by 10th of the next month, these people will file a return called GSTR 8. The e-commerce operator is supposed to file a return called GSTR 8 and will pay the TCS amount, whatever has been. So Amazon 4,600, whatever they have collected from me, they will pay that to GST department. Amazon will file GSTR 8 and will pay that 4,600 to the GST department. That 4,600 will come and reflect in the e-cash ledger of Vishnu. That means, just like in TDS, TCS also will be paid by the e-commerce operator, and that will be reflected in the supplier's e-cash ledger. That is what TCS all about. So if you see some extra points here, so TCS, we have discussed everything. For whom this is applicable, as I already told you, for e-commerce operator this is applicable only when the registered person is supplying taxable supplies. Okay, on that it is applicable. And the interesting thing is, e-commerce operator is acting as an agent, then TCS provisions will not come into picture. If e-commerce operator is acting as an agent of the supplier, then this is not applicable. And whatever the supplies covered under section 9 subsection 5, 9 subsection 5, the liability to pay GST is under e-commerce operator, so there is no need of TCS provisions. So I repeat, if e-commerce operator is liable to pay GST to the government, generally 9 subsection 5 scenarios, then TCS will not come. TCS will come only when supplier has the liability to pay GST to the department. Rate of deduction we have discussed, 1%. So 1% of the net value of taxable supplies. Net value of taxable supplies, that means what? Take only taxable supplies and whatever the returns in that particular month. So total sales minus sales returns in that month. The net value of taxable supplies. I repeat, for exam supplies, TDS, TCS provisions will not come into picture. GST only will not come there. Then why I want to charge TDS, TCS there? So it will not be applicable. So I have given the meaning of net value of taxable supplies here, and of course registration, you should take registration under GST. So under section 52, if you are an e-commerce operator who is liable to collect tax at source, obviously without any relaxations, you are definitely supposed to take GST registration under section 24, so to comply with the provisions of section 52. So that is what TCS all about. And the interesting point is, when TCS provisions are not applicable. When TCS provisions are not applicable. When TCS provisions are not applicable, as I told you, exam supplies, no TCS. Supplies, here the point is repeated, just ignore it. Supplies made through my own website. I am selling my goods through my own website. Then there is no e-commerce operator in middle. I am the supplier and there are some other customers. In middle is there e-commerce operator, some in the third person? No. Then TCS will not. Who will collect TCS? I should collect TCS and I should pay in my own name. So no, it is not that way. Next, consideration collected directly by supplier. As I told you, consideration should be collected by e-commerce operator, then only TCS will come into picture. If sale is made through e-commerce operator, but consideration is directly gone to supplier, no, then also TCS provisions will not come into picture. Supplies covered under 9 subsection 5. You know, in that case, e-commerce operator is liable to pay GST. So TCS will not come into picture. Next, supplies covered under RCM also, TCS will not come into picture because the recipient will straight away go and pay GST there. Next, imported goods and imported services also, TDS and TCS provisions will not be applicable. So these are the cases where TCS will not be deducted. Okay. The other key points we have already discussed regarding 10th of the next month we have to file GSTR 8, all that stuff, and remaining small points, any rectifications etc., you can just rectify them. And the deadline, suppose if you have done any mistakes while filing this GSTR 8, any rectifications, yes, you can do. Obviously you might have done some mistakes, so those mistakes you can rectify by 30th November of the succeeding financial year or actual date of filing annual return of the relevant financial year. Here annual return, it is not annual return, it is annual statement GSTR 9B, whichever is earlier. Just like the rectification of GSTR 1 and GSTR 3B mistakes, the same deadline here also, right? And you know, everywhere, even section 16 subsection 4 also, the same time limit is there. This same time limit, GSTR 8, any rectifications, any mistakes you have done, if you want to rectify them, that you can rectify within this time limit. Clear? But if there is some audit is happening, some scrutiny is happening, some inspection is happening, and enforcement proceedings are going on, and department has identified, then you cannot say, sir, I have time limit to rectify the mistake, I will rectify. Then they will deal in their own way, you need not rectify. Okay, that is what the concept. So with this we are done with the TCS concept. So with this conceptual clarity, you can proceed with the problems. Hello students, this is your Mr. GST CA Vishnu Vardhan. So in this video we are going to quickly revise the concept TDS and TCS. Before going to the concept, first of all, everybody will have a doubt regarding the section number and the TDS TCS rates here. So just to remember that, I'll give you a small technique here. TDS section 51, TCS section 52. So because the section number here is ending with 1, remember the TDS rate is 2%. And here the section number is ending with 2. Remember the percent is 1, not 3, 1. Okay, so TDS section 51 percentage is 2, TCS section 52 percentage is 1. That means CGST SGST 1% plus 1% here. Here CGST and SGST 0.5 plus 0.5%. That is the section number and the rates. So remember, TDS rate is section 51, so rate is 2%. TCS section 52, rate is 1%, right? So let us quickly go into when TDS TCS will come into picture. Just like your income tax, here also in GST we have a concept of TDS and TCS, and how they actually operate there, here also almost it is going to work in the same manner. So let us understand that. First, before going to TDS, I'll just tell you how it will be operated, and then I'll discuss about that. First, let us take an example. See, TDS, how it will be operated. Now, first of all, TDS will come into picture when? TDS will come into picture, listen carefully, only when the contract value is greater than 2,50,000. So, if the contract value, I am not talking about the invoice value, the payment, etc., etc. I am talking about the contract value. When we are entering into contract, sir, with whom we are entering into contract, that is important, sir. We are entering into contract with a government department or a government establishment, or with a local authority, or with a governmental agency, or with any authority or board which is set up by government, parliament, state government, all that stuff. And with 51% or more is with the government. So simple, in simple terms, we can say it is government authorities or boards. Sir, these people, or we are entering into contract with government societies, or we are entering into contract with public sector undertaking. I repeat, when TDS will come into picture, you are entering into contract and the contract value is greater than 2,50,000. With whom we are entering into the contract? Government departments or establishments, local authorities or governmental agencies, or government authorities on boards, government societies or public sector undertaking. With these people, if you enter into contract, I repeat, contract value greater than 2,50,000, not the payment. So then TDS will come into picture, and these people, understand, these people are supposed to deduct TDS while they are making payment to you. For example, I am a contractor who got a contract to construct a road with a local authority or some government. Okay, so now when I got a contract to construct a road, the contract price is, let us assume the contract value is 10 lakhs. is greater than 2,50,000, it is exceeding 2,50,000. Now because the contract value is exceeding 2,50,000, please understand, every time when the local authority is making payment to me, contract value is 10 lakhs, but they might be making a payment to me, like for example, I started the work, they have given a check to me for 1 lakh rupees, 50,000, 40,000, whatever it is. Whenever they are making the payment, now because the contract value has exceeded 2,50,000, for each payment they have to deduct TDS, whether it is 10 rupees or 10 lakh rupees or 1 lakh rupee, whatever. Contract value exceeding 2,50,000, right away TDS provisions will come into picture. So now when I am constructing the road, the local authority, for example, see, contract value is 10 lakh rupees plus GST 18%, imagine. Then sir, now local authority, I gave an invoice to the local authority, sir, I have did some work, sir, give me some payment. So I'm asking them a payment of 1 lakh plus GST. I gave an invoice to them 1 lakh plus GST, because you know invoice value can be whatever it is, but it should be the contract value greater than 2,50,000. Contract value is greater than 2,50,000. So while asking for the 1 lakh payment, what the local authority will do is, I am asking 1 lakh plus GST 18,000. So they have to deduct 2% TDS. They have to deduct 2% TDS, assuming CGST, SGST scenario. This is if it is interstate supply, CGST, SGST. If it is interstate supply, GST will be the thing. So you know TDS rate is 2%. Out of this 1 lakh, they will deduct 2%. See, TDS should be deducted on the taxable value, not on the invoice value. That means including GST, you should not deduct TDS. After excluding GST only, the amount whatever is there on that we have to deduct TDS. Okay, so now local authority while making the payment to me, so the local authority while making payment to me, they will deduct 2% TDS. So they will pay to me, the contractor, 98,000. They will deduct CGST 1%, SGST 1%, 1,000 rupees, 1,000 rupees. Now this deducted amount the local authority has to pay to the GST department by filing a return called GSTR 7 every month on or before 10th of that next month, and they will pay me that 98,000, and they will also pay me the 18% GST is there. No, this 18% GST they will pay to me. So they will pay to the contractor 98,000 after deducting the TDS plus 18,000. Totally they will pay to the contractor 1,16,000. So as a contractor, what I will do, I will file my GSTR1 and I will file my GSTR3B. I will pay this 18,000 to the department. My responsibility is clear. Here coming to TDS, that is coming to see the local authority's responsibility. Local authority has deducted 2% TDS here, that 1,000, 1,000 CGST, SGST. The local authority will file a return called GSTR 7 every month before 10th of the next month, and whatever the 2,000 deducted now from my payment, that amount they will be depositing with GST department, and that 2,000 will be reflected in the e-cash ledger of the contractor. So that is how TDS will work. Clear? So just like income tax TDS only, this is how TDS will work. And now coming to the point, who shall deduct TDS? We have understood TDS will be deducted by government department, government establishments, local authority, government agencies, government authorities or government bodies, government societies, and public sector undertakings. These people, if they are supposed to make payment, they have to follow TDS provisions, provided the contract value with them what you have entered is greater than 2,50,000. Clear? There are some other key points here in that we will discuss and finish. That's all. TDS will be over. You can just straight away proceed with the problems, right? Now one interesting thing is, if the transaction itself is happening between a government department and another government department, or one local authority to another governmental agencies, that means we have seen section 51 is applicable for these 6 people, correct? Among these 6 people, if anything is happening, TDS provisions will not come. That is what the next one, persons not liable to deduct TDS. Sir, between people covered under section 51 itself, any transaction is happening, contract value is greater than 2,50,000, still TDS provisions are not applicable in that case, right? Next, obviously we have discussed this. When TDS will be applicable, the taxable supply under single contract, if it is exceeding 2,50,000, exceeding, that means it should be greater than 2,50,000, not greater than or equal to. Please remember that it is greater than 2,50,000, not greater than. That means even if it is equal to 2,50,000, TDS provisions are not applicable, right? And TDS rate we have discussed, sir, it is 1% CGST, 1% SGST, guys. So here just make a correction, it is 2%, that is 1% plus 1% will be the TDS rate. Clear? That is one thing. Next, when TDS need not be deducted, this is very important point. When TDS need not be deducted, see, understand, remember there are three people here. One is location of the supplier, place of supply, where recipient is registered. Sir, location of supplier, place of supply is in one particular state and recipient is registered in a different state. Recipient is registered in a different state. Then TDS provisions will not come into picture. Remember, location of supplier, place of supply, recipient registered. These three locations are in the same state or same union territory, no problem, TDS will come. If all the three are in different states or different union territories also, no problem, TDS will come. But location of supplier and place of supply is in one state and the recipient is located in another state, registration of recipient is another state, then TDS provisions will not come because of the technical reasons. Why? Because see, for example here, look at this second case. Suppose, imagine location of supplier is in Karnataka, place of supply is also falling in Karnataka. Now you tell me, when location of the supplier and place of supply is falling in Karnataka, you call it as what? You call it as intrastate supply. And what that person, the supplier, will charge in the invoice? The supplier will charge CGST plus Karnataka state GST. If you are understanding, supplier will see, supplier when he is issuing the invoice to you, he will see location of supplier, place of supply, both are in Karnataka. So according to supplier, it is intrastate supply. In the invoice, what he will charge in the invoice? He will charge CGST plus Karnataka GST. So when he is charging CGST plus Karnataka GST, what will happen? Recipient who has to make the payment, that is maybe the government authority, government agencies, whatever it is, recipient has to deduct TDS. Recipient cannot deduct TDS which is not given in the invoice. That means in the invoice, if it is CGST plus SGST, recipient should deduct CGST, SGST only. In the invoice, if it is IGST, recipient should deduct IGST only. Now tell me, sir, when the recipient is located, for example, located in Tamil Nadu, if the recipient is located in Tamil Nadu, the recipient should deduct TDS, CGST and Karnataka GST and should deposit that to the Karnataka state government, and it should be reflected in the supplier's cash ledger. When the recipient is in Tamil Nadu, registered in Tamil Nadu, how can he make payment to Karnataka state government? So technically speaking, this cannot be done. I am just telling you the logic behind the provision. Please understand, when recipient is in Tamil Nadu, supplier is in Karnataka, and supplier is charging what? CGST plus Karnataka GST. If supplier has charged IGST in the invoice, happily I would have deducted IGST and I would have deposited. But recipient is supposed to, see here, like is getting CGST plus Karnataka GST, recipient is in Tamil Nadu. Recipient cannot take that TDS, he cannot deduct TDS and give to Karnataka state government because recipient is from Tamil Nadu. That is the reason they are saying here, if recipient is registered in separate state, location of supplier and place of supply, these two things are falling in one particular state, TDS provisions will not come into picture. Am I clear? So that is what the point. So that is what I have simplified in the table here using this table. Yes, you can just go through that, right? So what is the value of supply, sir? How to calculate the value? Value is nothing but whatever has been amount indicated in the invoice. As I told you already, please exclude taxes and deduct TDS. TDS should be deducted only on the value given in the invoice, excluding taxes, right? Okay, so next, and I repeat, that is only on taxable values, not on exempt values. So TDS will not apply on exempt supplies. TDS will not come into picture on exempt supplies. Let me just write down that point. Please understand, write down one key point anywhere where you are comfortable with. TDS not applicable for exempt supplies, and also TDS is not applicable for unregistered person. Not applicable if supplier is unregistered. If supplier is unregistered also, TDS will not come into picture, right? So that is what the point. Okay, as we have discussed, due date for depositing the tax is 10th of the next month, and once recipient deducts the TDS and make payment to the GST department by filing GSTR 7, so he will be giving a TDS certificate called GSTR 7A, and that will have GST certificate number, the TDS certificate number, the GSTN of the deductor, that is the recipient, name of the deductor, GSTN of the deductee, that means that contractor in that example, his legal name, all that stuff. So you can just go through that. And as I already told you, government is deducting the TDS and paying to GST department. That will be reflected in the e-cash ledger of the deductee, that is the contractor in the example, right? So remaining things, yes, you can just manage. So that is what all about TDS concept. And registration under section 51, yes, when TDS provisions are applicable, that is for these people for whom TDS provisions are applicable, these people are liable to get registered under GST because they are supposed to deduct tax from the payments and has to pay it to the GST department. So for these people, taking GST registration is mandatory, right? So that is what all about TDS. Keeping all these key points in mind, you can just straight away proceed with the problems. You can just refer ICA study material or any other question bank, whatever it is. So just go with the problems. So students, if you have found this video informative, please do like the video and comment your feedback, and please don't forget to share the video with your friends because sharing is caring. And of course, subscribe to my YouTube channel. See you all in another video. This is your Mr. GST signing off. Jai Hind.